can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
Kind of like it when you guys.
Oh, you know what? You don't kind of like anything. Let's
Kinda
be honest here. You're not happy unless you're unhappy, Sosnov. I mean, this is just how it is. Look, you don't care about anything. I'm going to show you how my weekend started, okay, Sosnov? This is how my weekend started. Do you like that?
What are we doing? What are we
Well, it's
doing?
my car. A tree fell on my car. Can you see it on yours?
No, I saw it on Twitter.
You don't care about anything.
I saw it on Twitter. I saw it on the text message that you sent me, and I have to tell you,
Little part of you was happy?
I mean,
How could you be happy after somebody's misfortune?
I wasn't happy that you.
Unbelievable.
I wasn't happy that the tree fell on your car.
You were just happy it fell near my house? What? You were just happy there was an act of God?
I didn't know it was your car. When I saw the picture, I thought it was like funny, and then I realized it was your car, and I was like, "Oh man," I was really upset.
That's what makes it good that it was my that you.
Is that your wife's car? No, it's your car.
My car.
Oh, I
Yeah.
thought you drove the truck though.
I have that too. That too. Yeah.
How many
My wife
cars
drives a
do you-
Range Rover. I'm fancy.
Like, how many cars do you have? You have 4 cars?
Yeah. Well, my little guy's getting ready to drive now. I mean, he drives everywhere with me. He doesn't drive too far with my wife. I'm not gonna.
Sure.
Yeah.
Sure.
Yeah. No, he's ready to.
So what happened? Was it like lightning,
getting
or
old.
it was just like a?
It's just like Sosnov, you don't.
Just like
you
a
don't
dead
ask.
branch.
Yeah.
Just like-
When he gets up and makes a noise, you don't ask why. It's just an age.
When I fall on a car, yeah,
an age thing.
So wait, did you hear it, or did it happen like at night, and then when you went out to
My
like?
cameras caught it at around 5 o'clock in the morning.
Okay.
In the morning. Yeah. I don't know. Just old. It's coming down on Saturday if you want to say goodbye to it.
Oh, the tree is.
I want to say goodbye to the tree.
Yeah. It's been there forever. I mean, I live in a subdivision that
I'll
used
pass.
to be a tree farm. What's that?
I'll pass on the tree, but I mean, it was,
You know, those tree services can be expensive. Like my parents have.
$12.
We have this beautiful conifer tree, like in their front yard,
Mm-hmm.
but it just fell over. Luckily, it didn't hit the house, but it fell into the cul-de-sac.
Yeah.
And to like get it removed and the stump grinding in it, because it was like, I don't know, like a 20-foot tall
Mm-hmm.
pine tree, like $2,500.
No, mine's $1,200 to get it taken away.
I could have done it for you,
What's that? You can do it?
and I could have done it.
I was hoping you were coming over with your chainsaw to help me. I do have to say, Vasquez Tree Service, thank you very much for coming out on.
Do they do the stump grinding too? Because that's like,
Yeah, they will this
They will?
weekend, but
Okay.
they came out within an hour, which was nice.
that is nice.
Hey, I wouldn't be surprised if they were the ones that did.
That's how you think.
Saturday.
Randolph, you think the Chicago River? Have you seen this picture too? Did you see it? Did I send you this one?
No.
Oh my! Oh,
So we're just starting out all about you? Like,
all about
I
me.
did not
all
get
about
this
me. I had a
memo.
great-
Why did I
yeah,
come in
agree with
today?
you. Wait a
Why
minute.
am I here?
Look at this SOB. Look at the size of that. That comes out of the Chicago River, Sosnoff.
What is that?
Sosnoff, you don't know what that is?
Is that a bass?
It's a carp.
A bass. That's what you've been your entire life. A carp. You remember them back on the
Oh,
floor?
where'd you get that?
Vinny caught it.
Where?
In the Chicago River, there's I don't know, that seafood place. What is that? Like
Oh, McCormick and Schmick's?
McCormick and Schmidt,
Yeah.
right there.
What was he doing down?
He went to go fishing. He told me, he goes, Dad, he saw them on the internet, or whatever. He goes, I'm gonna go get me a monster. And he got about a 20-pound carp.
He threw it back.
Yeah, well, he was gonna bring it over to McCormick and Schmidt because they had Bronzino. So he was gonna hope that maybe he could.
I know, I'm very confused by this. So does he, like, take the train with his fishing rod?
Yeah, him
And his
a couple of
friends?
his friends. Yeah.
But he's allowed back in the city after last time when he blatantly lied to his mother? Like, if that were me, I'd be on punishment. Like, I'd still not be
He's
able...
on probation. He's allowed to do it.
Wow.
Oh, they come down, and where was this? They're on.
Train station, right? That's where the train station is, right there, not too far from the.
That's not where the train station is, but it's...
close enough.
Okay.
Fishing right in the river there.
Right in the river, right where they turn it green.
Yeah.
Yeah, right where they turn it green is where he.
I don't think you could eat those fish.
No.
No, actually, Chicago's going to host its first open water swim in the Chicago River, like this fall. So
What?
I wouldn't do that.
Just look, dude. Hold on.
I believe you. I'm just saying.
Would you have eaten that? Jajun?
September
called me.
21st, 2025. It's a 2-mile swim and a 1-mile swim. If you
In the
wanna sign
Chicago
up,
River.
you could go to chicagoriverswim.org.
I like it.
So, and the
Jajun
money
called
goes
me
to ALS. The money goes to ALS research. So,
If you portion it properly, you can feed a family for a week with that, he said.
but he threw it back, right? He didn't keep it.
He told me.
Do you eat carp?
No, you don't eat carp. No, he threw it back, yes. You really should kill them, to be honest with you, but not a big monster like that.
I can't keep track of you who desperately needs Adderall and like you who's on like a 10-second audio processing delay. Like it's just, it's a lot this morning because I am not caffeinated.
How come?
Would you swim in the Chicago River?
No.
Why? They opened up the Seine in Paris, and so that's been wonderful. People have been swimming on their lunch breaks in the Seine.
Hey, listen, they can open up any river.
They did for the Olympics because that was supposed to be, but then they said that they fixed it again. So
I don't swim in Lake Michigan. I'm not swimming in the river.
why not?
I've seen like bodies in that river.
You've not seen a body
Obviously,
in the
it's healthy.
Chicago
Look at the
River.
fish that are living there.
Obviously. I mean, no, I'm not swimming in Chicago.
Swimming's great cardiovascular exercise.
I don't care what it is. I'm swimming in the Chicago River. If I'm jumping in the Chicago River, I'm jumping off a boat because it's on fire.
You won't be on a
One
boat.
can only hope. One can only hope.
I am not. No.
Things went bad on More Theta.
Horribly wrong.
Oh no. Oh no. For those of you who are new, Google boat More MOAR Theta. Tom knows.
It's a good name.
It is. It's a great name. I'm not mad at it. I'm just mad that I don't have a boat and that I don't get invited on boats. But I think naming your boat More Theta is a flex.
You think it's better than Chris C? SEA?
Oh yeah. I think it's.
Is that what you did?
Yeah.
Chris?
C. Oh, my wife's name is Chris.
SEA. Yeah, like this. Yeah, I don't hate it.
Yeah.
It's nice. It keeps him off the
How else
couch.
can you get a bigger one, Saznoff?
Keeps him off the couch.
You have to think strategically.
You got to play this smart. Yeah.
You got to think down the line.
I think she was hoping for like something a little bigger than yours.
She's been hoping for a lot bigger than this for 21 years.
I think she was hoping. I think if she wanted to see her, name on a boat, it wasn't going to be that boat.
I mean, it's pretty
Be
good.
something with a captain.
Her captain years are behind her, okay?
Not exactly what she was hoping for.
How was your weekend? Did you play some golf? Because you're moving very sloth-like today.
I'm moving brisk today.
But that is not the adjective that I would use.
I would use it, brisk.
Okay.
No, I didn't play golf this weekend.
So then, what's wrong with your body?
Last week.
So then, what's wrong with you?
But I was moving pretty good. Nothing. I didn't do anything. It was a little hot this weekend.
It was very
real
hot.
hot.
It was very hot, very muggy.
It was a little hot.
Intense, yeah.
Or
Well, how was the street festival, like literally in front of your house?
it was good.
Did you participate
Not
as
really.
a functioning member of your community?
No, not
great.
really.
Okay.
We had a block party,
Okay.
but I didn't
I
participate.
didn't get the invite. Would you like to have gone to a block party, get a little sausage?
I'm not going to the north side for that.
Did they have? What would you go to the north side for?
Ooh, that's a good question. Cat cafes?
Cat cafe.
They're not going to have that at a block bars thing.
Yeah, the Catcade, which I support with a monthly donation, but they're on the north side. I'd go there.
No.
Okay, well, you asked.
I guess.
I'll go to the north side for, I like the Apple Festival that they have like in September or whatever. Like it's like Lincoln Square. It's like it's up by you. I'll go up for that.
Yeah,
I love apples.
I live right next to Lincoln Square.
I got a
Yeah.
Johnny Appleseed in my neighborhood. He's got a bunch of apple trees and trees
Ooh.
and stuff like that. This year's crop's not the best. I think
Yeah.
it's hot.
Yeah.
Rain or something. I don't know.
So you didn't do anything, but how was the block party? Were there bands? Was there food? You didn't.
They're
No,
nudity.
there was a lot of kids,
Okay.
so I kind of.
Did you bring your grandson?
No.
Did you babysit?
Yes.
How was that?
That was okay.
Okay.
little bit, not like.
Did you give him more cinnamon bun?
No, he's forbidden now. He's not. He doesn't do anything now. When he eats in front of the kid and the poor kid looks at him longingly, he has to say, "I'm sorry, Junior. I can't.
My daughter is like a prison guard.
Yeah.
Yeah.
Okay.
I could see that.
She is brutal.
Yeah. Mine's on a schedule. Like.
Oh yeah.
Oh. Like they were at our house swimming, and 5:15 came. You would have think that like a hurricane sirens went off. They packed up. They get going. The kid has to eat. We got to take him home. He's got to eat by 5:30. I mean, it was
bed.
unbelievable.
Okay, well, when you
they all do that.
I don't know what they.
When you two have the ability to squeeze something out of your vagina, then you can set the schedules that you want. But until that day comes, your daughters are the boss.
Watch from us. We did
Your daughters are the boss, and you have to
My
respect
daughter's
their
like-
decisions.
She is
Oh,
brutal.
I could only imagine. Oof.
And I'm like,
Ugh.
Good,
even the dogs hide from her.
Ugh.
good,
I don't blame them.
good. I enjoy all of this.
Like everybody's cowering in the corner.
So, how is your grandson? Has he written his first algorithm yet?
Yes,
Has he placed his first trade? He just did a covered call.
not technically.
Okay.
He sold a put. He sold a put. Yeah.
Yeah, what's going to be his first trade?
Good question. I don't know that yet.
Okay.
Yeah, I don't know, but we'll figure it out. It's been good. It was a good weekend. A lot of family stuff.
Yeah. All right.
All right, V, what'd you do?
I didn't do anything. It was very hot. And there was a parade. There was a parade literally by my house, so all of the streets were shut down.
parade?
So yeah, the Bud Billiken parade, the largest, the longest running parade I think in America, celebrating back to school on the South Side, but it just causes chaos.
I think
because
school starts next week in Chicago.
School starts next Monday for CPS schools.
Thursday for us, yeah.
Thursday for you, okay.
Yeah, this Midwest stuff is weird because like when we grew up it was always September
After Labor Day.
after Labor Day.
Yeah, after Labor Day. Look.
Now they start in the middle of August. I'm like,
Yeah.
How else are we going to catch up to China?
Vinny's really perplexed. I had to explain to him that summer's still going on, even though he goes, it can't be. We're going back to school. I go, no. Summer goes well into September. Only your summer's over. Like,
Yeah.
Yeah, your summer's over, kid. Yeah,
Too
this
bad.
is when it starts. This is when it starts to count.
You're not kidding.
Yeah,
No, as sophomore year?
yeah.
Yeah.
I don't know.
You don't know anything.
I don't know.
Hey, did you watch football? Football started.
I
Our Bears got a tie. It's like kissing your sister.
I watched a
but they
little
tied
bit.
with the Dolphins. What are your thoughts on any of the preseason action that you caught? Whether it was
My 8.5s look real
Shador
good.
Sanders or my Chiefs
He
or
looks
the
good.
Bears or whatever.
It looks really good.
Okay.
I was impressed. I was rooting for the kid.
All right, good job.
Bears, I thought they looked like very average or kind of crappy.
My
Yeah, but
8.5
Caleb
really
didn't
good,
even
but my
play.
9s are going to be real
I know.
strong. 9s, hands out.
The Badgett he played.
Played fair.
Okay.
I thought.
All right.
I thought he was fair.
Yeah, one
Say
bad
that to his
quarter,
face.
One good quarter.
I just thought he was fair.
Well, up next for the Bears or the Bills. Are you still locked in at what did you
8.5,
say
8.5,
your record? Yeah, 9, 12, 10. I don't remember.
8.5.
8.5. Are you still locked in at 8.5 based on what you saw?
Yeah, sure. Of course.
Wow. Okay.
I'm also
I mean, this is a third stringer.
going to overnight. I'm going to opening night.
Opening night. Yeah.
Yeah,
Okay.
he thinks it's a play. Don't correct him, okay?
Going to
He thinks
opening
he's gonna
night.
see Cats,
Okay.
something like that.
Monday Night Football. Opening night.
Oh man, that Tuesday show is going to be brutal. Why don't you just take Tuesday off?
Yes.
The home opener.
Going to the home opener.
Not a
Okay, there it is.
ballet.
Of sports ball. Of sports ball.
It's
You
gonna
love
be
it.
good. It's going to be good. We're going to have
You're
fun.
going to have to give me your man card eventually.
I'm going to just stay for the first period.
First period.
First, oh no. Oh no.
Bump.
Wait, who do they the Vikings, right? Yeah, okay. Well we're off to Buffalo next, so. And we're doing combo practices. Are you a fan of the combo
I
practice?
am not.
I like it because they get a little chippy with each other. Like it's something.
I don't care, actually.
Okay.
You should be secretive.
Yeah, I don't really care.
Okay. Yeah, why engage with the conversation for your literal talk show? What are we doing? What is happening? Okay. Well, now I gotta just pivot out of this super hard. Hey, this is a magnificent week here in Tasty Live land. Mike, Nick, and Katie shut it down in Seattle last night. Thank you to everyone who was able to come out and see the crew for the whiteboard tour in Seattle. I've got a couple of pics here. There's Pike Market there. Pike's Market? Pike's Market. Public Market Center. There you go. Get some pictures.
Yeah, I've been there a couple times.
Okay, this is all about you.
Oh, so then it's
Look at that. That's a full
real.
house there at the Crocodile. There's Mikey Butler. Most important concept in trading is trade size. He's not wrong.
Ba-ba-bum.
And then there's Nicky Bat, dropping some knowledge and his insight there. More Nicky Bat. Why stay in the trade? Why do we do what we do?
Why?
And then holding it down, looking stunning as always, Katie McGarrigle. She looks nice. I like that dress.
Say that word.
And also, yeah, you are so shady. You're like, yeah, this group, you're like, they're never going to get married. Katie's literally getting married in the matter of like a couple of weeks. So
Okay, one outlier.
Put some
You're supposed to have an
respect
outlier move.
on Miss McGarrigle's name. Katie is getting married. So, neener. There you
Pay
go.
that guy a lot of money.
Okay. That's me. Why are you so mean? Why? Like,
Born that way.
right?
It's just born that way.
Like,
Can't
just
help it.
can't even. But again, anyway, thank you to everyone's coming out. And we are, speaking of home openers, it is the week of our home opener. We have an open house. We're literally opening up our home to you Thursday here, Tasty Live. If you would like a tour of the studios and would like a meet and greet with all of the tasty personalities, we would love to have you. But little caveat, you have to register. We work in a building where we're not just the only tenants, so we have security protocols. So if you would like to attend the open house, please send an email to support@tastylive.com, and then we will send you a Google form, which you then have to fill out with your government name. And then we will get you on the list, bada bing, bada boom. And then you are welcome to come and visit us. And then Friday, Tom and Bat taking the stage, doing some live trading at Thalia Hall. Doors open at 8, show starts at 9. Part of our At Work at 11 series. Again, it's a home game for us. So there's going to be a ton of other tasty talent there that you don't get at any other show. So definitely, if you haven't already signed up, do it before.
And we flew in talent like Dr. Jim.
Yeah, Dr. Jim's going to be coming up for...
The worst talent I've ever seen flown in ever.
Why are you so mean today?
I mean, it's a joke. Okay?
Wow.
Usually when you fly in talent, it's not Dr. Jim.
Okay, but
It was the worst $300 we've ever spent. I'll tell you that right now.
But my question, it doesn't cost
You're
anything
saying, wow,
to
we're
say
flying in
something
talent.
nice.
We're flying in Dr. Jim. Oh, God.
Okay, well, wow. Anyway,
You have
that's
a good point, Saz.
That's what's happening. That's what's happening.
One of the worst trades we've ever made.
I don't know what's.
That's the worst talent we've ever flown in.
I don't know.
Doesn't even come in a massage. Oh, well.
Yes, we would love to see you. So if you can make it happen, that would be great. But hey, in the meantime, in between time, on today's show of this magnificent Monday, at the top of the 8 o'clock hour, we're going to do an options jive, how to reduce volatility through laddering. What?
Who?
What?
Huh?
Got a ladder.
Who's on first?
What's on second?
How do you, first of all, what is laddering? How do you,
Going out in time.
going out in time?
Laddering out in time.
Oh, but why is that? I thought that was rolling.
No. You do it all at the same time.
No. But that rolling, you do go out in time also.
Like
This
instead
is
of
the
selling-
same time you do the trade.
Instead of selling 3 puts in the front month, you might sell 1 in the front month, 1 in the
in the
next
back,
month,
or 1 more.
and then 1 in the month after that.
Oh.
Laddering them out over time reduces
I
volatility.
see. Gotcha. Okay. I learned something new. If you want to learn even more, go watch our segment at 8 o'clock. Then at 8:40, we got Dr. Jim in the house, who you just literally called a no-talent hack. He's going to be in for the
not
Skinny
call
on
him
Options.
no-talent.
Nope. Yeah, the Skinny on Options abstract application. Dr. Jim, if I were you, I would just do a walkout right now. Like, I would just walk out, just like contract negotiations. Calculating the risk of going to zero. That is going to be Dr. Jim. What is the risk of going to zero? Actually, it was this day in 1994, the longest walkout in MLB history. So,
Wow.
Yeah.
Didn't remember that.
Go ahead, try to challenge me, dude. Say something mean. I will defend it.
Walk out. Okay, I believe you.
Yeah, okay. And then at 9 o'clock, market measures. Is the recent SPY USD move meaningful or noise? That's going to be at 9 o'clock for market measures. What?
Nice.
Nice, okay. And then we're taking your calls. Still no Scott Sheridan. I'm a little upset because it's my favorite segment. And with just the two of you, it's brutal. But you guys are taking calls today. Tom and Tony taking your calls around 9:30. So stay tuned for that. Yeah, that's it.
Good job out of you.
Hey! I'm so tired. Do you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news, coming
News.
across the wire. Leading story, top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's August the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. Do you know whose birthday it is today?
August 11th?
Yes.
God, did we miss somebody?
Yeah.
No idea.
Is this going to
Pretty
hurt?
important to you. She's
Oh.
dedicated her life, basically, to serving you, and you have just ruined hers.
Oh, no.
Oh, no.
Southwest made me forget.
You plucked her fresh face out of a Starbucks, and
Oh, no.
Linda?
Linda?
Linda's birthday's today.
I
Yes.
did not know that.
Where are you guys going?
I think she took off.
Oh.
Bless the queen. Like, I hope she's not here.
I did not know that.
But say happy birthday, Linda.
Happy birthday.
Happy birthday, Linda.
There you go. You literally ruined her life.
Oh, you made her into the woman she is today.
Anyway, this is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Also, little birdie's telling me Ryan Grace's birthday was yesterday, so we got a lot of Leos in
Happened
the
on
office.
Sunday, it doesn't matter.
Yeah, happy birthday, Ryan. Any earnings for this week?
Yeah, probably not. I mean, you're going to look at AMC. You're not going to care about that one
AMC.
mighty stock.
$3?
Yeah, just about. And then OKLO is not something we trade, but a lot of people do.
Okay. Hey, well, stock market rebound is going to be tested by inflation reports as stagflation threat emerges. Upcoming inflation data, that's CPI, I think tomorrow, could deliver a reality check for the market. Investors will be watching closely for any evidence of prices rising in the economy due to tariffs. But the Bureau of Labor and Statistics is just like, we're not gonna track the prices in some areas now. So they got rid of tracking prices in, this is true, Provo, Utah, which I've been to, it's very beautiful, Lincoln, Nebraska, and Buffalo, New York, which is like the 49th largest metro city. So they're like, no. So it's gonna just be interesting what data comes in, because it's like, where are we getting the data from?
See those floods in Lincoln, Nebraska?
No,
You didn't see this? Unbelievable.
I've never been to Nebraska.
Oh, you're not missing much.
Okay, that's not very nice to the big. Look, you know what I respect though about Nebraska though? The chili cinnamon roll combo. Like, I don't know how they came up with that, but I'm not mad at it. In the state of Nebraska, if you
Yeah.
get
I see
chili,
this.
they give you a cinnamon roll. And
never
something about the spicy and the savory with the sweet is like, it's like a Midwestern, even though I don't consider Nebraska Midwest, but it's kind of the plain state. Anyway, whatever. But I'm not mad at a chili cinnamon roll combo.
I don't remember.
You're on to something, Nebraska.
But I did spend, that famous summer in Nebraska where I was
Putting rings on.
Putting rings in pigs' noses.
working on the farm.
Yeah.
I kind of have a lot of Nebraska history in me.
Okay. All right, Forrest Gump. What can we talk about the expected move for the market this week?
You
CPI,
got- yeah, you got
CPI, PPI.
Volatility at 1670
CPI.
is telling you this doesn't mean anything. And for the whole week, you're looking at around 72, 73 handles, much like last week.
Okay. Nothing?
Nothing.
Yep.
Nothing, honey. Nothing, honey. What are you doing in bonds? We talk about that
We're long them.
to start the week? Okay.
We're up
Because the
12.
Treasury auctions didn't really pan out last week. There was just kind of like a nothing
They were
burger.
down for most of the week last week, but we went home a little long them, so it's working out this morning. They're up 12 ticks.
Yeah, but they've been hanging out at this 115 and a half now
Yeah.
for what seems like less.
We got into the 114 handle on Friday, but we didn't do anything. We just kept our longs, so we're okay.
They got in the 114 handle last night. 114.31's the low.
That was on the opening print.
Mm-hmm.
In the Ain't Nobody Asked You Girl department, Bill Ackman, in an X post yesterday, suggested merging U.S. government-sponsored enterprises Fannie Mae and Freddie Mac. He said the move would help reduce mortgage rates and achieve huge synergies, both in their operations and in the trading price. I don't have a dog in this fight, but does he have a point?
I don't know.
Okay, I thought you would know.
used to
You're
be
an
able to trade
adult.
Fannie Mae and
A long time ago.
Freddie
You-
Mac
you
back
can.
in the day. This is
I
nothing
don't
new.
think you
You
can
can.
trade them anymore.
No, I don't think you can. But
No,
they're
I
trying
think
to get
they were once public. I don't think they are anymore. But anyway, I don't really have a. I don't.
I just thought this was weird. I was like, of all the things to tweet about, but I was like, okay, maybe this makes sense. Maybe we should do it. I have no idea.
No
You're
idea.
supposed to be the grown up in the room.
No idea. No idea.
Fannie and Freddie were created by Congress to support the housing market by ensuring affordable mortgage financing, but crumbled after being severely bruised during the financial crisis. So,
Yeah, I'm just generally opposed to anything Bill Ackman proposes. But
okay,
I don't know.
duly noted.
Okay. For the record.
Hey, HSBC raised their silver price outlook on gold strength and geopolitical risks. The bank now expects average silver prices of $35.14 an ounce in 2025, up from $30.28. Hi-ho silver.
It's
Well,
so
considering
pathetic that
it's above
these
that.
headlines come out and then the products are down 2-3%, gold and silver down 2.5% a piece. It's just, it's like you can't
You couldn't time
write
it
this
better.
stuff. Yeah, you couldn't.
What a
write this
sweet
stuff.
job that these people have. They just can be wrong
Silver down
all the time.
80 cents, it's an over 2% move, and gold down $83, about a 2.5% move. Big moves in both of them to the downside on a headline you would think would be quite bullish.
What are you doing in gold and silver?
Gold, we're just short premium, which
Okay.
came in this morning on the down move, and
Just typical commodities, right? They usually
silver nothing,
back the way down.
Nothing.
none.
Okay. This is unusual and technically unconstitutional, but what does that matter? We're going to do it anyway. NVIDIA and AMD are going to pay 15% of their Chinese chip sale revenue to the U.S. government in exchange for getting licenses to allow them to export their chips. They will give that 15% of revenue to the U.S. government. You're like, great. The problem is the Constitution actually forbids charging companies an export tax. And also, I don't think that money is going to go to the government. I don't think that money is going to go to where we think it's supposed to. I would like a receipt.
That's the receipt.
I would like a receipt for these transactions. But obviously, it saves chip makers like NVIDIA and AMD billions and billions of dollars to be able to trade in China. So obviously, it's a win for the chip companies. What are you doing in chip stocks?
Nothing.
Nvidia down around $1 or so, even though even the S&P's
Yeah.
up around 8 and Nasdaq up 19.
I think people thought this might be bullish, but I think this is long term super bearish.
But Nvidia has
And again, it's illegal. But again, ain't nobody want to talk about that.
It's just
It's unconstitutional.
well,
So
forget about that. It's just horrible.
Okay.
Horrible.
okay. Well, we're gonna see. Last week, President Trump did say he would implement 100% tariff on imports of semiconductors and chips unless a company was building in the United States. So, in other chip news, the Intel CEO Lip Bhutan is set to visit the White House today. This poor little man, after President Trump loudly called for his removal last week. Tan is expected to have an extensive conversation while looking to explain his personal and professional background. This man is going to have to lip sync for his life.
I bet Intel's up today. I haven't looked yet. I'll bet it's up.
You have a position in there.
I do. I'm long it.
Okay.
You are right, Sadnoff. It's up 50 cents to 20.46.47. Do we whack them and how? Get out of everything right now. Let it go.
Hold
First
on.
uptick
To
in
it.
a long
Intel's
time.
going back to $25.
The reverse indicator.
Say what now? Based on what?
I don't know.
Vibes?
Based on his position.
Vibes?
What else?
Based
What else
on
would it
vibes?
be based on?
Okay,
My
cool, cool,
position.
cool.
All you got to do is keep selling 19 and 20 puts in Intel.
It's
worked
free
all year.
Free money, right?
Okay.
It's worked
Got the
all year.
memo?
It works until it doesn't.
That's right. It's worked all
The
year.
year's 2025 and Intel is still under $25.
I know, but it's worked all year just selling the 19 and 20 puts.
Are you guys doing anything in like a SMH, just like a ETF of
Just
all
Intel.
of the chip
SMH is a toughie, but SMH is actually up about 50 cents.
Hey, what's the IV in there?
A buck in there. 8.
Oh, wow, that's crappy.
Yeah.
Hey, this is bonkers. Palantir's meteoric rise is pushing the company's valuation further into record territory. The company's up 2,500%. And how do we justify being here? These are just crazy numbers, but the stock just goes up. It's up almost 150% this year. It's up 2,500% since its 2021 debut.
Amazing.
Down about 50 cents this morning.
Gotta buy those dips.
But it's a new high
Yes.
on Friday. Crazy moves.
It's trading at 245 times forward earnings. Comparison, Nvidia just trades at 35 times forward earnings.
It's crazy.
Gotta buy it on the come, kind of speak.
Yeah, you gotta get those dippy doos
Yep.
there. Do you have a Palantir position or no?
I do not.
Did the IV stay up after earning or no? It got all
15.
Not really.
15's not the worst I've heard though.
It's pretty bad.
Not great.
Not on
Gotta
this
be
part.
direct.
You're pretty bad. Okay. Hey, it took just 24 hours of complaints for OpenAI to start bringing back its old model. OpenAI unveiled their latest generative AI, GPT-5, on Thursday, and Sam Altman said that it's now like having a superpower and the equivalent of a legitimate PhD-level expert in anything, any area you need on demand that can help you with whatever your goals are. But people hated it so much, they've already had to walk it back and roll out the
all that in a
previous
bag
model.
of chips. Why do people hate it so much?
It was not providing the answers in the way that people wanted them. Like, just go on Reddit to r/AI or r/ChatGPT, and it's a myriad of complaints from people. Users blamed the fact that the new model seemed dumber and
I mean, you know that the future of AI is going to be nonsense.
and that the guy on Reddit said, I woke up this morning to find that OpenAI deleted 8 models overnight. No warning, no choice, no legacy option. They just deleted them. So then that also made people mad. Because normally, at least when you roll out something new, you keep like the legacy, at least some of the legacy versions. But I guess they went scorched earth on it, and then that also made people mad. So
Reddit's basically down about 50 cents or so. Reddit,
there you go.
215 and change.
And then another user said it felt like they were using a free version instead of being a paid subscriber. So also maybe look at Microsoft, because you can't trade OpenAI, but you can trade Microsoft. So
Mr. Softy is trading around 523 or so. It's about up $1 off its highs of 560 on that big spike about a week to 8 days ago or so, trading 523.
here's something interesting that I had not really sort of thought about, but AI boom is quickly becoming the largest wealth creation spree in recent history. With time and IPOs, today's private AI fortunes will eventually become more liquid, but AI startups have minted dozens of new billionaires this year. Again, a wave of which we have not seen in a while. What are your thoughts on this?
There's no doubt about it. I mean, I don't know any of these new AI billionaires.
You haven't met them yet?
Well, they don't have time to talk to
you
a
meet them at your
peasant like
club?
you.
I know. I have not met any of them. I don't know who they are, but
Sure.
You didn't go to this social on the first of the month when the club introduces all the new members?
you're not supposed to talk.
Not tell about that? Sorry. Never mind. I forgot.
Yeah, so I don't know.
But I just think it's interesting. I don't know. It's just there are now 498 AI unicorns or private AI companies with valuations of $1 billion or more. They have a combined value of $2.7 trillion.
That's a lot.
And there are also more than 1,300 AI startups with valuations of over $100 million.
I don't doubt it.
I mean, every week it's like some new company that I've never heard of is like raising money at a crazy level. And I'm like, I have literally never heard of you. But what do I know? An updated Siri that interacts with apps from Apple reportedly won't be here until next spring. Siri, or Apple's going to debut a raft of new iPhones next month. at their big event. But Siri, that does more than just setting a cooking timer, is still nearly a year away. During their earnings call, Tim Cook, CEO, said that Apple was getting more into AI, doing more CapEx, more spending, yada, yada, yada. But AI for Apple is behind compared to some of their peers. And of course, people want, like a chat GPT in their phone, like a Siri, but we're not going to have that for
Apple
a while.
finally got out of its own way. They're gaining around 15% last week, going from around 200 to almost 230. It's
Had a great week last week.
sitting at 228, down about $1 this morning. Ivy rank of 18 in Apple.
What are you doing in Apple?
We have a small short premium position, but it's short. I mean, it's small, but
Apple be schmapple.
we lost a little last week in there. I was bullish in there too, but not that
Far
bullish.
too fast.
Yeah.
Here's something crazy. The computer science dream has become a nightmare. If you remember, like the last decade, it's been STEM, 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 STEM A, STEM, STEM, STEM. But coding equals prosperity promise has officially collapsed. Fresh computer science graduates are facing unemployment rates of 6.1% to 7.5%, more than double what biology and art history majors are facing. Comeuppance. I'm a humanities major. No. So, but are you surprised by this? I was surprised by this. Obviously, I don't want any college graduate
know
to struggle,
that the
but
marketplace right now for coders is really bad.
why is that? But we need code. Like, we need engine. Like, I don't understand. Is it just like the levels, like the degrees of skill, or
I think it's partially that. I think it's a lot of stuff has.
is it just AI?
No, I don't think it's just AI.
Okay.
I just think a lot of stuff has gotten, there's a lot of stuff that's gone mobile, which it still need coders, but it's just a different. The marketplace has changed.
Everything's
Okay.
Online.
Whoa.
The marketplace has changed, and there's been a ton of layoffs. A lot
Yeah.
of these big firms like Microsoft and Meta, they've laid off, tens of thousands of coders, and they're just
Well, but they're also offering AI experts like $100 million salaries.
a different animal.
I know, but I'm saying it seems to me
I
that
know.
that's coming at the expense of
These
other
firms
people.
have laid off a lot of coders. They've changed their models a little bit, and they've reduced the size of their dev teams. And there's just a lot of coders out there.
So if you are fresh-faced and you're going to college this fall, school's going to start just around the corner, what would you major in right now in 2025?
Space.
No, I'm being serious. I know that there's no right or wrong answer, but I'm just curious because you talk to a lot of students, you go to a lot of places. What would you major in right now?
I mean, for me, if let's do it all over again right now, some form of, finance and business.
Okay.
I would major probably, knowing what I know today,
Yeah.
I would look for a school that does something in entrepreneurship.
I don't like plumbing, so I'd be an electrician. That's what we're going to need.
I would say entrepreneurship. If that
Actually, you'd be surprised. The unemployment rate among like electricians and plumbers is also shockingly high because we can't keep up with the pace of building houses or doing renovations because, again, some of our workforce comes from different areas and those people are scared to come to work now. So then how are you going to do an electrical install, when
Why are they afraid to come to work?
no, people who are maybe not here legally and in that part of the workforce, right? So again, it all ripples down but I'm just saying the unemployment rate, look it up, for electricians is higher than you think. I know that's it, and we do need people in trade schools. I'm not saying that we don't, but I'm saying you would be surprised what the unemployment rate is for the trades. Like, it's not the golden ticket that you think it is. So, yes, it seems like a nice quip in an argument. You're like, oh, she's going to be an electrician. Oh, you think you're too good to be? No, I think it's a wonderful trade, and but it's
It
just
depends on where you look, I guess. 3% to 7% for electricians.
yeah, but a 7%, like that's high.
I hired an electrician kid once to be a
An electrician kid?
electrician. He was a union electrician. He wanted
Yes.
to be a trader.
Okay.
I hired him.
Yeah.
It didn't work out.
Okay.
So much for electricians.
Yeah. Well, I just thought it was interesting, and I didn't know that the unemployment rate.
I mean, the unemployment rate's 4%, right, around the country? So 3%.
Yeah, but it's higher for younger people. It's higher for younger people, and it's
It's like 6%.
It's higher for uneducated people, too. I mean, it all depends on what you want to look at.
sure.
Any kind of statistic.
Yeah. Hey, in other news, SoftBank is selecting banks for its U.S. IPO of its payment app, PayPay. What are we doing? How are you going to name your app PayPay?
Let's look for the po-po.
There's really an app called PayPay, like PayPal.
It's a Japanese payment app operator, and it's called PayPay. And SoftBank is looking at Goldman Sachs, JP Morgan, and Morgan Stanley to IPO. The app offers financial services, including banking and credit card. It was first reported 2 years ago that SoftBank was considering a U.S. listing for PayPay.
Can't believe PayPal let PayPay get away with that.
PayPay, I know.
Cease and desist. PayPal up around 30 cents, 67.90 or so.
I mean, PayPay seems a lot like PayPal. I'm sorry.
Yeah, no, it does. It does. So, yeah, what are you going to do? Should it happen, it would be the first U.S. listing of a SoftBank majority investment since ARM in 2023. So, just putting that out there.
ARM, $139 and change, up 50 cents. Ivy rank a 3. Ivy ranks a low across the board.
Yeah. Hey, Tesla's robo-taxi service has obtained a permit to run ride-hailing service in Texas through Tesla Robotaxi LLC. The Tesla unit is licensed now to operate in Texas as a transportation network company until August 6th, 2026. What are you doing in Tesla?
Nothing.
Tesla hanging out with an Ivy rank of 6 at 336 or so. That would put it up around $7.
Okay.
America.
Hey, Ford is promising a revolution. The company plans to make a big announcement today about their electric vehicle future. In a blog post,
Wait,
Ford
is this the
says,
best Ford picture you could find?
this is a Ranchero. No, they're going to make an electric Ranchero. So that's why I picked this picture, Snarkosaurus, because I had to look up what a Ranchero was. I didn't know what it was.
Really? You didn't know?
It hasn't been seen on road since 1979. Where would I have seen one? In a time machine?
Well, it was the old El Camino. You know what the El Camino was.
I do.
Right.
I do. Yeah. So after the Mustang and now the Ford F-150 Lightning, they're going to make an EV Ranchero. What are your thoughts?
Fix or replace daily. Ford.
You like it?
I like it.
Okay.
You like a 2-seater, like, semi-truck? You think this is where you should go?
I don't think it's where I should go, but I do like it. I said, do you like it? I like it.
This still is just fun.
Like, I mean, that's pretty nostalgic. I like that car.
So there's a great garage band when I was going to school in Bloomington, because I went to IU, and they had a song called El Camino, right? And the band, I think they're called Cadmium Orange. I'm going to date myself a little bit, but great bar band in Bloomington. And their song El Camino is like, El Camino, the front is where you drive. Or no, the front looks like a car, the back looks like a truck. The front is where you drive, the back is where you El Camino. It's great. It's a great song. So that's the only reason I know what
Not
El
bad.
Camino is. Yeah, it's catchy. You can dance to it. But I've never been in an El Camino or known anyone that's had it.
I've never been in an El Camino either.
Yeah.
You've never been in an El Camino?
No.
Who had an El Camino?
I don't know anybody that
Did you have an El Camino?
I never had an El Camino, but
Okay.
I've been in quite a few. I mean,
Really? I don't
Brooklyn, they were...
Nobody.
So Chevy made the El Camino, Ford made the Ranchero.
I don't think I've ever
so-
been in a Ranchero. I will give you that.
Okay. Mm-hmm. Well, it's going to be electric, baby. I'm not sure what Ford is doing as
It's
a
a fun
stock.
looking car.
Yeah.
I don't... If she doesn't know... If she's never heard of one or seen one, and people like you and I can only remember them nostalgically,
Yeah.
you really think that's where you should be going? I mean, this is
I
not
didn't
like the
say
Bronco.
it's not for me.
Yeah, like the Bronco is like iconic and like, yeah. I like the old Broncos.
Anyway, $11.25. Ford needs
You
a better
can't
idea
park a
now.
truck on the streets in Chicago, but you can park in El Camino.
Hey, there you go.
I don't know. Will it be considered a car or a truck?
I think it's a car.
I think it's a car. I think it's considered as a car.
What was that?
The front looks like a car. The back looks like a truck. Hey, here's a blast from the past because I know you know people who worked in this pit, but AOL is discontinuing its dial-up internet, and we're just surprised they even offered it in 2025. On September 30th, AOL's dial-up holdouts will need to finally move on to another internet service, as AOL announced this week. They are discontinuing their service. Dial-up usage
didn't even know they still
has
had it.
plummeted over recent years. But AOL still had some 1.5 million dial-up users in 2015. But in 2021, that number was in the low thousands. But as anyone who grew up as like a 90s kid remembers having to get onto the internet with "You've got
AOL
mail"
when AOL was AOL, and it was a magical ride. AOL doesn't have any stock now.
Yeah, no. So, but I just thought I would mention it because, like I said, you knew people who were in the AOL pits back in the day. I think Jenny was.
I'm like an El Camino,
I think Jenny or Liz was. I can't remember. Okay.
Yep.
Okay.
He was. He has a name.
All right.
That was. Show some respect.
Hey, this could get exciting. President Trump is weighing reclassifying marijuana as a less dangerous drug. That's according to the Wall Street Journal, which reported the news on Friday. At a $1 million a plate fundraiser at his Bedminster Golf Club earlier this month, Trump told attendees he was interested in making such a change. Obviously, reclassifying it from a Scheduled I drug opens up a whole realm of possibilities, including into research and other scientific advancements, and you can do more things, and it makes it easier for the cannabis businesses to do their banking and financial aspects, yada, yada, yada. The industry's been waiting for this for years through multiple administrations. No one's been able to get it done, but maybe this gets done. I don't know. What's Tilray doing? There's a blast from the past.
I have no idea. I haven't looked at that stock in 2 years.
Wow, how the mighty cannabis
TLRY?
stocks
TLRY.
have fallen. TLRY trading 74 cents.
Oh,
Actually,
brutal.
10 cents on
Oh.
You found one.
TLRY trading 74 cents.
Unbelievable.
I love it. Hey, this is great. Bed Bath & Beyond is relaunching its first store in Nashville and is planning dozens more. I miss Bed Bath & Beyond so
Who's
flippin' much.
relaunching it? Somebody buy it?
Yeah. Overstock bought it, remember? Overstock bought it in 2023, and they rebranded to Beyond Inc., and then they licensed the name to the Brand House Collective. So Overstock bought the IP, and then now they're
Wasn't it always
licensing
called
the
Bed
name.
Bath & Beyond?
Yeah, it was always called, it was BBBY. Remember,
Yeah, right.
that's the ticker? Okay.
Yeah.
Are you okay?
Yeah, I'm just saying you said they rebranded it. I'm like, I thought it was always called that.
Well, they rebranded to Beyond Inc.
Oh.
And then, okay, you're only listening to every third word that I'm saying. Again, I know that you have an audio delay in processing information that is coming out of my mouth.
What'd you say?
It's intentional.
Okay, that's fine. That's fine. Be that as it may. But I'm very excited for this, and I might have to take a road trip. What if I could go to Buc-ee's and Bed Bath & Beyond in the same road trip?
There's nothing.
Amazing. Nope, shut it
Bed
down,
Bath
girls.
& Beyond.
Hey, this is funny. I don't know if you saw this, but I pulled this just for you. I'm going to hold your hand when I tell you this. So Sweet Green they reported their earnings Friday, and it came out Friday morning, so I didn't cover it on the show, but they're getting rid of the French fries. Tom.
No, how come?
They made a weird business decision. They said, yeah, the customer loves it, but SG, BAT is the ticker. Shares dropped 25%. They slashed their outlook for the second time in recent months. The revenue didn't hit, nothing
It was the
hit.
best thing they had.
I know. I told you I was going to hold your hand while I told you this. They are trying to beef up protein in their sizes, trying to get more deliberate and intentional because it's
Sweet
hard.
Greens has gone so downhill.
I know, but the stock was down 25%.
What's the stock trade for now?
$9.57 down a quarter.
Their
You
fries,
can't even buy one of their salads for $9.65.
Their fries were their best thing.
Okay, well, they're getting rid of them, and I wanted to tell you. I wanted to be the one to tell you.
It's so bad. At least the ones I've gotten.
It's
so
gross.
bad.
It's gross.
It is, isn't it?
It's
But hey, they're going to double
French
their
fries were great.
They're going to double their protein, so I'm excited about that. Hey, McDonald's, finally, to wrap it up, McDonald's is collaborating with two cartoon classics for a new Happy Meal to launch this month. McDonald's in their earnings saw better than expected same-store sales, probably on their collab with Minecraft. Well, they're now launching a new collaboration with Hello Kitty and Teenage Mutant Ninja Turtles later this month. I'm excited for this because I love all things Hello Kitty. And I want a Hello Kitty Teenage Mutant Ninja Turtle. What? Oh my God. It needs to go on my desk immediately.
Mashup.
Look at this. I want them all. MCD. Not sure what they're doing.
Trading around $305 and change, basically unchanged, maybe down 10 cents. If you want to look at that IV rank of 8, about mid-range since May.
Finally today for my viral video of the day, I don't know if you saw the viral video of the Pomeranian that chased the bear out of that house in Canada. I don't know if you saw that. It was like a little 6-pound Pomeranian. And I was going to show that one, but that one's gone like massively viral. Because remember I asked you, would you rather have like a bear in your hot tub or an alligator in your pool?
A bear.
Well, watch this as a Florida deputy wrangles an alligator out of a pool. These are just some service calls you get in Florida. He just bare hands it.
Oh, it's a little guy.
Are you gonna pick it up with your bare hand?
No.
I know.
That's not that little.
Oh, it's tiny.
Obviously, you grew up here.
Obviously, that guy did grow up there.
So, like, watch this. Wait.
I know, you're mad. I know.
What's he gonna do with it?
So he puts it in the back of his patrol SUV. And then he's like, wait. He buckles it in. He's like, oh, there you go.
Gotta buckle it in. Did the right thing.
But I was like, how do you get it out, though? It's going to be so mad.
He'd
like-
be happy.
I'm telling you right now, that guy, that's a real man.
Yeah, that is a real man. You
So they grow them in Florida. Real men.
grew up
see?
in Florida, you could tell, but
Yeah, that guy's not from Florida.
but that was
That
bonkers.
guy's-
He's from Florida. That was bonkers.
Good
Get
job
up on
out of
the
him.
scruff of its neck and just
But he buckled it in.
Taking care of their own. Good job out of him.
Anyway, hey, that's my time for today.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. Stay tuned.
If you missed the live show, here's our cherry on top weekly recap.
I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing. I just
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price
you
is.
found.
As if
Yeah.
I had set the price, and he was like, well, how much did I pay for it originally? As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
okay. All right. I mean, I don't want to take a helicopter too, but an electric helicopter with
That's better.
I think so. I like the four little things as a
four things.
one big.
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now.
We are 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice. Be
No,
nice.
the best
You
part.
need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at
You
it.
guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are gonna hold hands tomorrow before we start the show.
We're gonna take a quick 90-second break and come back. We got more Tasty Live after
We're already
this break.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live and Confirm and Send. But before we do, let's take a quick look at the market. Even the S&Ps really haven't gone anywhere. About a 20 handle range, top to bottom on even the S&Ps. Mid-range for tonight's action starting today, up $4.50. NASDAQ just turned red for a quick second. It's up $6. It too has had a relatively tight range, although closer to 90 handles, a little bit wider than the E-mini S&Ps. Russell up 5 and change. That's your leader in the clubhouse on a percentage basis. But let's just call everything unchanged with the Dow up 64. Volatility is unchanged at 1675, but you can see here down at the low end, making new lows at 1665, 10 cents off of that. Bonds are up 7 ticks. They've had about a 15 to 17 17 tick move all of last night, up 7 today, also mid-range. Bitcoin, that's your big mover, although it's off of its highs of just up to 123,000. It's 120,000. That's a $3,000 move from top to bottom. But look at this, it's still up $3,000 on the futures. Now you look at the Bitcoin Cash, which trades more on a 24-hour basis, you'll see that it's down $2,200, but they're both trading around the same price. Ethereum doing exactly the same thing, flirting with a new high last night. Now the futures are up 114 to 42 and change. That's 4,200 and change. Oil down 64. I'm sorry, trading at 64 and change, up 34 cents. Although it's been down the last 10 days or so, the last 2 days or so, trying to catch itself a little bit of a bid. Gold taking a big move lower, down almost 2.25%, down $80. That's a big move in gold, coupled with a big move in silver, just under 2% or 66 cents and change. Nat gas under $3, Sadnoff, that's on its lows. How can we have inflation when you got nat gas lower, oil lower, and the rest of the commodities really not doing too much, although the dollar is catching a bid today. Euro's a little lower. I figured the dollar's catching a bid, /6J.
A little lower. They're taking premium out though, which is cool. All right, let's see what we got here. Confirm and send. We're late. Late. On Tuesday, we're going to get the latest CPI report. That's tomorrow. CPI is produced by BLS, Bureau of Labor Statistics. I think that's what that is. The same BLS that brought you the unemployment report. Do you think there's going to be more volatility in this trade than normal? And if so, how might you trade it? The number comes out at 7:30 Central Time. So if you want to trade it, can you use the 0DT SPX, or do you have to enter the trade today, Monday, and use the 1DT?
Well, you could trade SPX before 7:30. I mean, no?
Not on our platform.
I thought they were changing that.
No, we haven't. There may be one brokerage firm that allows you to do it, but there are no market makers. Like, we can't find a market making firm that will fill our orders. It's all.
I'm sorry. I knew that they opened up the stocks.
They open up for institutional customers, but they don't have any market makers for retail investors. So they have to do the.
So you'll have to do it at least from our platform on the night before.
Yeah.
So, yeah. Mm-hmm.
I mean, you can trade the.
And I'm going to tell you, you could think whatever you want, and if you think volatility is going to expand, then you have an opportunity because volatility is 1674. Basically unchanged on its lows.
And also, there's no reason to use the SPX because markets aren't liquid at 7:30. Just use the ES options. They're liquid. And they're half the size of the SPX. You use the ES options.
Good point.
So you could just use ES or MES, but use the ES. So just use the ES options if you want to trade it before 7:30.
They're going to widen out too, like closer you get to that number.
Oh, yeah.
So earlier rather than later.
But you can use ES options if you want to, or you can use the SPX the night before if you want to. No. So we're not going to trade it. I mean, it's not the volatility this low. We're not going to trade a CPI report. If we trade CPI at all, we'll buy bonds. So we're definitely not going to.
And that's the type of position you have on already.
Yeah. That's the type of position I have on already. And I think I'm going to probably get long more bonds for tomorrow. just for the unemployment report. But I'm not going
Not
to
if
trade
they
it.
go higher today. If they go lower today, you might.
I don't know. We'll see. But I'm not going to trade. I'm definitely not going to trade the SPX prior to the opening tomorrow morning. I already have an SPX position on. I'm already short it, but I'm not going to do the 0 days.
Expected move is about 48 handles going into tomorrow, August 12th.
Yeah. I mean, I already have a short position on an SPX, and I already have already long bonds, so I already have that kind of. I guess I have a position on. Let's go to the next slide. Just so I don't have the 0 days. With the success of 0 DT options, will the exchanges be offering 0 DTs for single stocks anytime soon?
I mean, I think that's the plan. I don't have any ETA on it. I think that's the plan. I don't know how they're going to do this, how they're going to settle it. I don't think they've really come up with a way as of yet.
The exchanges have been trying to do this for the last year because they realize it will help their business. The challenge has been that the brokerage firms like Tasty and every other brokerage firm have been the ones that have had the issues with it. And I can be very frank with you. It's a very challenging, there's a very challenging risk situation with this. We don't know how we are going to manage customer risk. Like, let's just say you sold an option and you had enough money to buy or sell that option, and there's 15 minutes left in the day.
Buy or sell the stock, you mean, if it settles?
No, just buy or sell. You have enough money to buy or sell the option, but you don't have enough money to hold the stock should you be long or short that stock through an assignment.
Sure.
At what point do we manage your risk? Half hour before? 15 minutes before? If we have...
You mean the brokerage side? Which time?
Brokerage side. Just think about this. If a brokerage firm, even like Tasty, and we're a small boutique compared to like TD or Schwab or E-Trade or something like that, or Interactive Brokers, we're a much smaller boutique. We'll still have thousands of customers with open positions on.
Sure.
We can probably manage that a few thousand positions between 230 and 3. But how is a firm that has 10 times the number of customers we have with 20 or 30,000 positions on that are expiring? They can't manage the risk. It's just mathematically impossible.
So do you think they come out with cash?
They can't.
What do you mean they can't?
They can't. There's no such thing as cash settled equities.
I know, but they would create a 0 day.
I don't think you can, because that's the whole issue. If you could create your own cash settled stuff, there'd be 50 more exchanges. The whole protection of this industry about cash settled has always been that the SPX is the only one that has it. Those indexes. That's what's protected their franchise.
Right.
Not exactly.
So if I'm just playing devil's advocate here.
Yeah.
So if the CBOE owns the cash settled,
they don't. They just can't. The only one they have approval for is the SPX. You can't cash settle a stock. Just like you can't cash settle a future. There's all these issues.
Mm-hmm.
So they're not.
I get the issues.
They're not going to get approval for cash
retail
settle.
Investor.
So they have this situation where you have stock settled 0 DTs. At what point do you manage? Do you basically tell your customers, listen, you have till 2:30, then you have to close it out unless you have the money. The money could be a lot.
Sure.
It's a very difficult situation.
Yeah, and a slippery slope too.
Yeah, it's a really challenging for brokerage firms. We've been trying to work a solution out for this for a long time, and every solution is going to piss off customers risk-wise. We're on it. It's just hard. Let's go next slide. When a company announces a stock buyback, does that put a theoretical floor on the share price? Is there any research around companies where a buyback has been announced and frequency of a 2 standard deviation pullback during that buyout period? I'm wondering if these are good put-selling opportunities.
I mean, just remember, when a company announces a buyback, doesn't mean they have to buy back. They're just announcing that they can and have the funds to buy back. We haven't done any research on something like this, and I can just tell you from my own trading experience in the last 40 years, I see nothing like this that puts a floor on a stock theoretically because of a buyback.
I have seen plenty of situations throughout the years where companies have announced a stock buyback, and like Tony said, it doesn't mean they have to buy it back. It means they haven't had a year to buy back, right. And it does not put a theoretical floor on the share price. Plus, you don't even know if they're going to use the money for that. Lots of companies just announce, they authorize a share. They don't really announce a share buyback. They authorize it. So they can do it. And we definitely have had 2 standard deviation pullbacks during buyback periods. So are these good selling opportunities? I mean, you certainly can. I mean,
if you were bullish on the stock, I mean, then
let me just say something.
Got a high Ivy
You're not the only one that knows that.
And you're not the first one to know it either.
So somebody who's buying a put also knows that they're doing a share buyback. So anyway, I just bring that up because it's not as easy as you think.
Yeah.
Let's go next slide. Next slide, please. I've been researching SQQQ for hedging purposes. I know this product is 3 times the QQQ. Can you tell me your thoughts on the SQQQ? I was considering purchasing some out-of-the-money calls a few weeks out with the hopes of a pullback in the market. If I purchase calls, I can't lose more than my initial cost basis on it, can I?
You are correct on the last statement, if that's your whole worry. I mean, you can't lose if you buy calls. You can't lose any more than what you pay.
This is a triple short, right?
This goes lower as the market goes higher, so this is on its lows right now.
Yeah, this is a triple short.
Right.
So if you're buying calls in here, you're hoping the market sells off.
And that's what he was. That's
what you're hoping for. Listen, here's the thing with this. I have no issue if you want to use SQQQ as a quick way to get short, as an alternative for using futures. You just want to get short the market. You want to do this?
So you would be looking to do this shorter dated, couple of days.
Yeah, a couple of days.
Log with 4 days right now might be perfect for you.
1, 2, 3 days, whatever.
September with 39 days probably.
Where's it trading for right now?
$17.50.
Okay. I mean, if you're looking for a cheap shot to get short the market because you think there's going to be a sell-off, SQQQ, perfect. But don't hold it for more than 1 or 2 days. It is a short-term trade.
It is definitely a short-term trade. I agree with you there 100%. And also, just because it's a triple leverage doesn't mean it has to move inversely move 3 times as much as the market. That's not necessarily true.
Let's go next slide. You used to talk about carrying short delta in a portfolio of short premium, but I haven't heard a lot about that recently. Is this something you still do, or have you gotten away from that?
I mean, I think it's something you're always looking at, but it's something that you've kind of listen. The market slapped you around like a redheaded stepchild. Let's just be honest with the short delta to it. So you've carried a lot less.
There's varying degrees of us staying short during different periods of short premium. Right now, I would argue that we have the largest short delta on that we've had during this entire rally because volatility is really cheap and we are short some premium. Not a lot, but we're short some premium. And so we are short delta. So actually we have this position on right now. It's not something that we've gotten away from. It's just that when the market sells off, we're less bearish. When the market rallies up, we get more bearish and get short more delta. So right now is our biggest short position. So no, it's not something we've gotten away from at all. Something we still do and we have on right now. Let's go next slide. Recently, you and Tony have been buying the guts and selling the wings when your short strikes go in the money when trading short strangles. So what is a better move once your short strike has been breached and you are in a straddle with 40 days to go to expiration? Go inverted and collect more credit, or buy the guts, sell the wings for a debit?
It's exactly the same thing if you're going to end up short the same strikes. So I would rather buy the guts and sell the wings. It uses less buying power. If nothing else, that's the benefit of buying the guts and selling the wings. Let me explain. If you got a trade on a regular strangle that uses $3,000 in buying power, and then you go $10 inverted, that same strangle is going to use $4,000. So why use 25% more buying power? I buy the guts and sell the wings.
What I wrote back to this person was, yeah, we have been doing a lot more of buying the guts and selling the wings. In the years past, we would go inverted because that's the way we kind of always traded. But recently, like I would say the last 2 or 3 years, we have flip-flopped to buy the guts, sell the wings, do the wider strangles, have less future adjustments that become necessary, and I find it to be easier to manage those positions.
It's a lot easier to look at on your.
A lot easier to look at, a lot easier to manage. Buy the guts and sell the wings.
You don't have to worry about dividends if the stock happens to pay a dividend or anything else like that. It just puts you out of harm's way.
Yeah, our default is to buy the wings, buy the guts, sell the wings, do it for a debit, and not worry about anything.
Doing it for a debit, but you're left with a net credit. It's exactly the same trade, right? You have two short options. You're a positive theta decay. Let's take a quick 90-second break and come back. We got more Tasty Live right after this with an option jive. Even the S&P's up 350, NASDAQ flirting with unchanged. We'll be back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
yeah.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Woof! The
first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options.
Jive.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with an option jive. Even the S&P is oscillating around up $5. Even the S&P is oscillating around $10. Volatility unchanged. All quiet, sounds not all quiet. Very tight market last night, top to bottom.
It was. We did a Sunday night show last night. Myself, Chris, and Ilya, and it was like we had a range.
We opened up around 8 handles. I think you went up unchanged for a second.
We opened down. I'm sorry. It's a weird thing. We rallied to a massive premium on Friday afternoon.
Right.
We were almost 20 handles over, or 17 handles over fair value. So they actually opened down last night. Like where they are right now is down 6 handles from where we closed on Friday, but it shows that we're up 5. It's
from
weird.
The 3 o'clock close.
From the 3 o'clock close, yeah.
Yep.
And so I actually sold some NASDAQ futures and some S&P futures on the close. Bought them back. Pretty good prices last night. So it was the right trade, selling that. Still short some ES futures, but we'll see. Anyway, let's do it. We're going to run out of time here, Bat.
I'm ready.
Tom Sosnoff. He's Tony Batista. This is Tasty Live. And reducing volatility through laddering. You know, you've heard the term laddering before when you remember the financial crisis, just not going back to 2008, but remember the kind of all the dumb banks in Silicon Valley and everywhere else in New York, on both coasts, not in Chicago, but on both coasts. Chicago, we understand.
Chicago's not a coast.
What?
Chicago's not a coast.
I said not in Chicago because we understand laddering in this city. There's plenty of derivative experts here, but obviously in the East Coast and the West Coast, they do not understand the concept of laddering, which in the world of bonds, you know, simply think of it like an inverted yield curve. But not today. We're going to talk about reducing volatility through laddering, which is something that
the banks all had their risk in the front month. They didn't do anything in the back month, so they had no time factor to it.
Oh, they did the exact opposite. They pushed all their risk out to the back months, and then the marketplace inverted.
Right. They had it all in one area.
Yeah.
Right.
This is different. What we're going to talk about today is reducing volatility through laddering, which means basically spreading out your options. Mostly we do put ladders, which means selling, something in the near term, selling some next month out. And by doing that, you actually reduce the volatility of the trade because you get to lower the strikes each month. But let's take a look. Hope we have enough time to get through this. Next slide, please. So selling puts is one of the most favorable strategies for premium sellers. But there's a lot of uncertainty. So we're going to explore ways to lower your risk by selling puts. Next slide. One approach we want to test is to diversify positions with multiple durations rather than just adding to the same position. This approach is known as position laddering, which spreads trades across multiple expiration dates rather than concentrating all the positions in a single cycle. Let's go next slide. So if a trader wants to sell multiple put contracts, such as selling 3 puts with 30 days to go, instead of trading all positions in the same expiration, they can sell 1 put with 30 days, 1 put with 60 days, and 1 put with 90 days. And then we're going to compare these approaches, these two approaches, to using just the 30 delta SPY puts. Now, when you do these and you go out over time, you can do the same strike if you want, or each time you can lower it by usually 1 strike price and get the same amount of premium. So it's just your call. There's no. That's
just that's the math model to it, right? Yeah.
Let's go next slide. So the results show that while a traditional approach generates higher average profits, laddering positions offer improved success rates, reduce maximum losses, suggesting better risk control. Now, again, you can see here the success rate maybe a little better in laddered puts. The largest loss a little less. The largest profits about the same, and the average P&L is just a little bit lower because you're collecting a little less money over. You're collecting the same amount of money or more, but it's generating slower theta. But still, the numbers look pretty good. Maybe a slightly less risk. Let's go next slide. So the results suggested potential risk management benefits, leading us to examine portfolio volatility in greater detail. So we measured daily P&L volatility as a percentage of max potential profit to assess the risk of each approach across different market conditions. Let's go next slide. So the results demonstrated that diversifying positions across multiple expiration cycles significantly reduced portfolio volatility. Longer dated options consistently exhibited lower volatility, with 90-day positions showing nearly half the volatility of 30-day positions. This should not surprise anybody. Selling 30 delta puts in the normal way, just selling puts, 33% volatility. If you ladder out, you go 33, 23, 18 for an average of 25% volatility. You're
smoothing out the volatility curve.
Yeah. You basically reduce your volatility by about 25%. That's all it is.
Mm-hmm.
It's about a 25% reduction in volatility.
No, that's not all it is. That's a decent sized reduction.
Do we do that every time? No, but we do it occasionally. And usually we'll change the strike prices to even make the volatility difference even more.
Mm-hmm.
Make the potential profit less, but make the volatility difference even greater. Let's go next slide. We applied the same analysis to 1 standard deviation strangles to check whether the volatility reduction benefits worked across different strategy types. Let's go next slide. So does it work with straddles? So the answer is yes. Strangles showed similar volatility reduction through laddering, with the average decrease of 7 percentage points and consistently lower volatility than naked puts. Additionally, neutral strategies like strangles consistently demonstrated lower volatility compared to directional strategies like naked puts, regardless of which approach was used. And you can see here, we went from 28% volatility down to 21% volatility. It's a really cool study. And you can see how much, now again, you make a little less money, you improve your probability of profit, and you lower the volatility of the position.
But it may allow you to stay in the trade too. A lot of times volatility expands.
Some people for sure.
Yeah.
Let's go next slide, Beth. So some of the takeaways. Portfolio volatility decreases significantly with laddering, dropping 7 to 8 percentage points, which is about 25% on average for both naked puts and strangles. Neutral strategies like strangles consistently demonstrate lower volatility than directional strategies across all approaches. And laddering enhances risk management by improving success rates and reducing max loss, with a trade-off in average profit efficiency. I like this piece because I like this approach.
Let's take a quick 90-second break and come back. We got more Tasty Live with the opening bell next. See, plenty of time, Sosnoff. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Now, don't screw up, you're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista, he's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista, he's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell. E-mini S&P is flirting with the unchanged, up $1.50. The NASDAQ looks like it's been kind of soft since we've been on the show. Now turning red, down 5. Russell up 2. That's been your leader in the clubhouse to the upside, although really these markets are basically unchanged, with the Dow up 48 and volatility completely unchanged. Bonds are up 8 ticks to 115.08. Bitcoin trying to hold on to its significant gains, 2.5%, up almost 3,000 to 119.9. That's 119.9 after trading up to just under 123,000. Gold is down $85. It is a few dollars off its lows. Big move to the downside, 2.5%. IV rank of 25. I'm going to expect gold implied volatility to continue to go higher if it stays low like this. Same thing with silver, down 1.5%. Sadnov, what do you think here? Close at a high premium last night, as you talked about. We've always said that when we close at a discount, that's the futures close to a discount to the market, usually signifies, a little bit of a bottoming type action. The inverse would be when the market continues to continue higher after the closes at a premium, although we've closed at a premium the last couple of days. Sadnov?
Yeah.
Thoughts?
Thoughts. I'm telling you right now, I'm trying to figure this little sucker out.
What are you trying to figure out?
I'm trying to figure out what to do with gold. That's the first thing I'm trying to figure out.
Gold has had my number for years, Sosnoff. I consider it a commodity, in which I am the world's worst commodity trader, so I abstain from gold. IV rank of 25, down 84. You can look at GLD as a smaller product to /GC. You'll see it here, 308. I put on a gold miners short position, GDX, finally getting a little bit of movement down, $1.55. Back to where I shorted it, Sosnoff. What say you?
I just flattened out I just adjusted my gold position. The only problem, child, I see this morning for us is maybe Coinbase.
Coin, I would imagine it's higher with the market.
Oh, yeah.
Yeah, higher with Bitcoin. Trading up $13.78. Let's see what else is moving, Sadnov. Sorry, all earnings here. You'll notice there's not too many earnings coming out. I'm going to go to the high option volume list. All you have to do is continue going down here until you see it. Oh, there it is. And you click net change so you can put it top to bottom or bottom to top, however you want to look at it. On the downside, you got AI down 7. That's C3AI. Gold down $4 and change. Dash down $4.77. That DoorDash saw enough because they got Vinny's order wrong the other night. Carvana down.
Oh, what happens in those cases?
You punt. Carvana down $3.50. Reddit down $3 and change. Netflix down $3. Palantir and Apple down $2.50. On the upside,
I thought Apple was a little bit.
Well, I mean, come on, it's up
a little ahead of itself
15% the last 4 or 5 days, right? Give it a little bit of a breather with the market. NASDAQ down 17 now. More to the upside, Tesla up 10, MSTR, as you mentioned, and Coin up 13 and 11. UNH catching a bit up 6, Lilly catching a small bit up 5. You can see here, Lilly, I really think it's untradeable, but you can see here it's gotten annihilated the last couple of days. That's all I got.
What's Lilly doing today?
It's up $6.50. I mean, it's a ripple in the ocean.
I needed it.
I know you need it. $750 just about 72 hours ago. Trading under $650, $633, but it is up $8.
A little down move in ES. We got some ES futures to buy. These are just scratches from Friday.
Mm-hmm.
It took a let's see, 14, about 11 handle sell off to get scratched by Friday. From Friday's prices.
I did the same thing in GDXJ. I mean, I needed the stock. The stock rallied for 2 days to get back to unchanged today on a down move.
Yeah.
That's what happens when you go directional.
Yeah. I buy some back here. Mm-hmm. And let's see, we've adjusted UNH. That was a problem child this morning. Coinbase and GLD. Those are my...
You know what, Sadnov? When you put on a directional trade, you have to be directionally correct.
I learned that once when I learned
that early on.
I learned that early on in this business
when I learned I wasn't good at it.
When I first got to the trading floor, I learned that it doesn't matter how good a trader you are, when you're directionally correct, it makes everything a lot easier.
It does make life easier. It sure does. It sure does. Volatility up 11 cents, 1686. Small move to the upside after getting creamed the last week or so.
I remember when I first started, not when I first started trading, but a couple of years into trading, I was cocky and like every other trader. And I thought, okay, I got this whole thing figured out. So
don't we all, though? Don't we all figure that out? That, at some point that we got this figured out, and then the market or something else slaps us so that we can remember that nobody knows anything.
What I did, which was a really genius move, was I decided that I was going to get short bonds, but bonds traded on a different exchange. And back then, you couldn't get filled on another exchange. It was almost impossible. So,
even as a member, you had to call up, and even then they get back to you 30 minutes later to tell you where you got filled. It was horrendous.
So I ended up buying a 50 lot of spreads, a 50 lot of bond spread, because I thought everything we did was 50 lots. Like I would never do a 50 lot today.
Of course.
But a 50 lot of bond spreads. Anyway, long story short, I end up long 50 bonds, not even realizing when expiration was, because I didn't pay attention back then to the bonds. So I come in one morning, I'm long 50 bonds. And this is probably like, I don't know, mid 80s or something. And I'm standing in the OX pit, I'm long 50 bonds. And like today I'd be like, can't believe I'm long 10 or whatever. Like,
Sure.
I'm long 50 bonds. I never even thought about it. And
the notional value or anything else like that, you never thought about it.
And the bonds started to go up. Okay, now I'm long 50 bonds, the bonds started to go up.
How does daddy do it?
Right. And I'm selling them out like 10 at a crack. Just like no brainer, like giving the clerk a hand signal, okay, sell 10 more. And there's these like 2 or 3 new kids that were standing in front of me by whatever they were. They're like, how did you know the bonds were going higher? I've been down here a while. Like I've been down there 5 years, whatever. I've been down here a while. I got this whole thing figured out. I'm like, it was the stupidest trade ever. It was a complete error that I got stuck long 50 bonds. And I'm selling them 10 at a crack.
Sometimes it's better to be lucky than good. I mean,
way better to be lucky. That's what I'm saying. When the market goes your way, it makes you look like a genius.
Sure. And this market has gone in one direction, making a lot.
I'll give you 10. I'll give you 10 more.
Yeah.
I'll give you 10 bonds. You want 10 bonds, Pat? I'll give you 10.
Yeah.
Yeah.
Well, you were dealing with the top row of the trading pit if you were trading.
Of the bond traders.
Yeah, 10s and 50s. They had a hierarchy. I was in that pit.
So back in the mid 80s, one of my friends, some kid I met, I mean, I guess he became my friend. We lived near each other, played basketball together, did all this stuff. So
he schooled you at basketball too?
No. So he lost all his money in the bond options.
It happens.
So, and he was we were about the same age. He's probably like late 20s. He goes, you want to back me? And I'm like, not
back you? I don't even want to know you.
I'm like, we were friends, and I'm like, listen, and I was having a good year. So I'm like, sure, I'll put up the money. So I put up the money.
He puts up the time.
What?
He puts up the time. He makes the effort. He goes in and trades.
Like 2-3 days working out this deal. Where I put up all the money. He did, put this whole deal together, really complex thing, all these things, all these different ways he was going to trade, all this kind of stuff. Okay, 1 week later, he lost everything. Literally 1 week. And the only smart thing I did, because I never saw a dime of that money again, the only smart thing I did was make sure that my name
wasn't attached to it. Right.
Was not attached to it.
Right.
Nowhere near it. So that,
like a limited partnership, sure.
I mean, so I had no personal risk in everything. Because originally it was like, all right, we'll do it under my account. I'm like, he lost everything in a week. It wasn't his fault, though, he said,
Of course it wasn't his fault. He was the only one in charge of the trades. He was the only one with the charge of the size. He was the only one doing everything. Yeah, I remember.
It wasn't his fault. It was the
market didn't cooperate.
It was the 200 lots.
Fault.
It was the 200 lots he did. He had to have.
Right.
Yep.
Well, there's no 200 lots flinging today, Sadnoff. Even the S&Ps.
What's the biggest bond trade you ever made?
Say again?
What's the biggest bond trade you ever made?
In the pit, I had a guy, and remember, I was trading 1s, 2s, and 3s. I was a new bond trader, although I had.
He stuck you with 100 lot.
100 lot.
Yeah, that's a lot.
Yeah,
that's 100 lot is.
And I have to give credit.
$3,100 a tick.
Yeah. They stuck me with 100 lot. I think I lost small on the overall trade.
So you were screaming your lungs out.
First of all, it was sold there on the floor. Like if you bought something, it was sold. If you sold something, it was sold. So anytime I got caught, I would hear all these sold. Somebody would bid up something. They were actually taking their 19s. I was selling 18s. It was the worst I had ever traded in my entire life. I could not get it right. I was, because I had moved up. It was like the middle of the day. So I had moved up from the bottom row to like the middle row. And he buried me. He was an asshole. Yeah. He buried me.
Yeah, they could do that.
I didn't move up again after that. Taught me my lesson.
Anyway, sorry for the old floor story.
Yeah. NASDAQ just caught a bid up 2.
Quite a bit. This is not exactly the
no, but they were down 10.
Opening. I'm taking a quick look around. Bitcoin up 3,300. It sold off about 2,000 off its high. Coinbase has not moved. Reddit just rallied $3. Apple's down $3.50. Doesn't surprise me at all.
After the move it's had, right?
After the move it's had, does not surprise at all. Tesla up 11. I guess that's kind of a surprise. I don't think we have a Tesla position on.
Tesla, IV rank of 9. I wouldn't expect you to have.
We do not have a Tesla position. Oh, here's a good one. We got a good one.
You found one? We got a live one.
I loved this stock. Let's see what we got.
INTC up $1. So I don't know if that's a 5% move. How does Daddy do it?
Well, we got a bunch of positions on there, but we're going to buy back some of the 19 puts we're short.
Yeah, you're only short puts in there, so
yeah, I can't get hurt.
No, you can't get hurt to the upside. No.
Nope.
Don't listen to what he says, ladies and gentlemen.
Other than that, looking at see if anything else is moving crazy this morning, and I do not see it. Last night on air, Chris thought that some of these chip stocks with that news of the 15% would be higher this morning. I was like, I don't think so. AMD's down $1.50, and let's see what Nvidia's doing. It's down $1.50. So much for that.
Okay.
Sharply unched.
Sharply unched. NASDAQ sharply unched. Even the S&P sharply unched. We have an unchanged market, all quiet on the Western Front. Place your bets. We'll take a quick 90-second break and come back. We got the skinny on options. Abstract applications. Nothing says Monday like this, man. Dr. Jim next. I know he's going to have a story about his car too, Sal. I don't know if you haven't been following along. You'll get the full
What
scoop.
happened to his car?
You'll just have to wait 90 seconds. We'll be back.
Crocodiles?
Live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was
Okay.
right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies. So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation. If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We are back, my friend. You know what that means. Time for a little bit more Tasty Live with even the S&P's unchanged. Nothing says Monday like this, man. Dr. Jim, the skinny on options, abstract applications. Okay, spill the beans. How did you do that to your car?
What happened? I don't know what happened.
Well,
I'm seriously in the dark.
Yeah, of course. But before we get into that, I'm actually curious. So those kids that thought you were, just the greatest trader they've ever seen. Did you ever see them again? Like, did your paths ever cross again?
You know, the trading business was weird on the floor. There was like a group of old Dukakis like Tony that would be around forever.
I was 21 years old.
Whatever. There was
the year you talked about, I was 24 years old.
There was a group of people that never changed, like a core group of like, let's say 200 or 300 traders that never changed because they had learned how to survive. And then they
didn't evolve. They just learned how to evolve, survive, like a slug. Think slug.
There's always the same group.
Well, he became a human. We just stayed as like an embryo or an
always
amoeba.
The same group of like 200 or 300 people that were always there. Then there would be like this every month. They would take like 20 or 30 new people. You know, like they'd apply for membership and they get on a seat and they try to figure it out. And that group was most did not survive. And, you know, every once in a while one would survive and then the rest. Because they weren't there that long. So I was always nice to those kids because
they put a wing on your hat on your house.
One, because they did give me a lot of money, and two, because they also because I couldn't stand people that were mean to new people, like because it was so hard down there. I
was never mean to anybody.
No, I there's a bunch of people that were really mean to new people.
Yeah,
and like Beth's dad.
I wanted them to stay. Yeah, Beth's dad was brutal. Brutal people. I wanted to stand right next to me because I needed a new wing on my house.
Like Beth's dad. But other than that, everybody
I killed
was
him
like
with kindness.
I was like really nice to new people. But a lot of people down there were not that nice.
Yeah.
But you know, you got used to them. It didn't matter because you just got so used to them. You didn't care if they were nice or not.
Yeah, but Beth's dad is evolved. He's a nice guy.
Oh, he's evolved, but it took him 40 years.
Yeah, at least.
Oh, okay. All right. Well, that's good stuff. So Tony is not the only one that had a car situation this weekend. In fact, he wasn't even the first one. because I
was the
able to
latest
kinda
one.
jump.
You were the first one.
Well, I
jumped the
don't
shark, man.
go on.
I want to be like Dr. Jim.
I don't want to go on Twitter to read about myself through Tony's eyes. So I passed by. So what happened?
You don't want to see what I say about you on Twitter.
know,
That's made my whole career.
I don't want to know.
So Friday night, right? It's heavy rainfall here in Florida. We were having movie night at my father-in-law's house, and he lives like 8 or 9 minutes away. And so Autumn took the kids down there. I had some things to do at the house, so I was actually behind them, right? And I mean, it was like a heavy downpour. And I'm like, I kind of don't really want to go, whatever. Anyway, I hop in the Civic. I head down there for movie night. You know, it's all good. We watch the movie, whatever. So we're leaving. Now, Autumn's in the Pathfinder with the kids, and I'm in my car by myself. And we're leaving. And
It's not raining at this point, correct?
It's sprinkling. It's sprinkling. At
Basically
this point.
not
It's
raining.
it's
A
nothing.
veteran
But it's
driver
not-
like yourself of the mean streets of Chicago, you should be absolutely
I'm guessing
fine.
that
Let me tell
Autumn
you
is like
something. Let me
10
tell you.
times the
Hold
driver
on.
he is.
Hold on. Let me tell you something about Dr. Jim on the mean streets of Chicago. I dominated those streets. I dominated those streets so thoroughly.
There were
that a couple
grandmothers that
times
tried to pass you as you were driving. I've been behind
I
you
was
on
going
the
the
expressway.
wrong way down a one-way a couple times, and I was just zigging and zagging. I was
Okay,
like, they
I've
don't even
heard
know.
stories that you quite possibly the worst slow driver in the history of the state of Illinois.
He fits right in Florida. But go ahead.
You've been right in Florida. Got it.
Most of the time, I'm taking too many chances. Like most of the time, I gotta control the aggression. But anyway, so we go. It's like 9 o'clock at night. It's dark outside, right? It's difficult to see whatever. So there's one very clear way to go back to my house from my father-in-law's house. It's very obvious. Like this is the way you should go. So we pull out of my father-in-law's house. We're I'm following Autumn. And we get to like the spot that we would normally keep going. She turns to the right, and I'm like, "What is she doing?" I'm like, "You don't go that way. You don't go that way to get home from Gandu's house." My kids call my Autumn's dad. They call him Gandu, which is short for grand dude. So to go home from Gandu's house, you go this way. Anyway, so I keep going, and the next thing I know, man, I'm in like a foot of water. And I'm like, man, I don't know. And the Civic is going great. I'm like, man, are we going to really do this? And I'm looking out ahead, and it's like, it's not getting any better. It's getting worse. And so I had to make a split-second decision. And I was like, should I back up or should I keep going? And I'm like, man, you got to risk it for the biscuit, man. We got to keep going. I made it maybe another 7 feet. I made it like another 7 feet. All the lights flickered, totally shut down. Tried to restart it a couple times. Nothing. Nada. Civic stuck in the flood. And so the next thing I knew, I'm calling tow trucks. I'm doing this. I'm doing that. And
hold on. How did Autumn?
It looks like the Civic might be done now.
How did she know to go the other direction?
Well, because she could see ahead of her.
Because they're a better species than us, Sosnoff. That's how she knew.
So she could see ahead of her.
Headlights.
She
her
could
headlights
see ahead.
Are better than mine.
I said, I'm not going to go that way. That would be stupid.
So she saw the water.
It's just like. It's no. Tom, this is simple. It's just like that kid you had to deal with. It wasn't my fault, man. Things just happen.
I'm just asked this question.
Things
So
just happen.
she saw the water. She goes a different direction. All right, and you decide not to follow her.
I faded her. You gotta fade her. I gotta fade her, dude. That's my job.
And so that's
correct.
When you called her later and said your car,
I don't make that
called her
phone
2 minutes later. But here's the funniast part, right? So anyway,
I'm going out for ice cream. Okay, I'm not making.
Did she come and get you, or did she tell you to take an Uber home?
Well, no. She came back in circle. But no, here's the funniest part. The funniest part. So my car, I had to get it towed home. And it's probably totaled. It's probably
because you didn't have Bat to bail you out again like the last time you needed something done.
I know, man. I know. That's a whole separate deal. But when my battery died,
all right. So your car's underwater. You got bailed out. She picked you up.
No. But hold on. This is the funniest part. So we're driving, and the streets are all flooded. And as soon as she turned and I kept going, all the kids back there said to Autumn, they said, "Mommy, why is Daddy going that way?" And then Autumn said, "Well, that's the way we usually go home, but that street looks like it's pretty flooded. So, hopefully Daddy will be okay." But then my kids said, "Well, what happens if he drives in the flood and he can't get out?" And Autumn goes, "Well, his car will stall out and it could get ruined." And as soon as she said that, I called her. And she's like, well, here's Daddy. She's like, I think he's stalling out. And I said, hey, I'm stalling out. And she started dying laughing, and the kids started dying laughing. Oh, it's pretty funny, man. It's pretty funny. So anyway. So I don't know, 2010 Honda Civic, guys, what do you think? What am I getting back? If this is total, what am I getting for this? $6,000? $9,000? What do you think?
I don't know.
A lot more than you deserve. I mean, I should have known the day you lost your flip-flop in wet cement.
Just
that this was
consider it
gonna
a
happen to you.
blessing. Consider it a blessing. It's a gift from the gods that they got. They took the card. It was time.
Yeah, I think it was time. I do think.
Did you
it was
learn
time.
anything from your experience?
No, not a chance.
I don't know. I just it was a
you
bonehead
stop
play.
and go backwards.
Not a chance.
No, I couldn't stop and go back. Because the Civic actually made it further than you would give it credit for. Like I made it probably a block to a block and a half in a foot of water before it shut down. So it was kind of like, I mean, I was an at the money vertical at that point. It's 50-50, man. It's 50 we go forward, it's 50 we go back. And it's like, man, I gotta flip it in reverse. I gotta do this and that. It's like, no, we go forward, man. Onward.
All right, dude.
Anyway.
Like I said, I don't think you learned anything. All right, destined to make the same
maybe
mistake
not.
again.
Yeah.
All right.
Can't help you.
What do you got for us today?
You want to do some finance? Let's do it. All right. And so I am waiting on my insurance guy to call anyway, calculating the risk of going to zero. All right, so here we go, guys. The risk of going to zero. So, this fits right in with, a 50 lot of bonds, Tony's 100 lot of bonds. It's like the risk of going to zero for both of you.
Back in the day,
jabronis.
now I even avoid
That's
them.
right. Was very, very high. So let's throw some numbers around the risk of going zero this morning. So Beth, hit us here on the opening slide. This beautiful, beautiful Monday morning. So at Tasty, we believe that a high probability approach to selling premium is a solid foundation to an active portfolio. But every strategy, even the best ones with the biggest gimmies, Tom, have non-trivial gotchas that must be accounted for, with the biggest risk to us being the trade or series of trades that do so much damage that they take you down to zero. So, gentlemen, have you ever taken one of your early accounts to zero? Have you ever gotten close? I'm curious.
Have we ever gotten close to taking an account to zero?
Yeah.
Below zero. Zero's not an accomplishment.
Never something that was like that mattered. I mean,
Only Bat's account. He was trade through Bat's account, then he would take it to zero. But his own account, he never did that.
No, never.
Case's account, he did that too. A couple of people. He's an equal opportunist.
Oh,
Don't
I
worry about
remember
it.
Case's account. Oh, I remember that.
I mean,
I remember that.
They're never something that
day
mattered,
3.
like his kids' account.
It was like day 3, and he's like, all right, let's do these gold straddles. So he's like, you ready? I'm like, she's not ready? I'm like, oh my gosh, this is unbelievable.
I've been in this business a long time. Never, ever taken my account to zero, ever.
Oh, that's so funny, though.
But that doesn't
that's
mean
so
I haven't
funny.
had big losses, because I have.
What? And you've taken plenty of other people down besides you, that's for sure. And so, all right, but let's attach some numbers and some probabilities rather than just these yesteryear stories about I was in the pit, I was slanging bond spreads, I was this and that, all that kind of stuff. So Beth, hit us on the next slide. So what we're going to calculate this morning is the risk of ruin. This is something we've talked about before, but I think, man, this morning, I hope that for all the new traders out there, even the seasoned traders out there, this gives you a whole new appreciation for how to best mitigate this risk, because that's why we're having this conversation, right? How do we mitigate? How do I minimize this risk so that it's not on my radar? It's not something I really have to deal with. Okay, well, if I look at an equation for the risk of ruin, it's going to essentially be, what is the ratio of the edge that I have in whatever strategy it might be? And then the exponent is how many units do I have to risk? Like how big is my capital? How big are my trade sizes? This is a very classic definition, very classic model for the risk of ruin. It's not the only one that exists out there. You can find slight iterations, but as probability traders, this is probably the one that makes the most sense for us. So this is the one that I wanted to use. And of course, the edge is calculated by basically just taking, the expected value differential of your wins relative to your losses. And assuming that's a positive number, which as premium sellers with implied volatility being overstated, it is going to be a positive number for us on average. That's going to be what your edge is in this situation. All right, so what I want to do now, let's go through defined risk and let's go through undefined risk. So Beth, hit us on the next slide. So with defined risk strategies, let's say this is a very classic setup. You've got a short vertical spread with the following stats. The probability of a win, 70%. If you win, you win $1. The probability of a loss, 30%. If you lose $2. If you do the math on this, you'll actually see that your edge here is about 10 cents. Or if you take it as a percentage of your maximum loss, it's 5%. So 10 cents out of $2 is, of course, going to be 5%. So look at these numbers, guys. I'm curious if you guys are surprised, because I was a little bit surprised, and I won't tell you which way. I want to see where you guys are at. If you have 20 units to risk, so that's 5% per trade, right? If you have 20 units to risk, your risk of ruin is 13%. That is the risk that at some point, if you play the game long enough, you're going to zero. Does that seem high or low to you guys?
Seems high.
Tony?
Same.
I agree. I was like, wow. I was like, that seems high. That's 1 out of every 8. 1 out of every 8.5. I'm like, wow, that seems incredibly high. I'm like, okay. But the numbers are the numbers. The math is the math, right? You're not even arguing with me at this point. You're arguing with math. But what if we shrink our position size down from 5% to only 2%? So when it comes to defined risk, this is more closely aligned with the range that we try to live in, like 1 to 3%, right? So you're right there smack dab in the middle. Now look at the risk of ruin. It collapses. It's actually less than 1%. So the risk of ruin is less than 1%. Now, keep in mind, there's no management involved. There's no, 21 DTE involved. There's no additional niceties that we like to tack on top of this. This is just the straight numbers kind of from start to finish. So now you're less than 1%. What do you guys think about that?
See, here's the thing. You're doing this for defined risk. Defined risk.
We're going to do undefined risk on the next slide.
I know, but for defined risk, our mechanics have always been less 0.3% to 2%. Like if you've written us an email over the last 7 or 8 years, or maybe 10 years, the standard response for us is for defined risk trades, 0.3% to 2%. We prefer
in terms of position size. You're talking about position size.
Talking about position size, amount of capital use position size. 1% would be it'd be a lot for us. It'd be a lot for a medium-sized account. It would be way too big for a large account. It would be, you could go a little bit higher than that for a small account. But we're mostly just to give you an idea, Tony and I are mostly in the 0.2 to 0.3% for defined risk. We rarely get up to 0.5% for defined risk. And for a smaller account, a max of 1 to 1.5%. So this is where we already are. It's the undefined risk that you really have more risk of ruin.
Of course. Yes. And so this is good though. So this kind of highlights, because I know that there are a lot of traders out there that have limited capital. They've got 10,000, 15,000,
sure.
20,000, which is a fairly small. So they're going to be naturally testing and trialing bigger trades like 5%, 7%, whatever. And I just want to shine the light on the game that they're playing. I just want to make sure that they understand what they've signed up for. The risk of ruin is exponentially higher. Whereas if you're at 2%, and if I was at 1%, I didn't run the numbers before the show, but you can obviously see that's going to be, that number is going to be so small, it's barely even going to register in terms of the risk of ruin. And so this is really, really good though. But again, remember, this does not include management at all. Okay, let's go to undefined risk though. So Beth, hit us on the next slide. So this one is a lot trickier to do simply because there is no predetermined loss point like there is with defined risk. So you can't really run the numbers the same way that you can with a defined risk strategy. But again, by the very nature, by the definition of the strategy, the risk of ruin, the risk of big losses is obviously going to be much, much higher when it comes to undefined risk strategies. And so the way I approached this calculation, just to give us some type of rough idea around the risk of ruin, is looking at the buying power effects. Because the buying power effect on a given position, that corresponds to right around kind of that 95% confidence interval on a normal distribution. So essentially, that gives you a rough idea of, all right, this is probably, my worst case scenario, 5% of the time or less. And so when you start to think about what the buying power effect means, it doesn't mean it's the most you can lose. Like, just to be very clear, you can lose more than that, of course, but it actually corresponds and lines up with that 2 standard deviation level. And so now if we think about, okay, if I'm putting up 5% buying power for an undefined risk position, which again, that's right around where we typically suggest for position sizing. When you have a larger account, obviously you can get away with a much smaller position sizing. But now the chance that you hit a 2 standard deviation move is 5%. The chance that you hit 2 consecutive 2 standard deviation moves is only 0.25%. And obviously the numbers are going to be even smaller for a 3 standard deviation. And so this is where the most damage can be done when it comes to the risk of ruin. But the reality is, if you're able to actually get in independent, uncorrelated positions, which is really hard to do, then the likelihood that you do have to face anywhere near a risk of ruin, if your position size is in check, is actually quite low.
Okay, because this is more like it for undefined risk. I would buy this.
Well, the math is
Yeah, exactly.
Yeah, no, I'm saying, but I'm glad to see this math because this kind of supports everything we've been saying all along.
Sure, right.
Yeah, and it's just a couple of comments. I mean, it's very difficult. It's very hard to find uncorrelated trades, though. I mean, that's just the truth. And so, like I said in the green box here, the risk of ruin is probably overstated with defined risk, especially when you start bringing in position sizing being less than 1%. Now it's like, all right, this is probably not something I need to worry about. But it's also probably understated here with undefined risk because everything is so tightly correlated, right? Like you do a position in the NASDAQ and you do a position in AMD, like there's obviously going to be a ton of overlap there. It's very difficult to find truly uncorrelated positions in the market.
Sure.
And so you're going to have things that are tied together. But what I always suggest to people, if they're really concerned about big losses, they're really concerned about catastrophic moves, whatever, I think one of the best things that traders can do for a while is really focus more heavily on indexes primarily with their trades. Don't necessarily trade the individual stocks for a little while, maybe give them a rest, because the reality is, and I'll be curious to hear what you guys think about this, a 3 standard deviation move, a 4 standard deviation move, a 5 standard deviation move, the really damaging moves are far more likely to happen with individual stocks than in the indexes. I mean, that's just a fact. And so if you're looking to smooth some things out, maybe just do the indexes for a while. What do you guys think about that as a little tidbit?
I think it's good. I like it.
Real good.
Tony, what do you think?
We're there.
Yeah, no, real good. Real good. I mean, the risk of ruin here was obviously more than that Civic. So I understand why you went with this segment today.
Well, the risk of ruin for the Civic on just any given sunny day, I mean, it wasn't at the money vertical. It was 50-50. And so the fact that you put me in a downpour, I lost the Civic. I lost my pair of slides. Those are gone now too. And so so not only did I lose a pair of slides on the streets of Chicago, one of which is actually part of the city still to this day, I lost a pair of slides on the streets of St. Petersburg, the mean streets of St. Petersburg.
Oui.
St. Petersburg, Florida. Let's be clear.
Yes, that's true. I don't know that you're going to find me in St. Petersburg, Russia anytime soon. Let's get him a few takeaways. And let me get on the horn with my insurance guy.
Leningrad.
So, what's that?
Leningrad, I think they used to be called before St. Petersburg, Russia.
Oh, it hasn't always been St. Petersburg, Russia?
No, wasn't it Leningrad?
I think so.
I think so.
Okay.
Maybe I'm wrong. I don't know.
Fair enough. So our biggest risk is the outlier move that gets away from us, or even more specifically, the series of outlier moves that get away from us. And the risk of ruin calculation gives us a more concrete illustration of how likely that is to occur, with our best defense against disaster being a committed effort to staying small. And yeah, I mean, you saw the numbers yourself, especially with defined risk. I mean, if you shrink down your size, and the same thing with undefined risk, right? Like if instead of being 5%, you're 3% per trade, you're really just, and not to, well, one more thing, all of this too assumes you haven't built up any type of wins to shield against any losses, which again, as a high probability trader, you're probably going to have some kind of little piggy bank. It may not be much if you just got started, but you're probably going to have something. And so that's important to remember too.
Sadnov, Leningrad is called St. Petersburg. now since the 90s. And you know what, Dr. Jim, I only got to meet Autumn a few times, and I really didn't, your wife, Autumn, and I really didn't get a chance to, have deep conversations with her. But the fact that she didn't call you to tell you that, man, that water looks real deep, don't go that way. I have a newfound respect and love for her.
Oh, that's so funny, because when we got home that night, I told her, I said, why didn't you call me? I said, hey, when you saw me going forward, like, you knew what was about to happen. She had about 30 seconds until it was over.
Yep.
I'm like, why did you not call me? So
you know everything.
It's her. No, it's her fault.
Let's take a quick 90-second break and come back. I got more Tasty Live after this with a market measure next. We'll be back in 90 seconds. It's Tasty Live. Good job, Dr.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
I didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate you holding on the line to say that to us. So thank you.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. And sad enough, a little bit of a bid in the market. Even the S&P's up $6.50. NASDAQ up 44. Russell down 6. Russell up 6. NASDAQ up 44. And the Dow down 28. So a little bit of a mixed bag of tricks. We got even the S&P's catching a little bit of a bid here. Volatility in by 10 cents. Sad enough, what's your feel for the day? Holding pattern? Volatility down again, small.
Yeah, this is. I don't have a feel for today.
Yeah, I don't either. I thought we were going to be a little bit softer, to be honest.
I mean, if you honestly, I thought they were going to be a little softer today and maybe this week. The tape action clearly looks like an absence of sellers.
100%.
If I was going to say, hey, give me the read. Just no sellers.
No, we had a rich close on Friday.
Yeah.
We had a market higher. It seems like
we're still below the close on Friday. Just on the S&Ps, the NASDAQ just went above the close on Friday by about 5 handles.
It was over what a close, but yes, rich close. Mm-hmm.
Yeah, I'm not sure what's going to change the tape action here, but whatever. You
don't really have any earnings to do anything with the market.
No, it's just going to be expiration week.
Mm-hmm.
Makes more sense when we're going to be going.
August has been like a lamb. Almost
we're going to be going late next week for us to crash.
This is true.
When we're in Mexico City.
That's right. I did go away for one day Friday.
Right.
Yep. And you had 2 weeks ago. You had that big move lower by 100-something handles.
Tony and I are going to be in Mexico City. If you want to come see me in Mexico City, we do have a few spots that we're giving away. It's a paid-for event. But I'm giving away these spots. AI digitization. Can't even say that. In the future of risk-taking, it's a brand new discussion that I put together, and we're doing it Wednesday night, August 20th, in Mexico City. I can give you all the details, or you can just send an email to support@tastylive.com if you are in Mexico City or around Mexico City. Also, Thursday night, we have like a panel type thing where it's called Growth in Equities and Derivatives. That's a little bit, I'm not running that one, so I can't tell you exactly, who's on that panel and stuff, but you're more than welcome to come Wednesday night, because that I'm giving the keynote at 6 p.m. And I can't remember, do you remember the hotel?
No, you kidding me? I don't remember those things.
Yeah.
I got you for that. You're like my concierge.
Yeah, it's cool. It's a very good show. It's the biggest risk management and trading show in all of Mexico in 2025. So looking forward to it. Love the guys from Riskmatics.
I still can't get over this Photoshop picture of you. This is amazing. You must have paid Cassie some big cash for this.
Oh my God.
Honestly, come on. She took your cheeks away.
And
she took one of your chins away. I mean, this is ridiculous.
I like it. I'm going with it.
Sure, too.
Let's go to the next.
This is like a Tinder profile picture. Are you going on Tinder or something like that? Or Hinge? Are you?
Maybe. Maybe. Anyway, if you want to go, just drop us an email. support@tastylive.com. Also, next week we're going to be in Chicago. This week we're going to be in Chicago for our big show. at work by 11 if you want to come. Just go to tastylive.com/events. Beth, you want to flip that? tastylive.com/events. We're going to be at Talia Hall on Friday morning. Doors open at 8. Show starts at 9. And really looking forward to seeing everybody there. tastylive.com/events to sign up. If you signed up and you can't make it, just let us know. Love to hear from you, because then we can make spots available for other people. And we also have the right number of everything, giveaways and whatever else we're doing there. But looking forward to seeing everybody. It is a spectacular venue, Talia Hall, one of the nicest in Chicago. So, but it's in Pilsen, and which is just, I guess you consider that South Side.
Yes.
Just near
it's
Chinatown.
South Side. Yeah, it's South Side.
But anyway, love to see you at Talia Hall in Pilsen. It's about a 10-minute cab ride or Uber ride from most of the hotels in Chicago. It's going to be a crazy weekend here too, with the Air and Water Show and everything else that's going on in this city. It's going to be up for grabs this weekend. So come to the best city in America and come to the best show in trading. Friday morning, the Bat and I are going to do we wing them and how.
Yep. Going to be fun.
Right? It's going to be fun. And like I said, doors open at 8. We'll have an hour to talk. We'll stay a little bit after. So show starts at 9. You'll be back at work by 11 if you have to go to work. If not, you can hang out.
No worries.
Parties at Bat's house, after party at Bat's house on Friday night.
No, you're making smash burgers. I'm not serving any
Friday
food,
night,
so they're definitely going to want to go by your place.
Pool party at Bat's house. I'll put the directions up on the board when we're doing the show. We're also going to give away some Cubs tickets. So if you're a Cubs fan or you want to go to the Cubs Pirates games this weekend, I believe that we have a couple pairs of tickets to give away, and they're owner's box seats, so they're going to be really nice. And we'll be giving those away at the event as well.
Getting the Gumata treatment. The
Gumata treatment.
The owner's suite. I mean, that's the Gumata treatment.
And not at Cubs games. Too public.
Right.
But what I mean by the owner's box is that the owners actually have a box, but that's not where you're going. But
so you're not getting the Gumata treatment.
You're not going up to the Ricketts spot.
Oh, I'm sorry. I thought you get the Gumata treatment.
You're getting the seats behind home plate or behind the dugout.
You get on TV.
The good seats.
Yeah,
These are the good ones.
seats. Yeah. Yep. So wear a clean shirt.
Clean Cubs shirt. If you're a Pirates fan, you can't.
At the very least.
Let's see. And that's about it. That's about it for this week. We got a bunch of other stuff going on, but we'll tell you more about it, including the open house and things like that. But for now, we're a little behind, so we're gonna get to our market measure. Also, as soon as the market measure is over, there's no Scott today, so Tony and I are gonna take some call-ins if we have time.
Breaking news: we have Scott.
Oh man, saving the day! My man Scott Sheridan from the Scott Sheridan Studio is going to be on the show. I missed him.
Well, he was on that calendar as a no-show.
It's a no-show. Yeah, he had one of those.
It was my mistake.
One of those mafia type jobs, like one of those no-show jobs.
Oh, okay.
Garden leave or something.
We didn't think he was around.
I made a mistake.
Yeah, well, I mean,
isn't everything, Beth?
Beth, your team's been, let's get your act together over there.
I know.
mean, where is your what do you call that when you get together at the end of the day and talk to everybody?
Yeah, where's your little pitch? I mean,
pitch. Where's your pitch?
You guys are a little out of sync. Maybe maybe you guys need to have a little meeting and
maybe you guys should have a meeting on Friday and discuss this.
Yeah, late Friday at about 3:15, 3:30, and figure it all out.
We're doing it in the middle of the day.
Get everything right.
You guys done? Anything else?
Solid right now, Beth. Thank you.
Great. Market measure.
Market measure, sponsored by the CBOE.
People who live in glass houses.
CBO, sorry.
All right.
Oh, still going, still digging.
All right.
So evil.
So we decided to take a look at something we don't usually look at on market measures, which is the relationship between a bunch of different asset classes. SPYs, which is the S&P 500. Let's think about it in bigger terms. Okay. Forget about SPY. S&P 500, US dollar, and bonds. We talk a lot about all of these because we trade all of these. I currently have lots of positions on in the US dollar, lots of positions on the S&Ps, and a bunch of positions on in bonds. So these are clearly a topic that we trade. We basically practice what we preach. So I think getting into a little more detail about how these are all related to one another is kind of something that's important and something that we don't talk about much. The first question I'll throw out to the bat is S&Ps, US dollar, and bonds.
Yeah.
We used to say bonds and the S&Ps were inverse.
Inverted. All my career, or most
all
of
your
my
career,
trading
except
career
for
on
the last
floor.
25 years, the last 20 years.
On the floor was an inverse relationship.
I got it. Meaning that stocks and bonds, they go different directions.
Stocks started selling off, markets was going higher.
Stocks go up, bonds go down. Stocks go down, bonds go up. Flight to quality.
They've been uncorrelated as far as I've been able to tell since then.
They've been non-correlated for the last 20 years. Almost. Since like 2008. 17 years. So basically, there hasn't been much correlation between stocks and bonds. Not at all. You want to throw the US dollar in there? There used to be a relationship between the US dollar, stocks, and bonds. But that relationship is essentially non-correlated now. So when you look at these three asset classes, it's almost impossible to say that if one does one thing, that the other one's going to do something else, or what the other one's going to do.
Yep.
The only thing we kind of know for sure is that when the S&Ps go up, volatility goes down. That's all we really know.
Yeah.
And when the S&Ps go down, volatility goes up. That we know for sure. That's never going to change. But how the S&Ps act related to the US dollar, or how the S&Ps act related to bonds, I don't think that's something you can figure out. I think that's something you have to respect when it happens. Let's go next slide. Back in April of 2025, we saw the simultaneous move down in equities and bonds while seeing a rally in the US dollar. Since then, we've seen bonds stay flat, equities go up, and the US dollar go down.
Yeah.
None of it makes any sense. If you're trying to...
Not if you're looking for correlation.
If you're trying to build some kind of a macro picture, none of it makes sense. This is what I love about this move, is that it totally threw Ilya and Chris off for a loop. Thinking from the perspective of correlations and long-term asset relationships, do these assets have a long-term price relationship, or is the correlation between them spurious? Spurious, I meant. Let's go next slide.
Whatever you meant, doesn't really matter.
So, SPYs, TLT, and UUP. We used all the
UUP is a
ETFs.
dollar index, right? US dollar.
Yeah. These are the S&P 500, the long bond, and the US dollar. We just use the ETFs instead because we have more data for the ETFs, and it lines up with everything else we do. So we took 10 years of data. We looked at the long-term correlation between these three assets, and we looked at the short-term correlation in a snapshot, and we're going to compare the results. Let's go next slide. So this is the 3-month correlation. And what's interesting here, well, first I'll read this and I'll explain. So when looking at the correlations the last 3 months, we see that surprisingly, the dollar and bonds have had a near zero correlation, while the dollar and SPY have had a more negative correlation than others. But the reality here is you couldn't look at these indexes and make a directional prediction.
No.
Okay. So when you start to look here, you look at UUP and TL, the dollar and bonds, a negative 0.2, the dollar and stocks, a negative 0.8. I mean, I'm sorry, the stocks and the dollar, negative 0.3, and the stocks and bonds, a 0.08, which is basically nothing. So what you're looking at here is virtually no correlation, meaning that you can't predict. You can't say, oh, like here today, the US dollar is against the euro.
Up a little bit?
Oh, it's down. US dollar is down pretty good today versus the euro. The US dollar is down
UUP
600.
is up, though. The dollar index is up.
And bonds are up small, and the S&Ps are up small. There's no way you could, it's not something that's predictable. Okay, let's go next slide. Or bonds up today, stocks up today. Okay, With the SPY and the dollar having a more negative correlation than the others in the short term, we can't conclude this relationship is just temporary until we look at the long-term picture. How have the correlations between all three of these assets classes looked over time? Let's go to the next slide. So here, in general, the UUP, which is the US dollar, shows strong negative correlation with the SPY over 3 months, indicating dollar strength pressures short-term stocks. While in 10 years, TLT consistently showed negative correlations, particularly with UUP, making it a useful hedge against dollar strength. I'm going to question that
Even those
conclusion.
findings, right?
I'm going to question that last conclusion, that our research team made, because they're thinking that, okay, there's something that you can draw from this that's a tough one for me.
I mean, it was a dollar hedge against stocks. I mean, that would be undoable in practical application. You're not going to get long or short UUP because your portfolio has long or short delta in it.
I don't think that looking at any of these, looking at 10-year price correlations or looking at 3-year price correlations.
I mean, this is a good to know type thing. I don't know how I can benefit financially from it.
I don't think you can. The way you benefit financially from it, there is a way. The way you benefit financially from what we're doing today.
Not listen to the headlines?
Is not listen to the headlines. They tell you, oh my God, the US dollar is dropping. So gold's going to be higher.
Right.
It's actually down $83. You know what I'm saying? Like, don't think. This is my whole argument. That's always been the argument about all these big, all this macro bullshit that people spew nonstop, because there is I want somebody to call people out on this. There is no way that you can see a lower or higher dollar and make a bond call. And there's no way that you can make a bond call that's going to impact what you're going to do in the stock market. You just cannot do it.
Yep.
So a lot of the chatter, okay, it's totally okay to say, hey, bonds are oversold here, just based on a completely objective view or subject. I don't care what it is, but you can make that call just based on price action. But you can't make the call that bonds are going to go higher because stocks are necessarily going to go lower or higher, or the dollar is going to go lower or higher. You can't do it. There's nothing to support that. Let's go to the next slide. This is a good one. From 2020 to 2025, SPYs and the dollar have generally had an inverse correlation. Over longer horizons, however, there's no persistent long-term relationship between the US dollar and the equity marketplace. And you can see that right here. And they always just seem to get back to one way or another, either the SPYs are rich or dollar, either SPYs are rich or the dollars are rich, but in this case, the dollar was rich and then SPYs are rich. But there's no play here. Let's go to the next slide. And for bonds in the dollar, they've seen the same inverse trend as equities in the dollar, but the day-to-day relationship between bonds and the US dollar is essentially non-existent now and in the past. It's just, there's nothing there. You can't trade off that. This is the key takeaway. It's not something that's tradable. And the reason that we talk about this like this is because if you want to trade the US dollar, go for it, man. It's been a good trade for us all year long. Long yen by being short puts and being short strangles in the euro has been a good trade. It's a good trade today.
Yep.
But don't think that you're going to be able to tell from what's going on in the bond market today, up 8 ticks, that you should be long or short US dollars. And don't think you can tell by being long or short US dollars whether or not you should be long or short S&P 500. Let's go to the last.
Well said.
So after researching the data we presented, we cannot conclude a long-term daily statistical relationship between bonds, stocks, and the US dollar, as we've been saying all along. Even though equities and the dollar have had a little more inverse relationship or inverse correlation in the last 3 months than others, looking at the history of 3-month correlations, it seems like this moment is statistically insignificant compared to the long-term averages.
Subject to change, Sosnoff.
Again, when it comes down to the world of investing, the more you know about trading from the trades that you make, the more valuable that is as potential wealth creation. It's not trying to figure out what's happening around the world.
Very good, sir. Good job out of you. Basically unchanged market here with even the S&Ps and Dow just turning red and the NASDAQ and the Russell still green. Volatility basically unchanged, and bonds still up 8 ticks. We'll be back in 90 seconds. This is Tasty Live. What comes up next, Saz? Oh, joy, that's right. Your friend and mine, Mr. Scott Sheridan, coming up next from the Scott Sheridan Studios. We'll be back in 90 seconds. It's Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You're gonna want to put natural gas on your list for routine rundown today. You're me. I'm Futures Katie from the future. Can you please explain to me buying power reduction? Buying power reduction is basically how much you have to set aside per strategy when you're entering a trade. One of the coolest things about stepping into the futures world for me was learning how all of the different asset classes are correlated and non-correlated to one another. So it's really opened up my eyes to all the different products that are available and how relationships that I saw before might be enhanced by these new products that I've now been able to trade.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tomas, we are back, my friend, and this is what I get to say enough out of you, because I really had enough out of you today. Tasty Trade World Headquarters, your friend of mine. Boy, did I miss you, Mr. Scott Sheridan.
That's not what you were saying a minute ago.
Yeah, that's not what you were saying a minute ago when everybody was pretending I wasn't here, going, oh, maybe.
I'm only as good as the information I get, and
we get
that's the weak link.
Tom, I got a question for you. Going back to your softball days.
Yeah.
In your prime.
Yeah, my prime.
All right.
Okay, let me think back. Okay.
Okay. So yesterday I was watching a little bit. It was the Sunday Night Baseball. So it's Cubs, Cardinals.
Yeah.
Okay, so they mic'd up PCA in one of the innings. It's cool. You know, he's out in the outfield.
Yeah,
It's not just him.
It's a great feature that they do. It's
Yeah, I love
awesome
that
for the
feature.
fans.
It's a great feature, except the guy, not PCA, but the batter crushes a 2-run homer. You see him flying over while he's mic'd up. Tremendous restraint not to say something that shouldn't have gone in there. Hey, were you ever mic'd? Did anybody care what you had to say? Okay, more importantly, do you think that you could have held your composure while you were running? Could you have even run?
Running? He didn't run.
It's like drifting over for the fly ball. That's impressive.
Okay, first of all,
Let me tell you something. If he couldn't reach it like this, and not even talking about bending, and third base. I mean, if it didn't bounce
first of
into
all,
his glove.
I never played the outfield because I don't actually.
That's where they put the players to die, right?
Too much running.
Like bat.
It's not even just too much running.
It's hot. It's hot. You know how far it is from the dugout?
I don't like running out there and back each time.
Right. You know how far it is from the dugout? You're winded.
And I also don't like, I mean, I'm going back a lot in my history.
Yeah.
The strength of my game was not seeing the ball off the bat. As like some people can, like PCA is probably the best I've ever seen.
It's unbelievable.
He gets a jump on the ball. Like, it's just unbelievable how that kid gets a jump on the ball.
Unbelievable.
I didn't have that jump. My step was a few steps behind him. So I didn't feel like it was ever my strength. I loved.
You played to your strengths.
I played the infield.
Which was basically, if we were on the third base side, you were third baseman, so that you can walk right to the dugout right there. And if we were on the first base side, you played first base, so you can walk right into the dugout.
First base. I don't like first base.
Mm-hmm.
First base I never liked. I liked third base, and
that was it.
No,
if I can't play third base, I'm gonna take my bat and I'm gonna go home.
I thought you pitched.
I did 1 year.
1 year.
Then we got Butchie to come. Oof, done with you.
Butchie can pitch?
No, he stunk. I mean, he really stunk. We had nowhere else to put him because we already had Tony at catcher. Now we had nowhere else to put him.
Did you see the video? It's for the Kraken. It was, I don't know who the player was, but he was 5 feet. They were in a river shooting a video, and they had the Kraken. You haven't seen this? Mm-mm. They have the mascot for the Kraken in the river.
I didn't see it.
A bear. You gotta see this.
I didn't see it.
About sports, it's great. A bear. Like, I think one went away, and then another one starts coming, and they weren't moving that fast.
I'm still getting over Sadno saying he didn't have to jump. That is really that is. I mean, I wish you could see it back in the day. That was an understatement.
I didn't have the jump.
He did have quick reflexes.
I didn't have the jump.
Yeah, I'm pretty good.
Yeah, but not in his legs. Like his hands, yes.
As you said, if the ball came to him, you still have your mitt?
Somewhere.
It's hard to believe that the other team would always pick a fight with me, though. Do you know that? It really is
my mitt's signed by Mark Burley.
Is it?
Yes.
Oh, that's good.
Yes, I've always been very
sold.
No. It's actually possible.
No, sold he could find it.
Oh, I have my mitt, but it's possible.
You have your mitt?
Yeah, from later in life, not from my kids. When I was a kid, I had that mitt. I had
sold
two.
To you too.
Catcher's mitt, a baseball mitt. I had two. I gave them to my kids.
Even after I had kids, I take my mitt to Wrigley.
Kids never used them.
I take my mitt to Wrigley.
My kids didn't play baseball.
Right.
But
what's that?
I take my mitt to Wrigley.
Yeah, he does. He takes his mitt. That's why I'm saying, and he admits it. Okay.
Before they put the screens.
Hey, little 12-year-old, get the hell out of my way.
For sure.
I got that with can of corn.
Screens up.
You're catching balls left and right.
No, but I had my mitt. I wasn't going to be the loser. I mean, I wasn't going to let my wife get head with a hockey puck.
The guy.
You took your mitt to the hockey game?
Maybe.
Oof.
Your hand-eye coordination was a little slow. Okay, you should.
There were nets. But I didn't see that there
You
was no
shouldn't have
nets in
ducked
that.
and let it hit her in the face.
Oof.
She told me this
It was
story.
a low point. It was a low point. It was a low point. I messed up. I had 2 beers in my hand. I was bringing back a beer for her. I'm not going to drop the beer.
No, you can't drop a beer.
That's how Vinny broke his nose. I mean,
You dropped a beer on him?
he dropped my beer.
And then you punched him?
Yes.
All right.
No, I never caught a ball in a mitt, but I caught 2 balls.
With your bare hand.
I'd wanted a sock.
That you didn't need a mitt for.
Right.
Well, one careened off of somebody
Whatever,
else in the box.
Oh, here it comes. Whatever.
Right. One instead of hitting their face.
Wait, the whatever? How'd you do in Vegas? Broke even.
Yeah.
Whatever.
One I caught on one bounce, and the other one I caught, it was
One hop. We call it a one hop.
I call it a one hop.
Act like you.
The
act
ball
like
boy
you
gave
did
you
that.
one?
What?
The ball boy gave you one?
No, I never got one. I was never the kid that got the ball from the ball boy.
Because your breasts weren't big enough. That's why.
Tony, I would.
Corinne got a ball that way.
Sorry, Pat.
Sure she did.
Benji Molina walked up to her and dropped the ball in her lap.
Believe that.
Not Benji, Yadimir Molina.
How is it like there were a couple families that had a series of catchers? It's crazy.
Yeah, the Molinas.
Yeah, well, that was one.
I was a catcher, never a pitcher.
Benji,
There was
Yadimir.
And then there was another one.
Yeah, there was the other one. Benji.
But there was another.
They'll lose. There's a Moises.
Did Contreras? Did his brother ever play catcher?
No, but there was Moises Alou, Moses Alou.
Moses.
No, there's like 50 of them.
Tony, Netflix.
Yes.
Not a big commitment. Untamed.
I don't think I've seen it. I don't think I've watched it.
It's in Yosemite. El Capitan. It's good.
Is it?
Yeah.
Okay.
Yeah. Beth, it's good.
Because I watched a horrible movie, Sorry Baby or something like that.
Oh.
96 on Rotten Tomato. Meaning my daughter said I had to watch it, but she didn't watch it. She said I'm going to buy it. I'm glad I only rented it for the $19. Would have killed me if I paid the $24 an extra $5.
Well, why wouldn't you?
Own the thing? It would have drove me nuts having to see that in the
But for
library.
$5 extra, they could have watched it.
Hold on, what
Well,
movie?
she can watch it in a day because you get it for 48 hours if she wants to waste an hour and a half of her time.
What movie was it again?
Sorry Baby.
Was in it.
What's that?
Was in it.
No name. It's kind of an artsy, like Sundance-y kind of film. 96 Rotten Tomato. They've done this to me. She's done this to me twice. I'm done.
She's dead to you?
Yeah.
Who is this?
That's got
Who recommended it?
suggestions.
My Chandler.
Oh, Chandler.
She said, I'm going to buy it. So she said she was going to buy it. I said, let me just rent it. See if it's any good.
See, I buy, like, if it's $19.99 or $24.99, you just buy it.
You would have to see this in your library from now on. It would drive me nuts. It would drive me nuts. I'm going to forget about it in a week, so I'm okay. But if I had to see
I'm going to remind you in 10 days.
Ugh. Please don't. Please don't. Horrible. Sorry, Baby. Horrible movie.
Oof. All right.
Sorry.
All right, fair enough. Let's
Don't
get
out me. I'm sorry. I'm allowed to have my own opinion.
You have your own opinion? No, seriously, I didn't know.
Only if you're not in the room.
I thought it was only your Twitter monkeys.
Only if you're not in the room.
Pista monkeys.
Oof.
Wow. Everybody gets backhanded slap today.
Wow.
Somebody's a little hangry over there.
No joke.
Somebody didn't eat his banana.
I ate my banana.
I knew you would.
I know, but I didn't really
It
like
was a little green. I mean,
He likes
the green.
Oh, that's
I
going
don't
to give
like-
a
don't
stomach
bring me a
cramp.
banana anymore. I don't like 'em.
Green, but you got to have green. I mean, mushy's not good, but they got to be ripe.
Yeah.
You know what I like now more than bananas? Plantains.
Of course you do.
You're
By
so
the way,
bougie. Seriously,
speaking
you're
of
so
which,
bougie.
I don't know why you made me think of plantains. If you do have time, when do you go to New York for 12 hours, which you're not going to
I'm
have time?
going to be in New York soon.
I know. If Katz's is off the list, I got another recommendation for you.
Oh no, what is it?
Straddles. Now, it's lox bagels, breakfast, a little bit of lunch. The lox and bagels was excellent, but the sneak item was the French toast. It's flash fried, greatest French toast I've ever had. Get it for the table. It's amazing.
Straddles?
Straddles. It's like, I don't know. It's south of Houston, down in that area, something. Just look it up. It's excellent.
All right, you know, we don't have, like, when we go, we're...
I know, you're working.
We're working.
Right, you're
Yeah,
working.
we work.
Work.
Isn't it work by 11? So go before 11. Go at 9 or 8:30.
No, they come see us and then they're free after 11. Oh my God. I can't with both of you. It's only Monday. Fernando was bad this morning. You two are amazing.
Oh my God! I'm telling you,
I was perfect, of course.
Yeah, we won't go to the show. We won't do our own show.
Get a bag. Just have it
Let's
delivered.
go have flash fried French toast.
Great.
I mean, unbelievable. Seriously, how bougie have you become? I mean, I remember you when.
I was on vacation.
I remember when the two of you would argue in the pit at each other and have the same position because you were partners. I wouldn't do that in a million years. Yeah, well, you got half. You guys were priceless. You are so annoying, the two of you, now that I'm thinking about it. You killed my concentration so many times. I was in the zone, and like within 3 minutes of listening to you, I'd be like, I got to get out of here.
You were in the zone.
I was in the zone.
You were not. You don't think you were annoying?
I was not annoying.
Oh my God, you were the most annoying person I've ever met.
I was a man of concentration.
Oh my God.
Deep thought and concentration. But you two, you would sit on that wooden, like,
you could have been the most
fence.
annoying person.
If Roden wasn't there. If Roden was there, then you got down because you were afraid of him.
For sure. It's true.
1-5, what's the bid?
All right, let's do some business.
I'm ready, let's do it.
Top 20 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom, for you, number 20, BMNR at a 63 for everybody else. Tesla at an 8, Apple at a 19, iBit at a 21, NVIDIA at an 18, PLTR at a 13, AMD at an 18, Coin at a 15, MU at a 15, ETHA at a 79, Intel at a 15, GLD at a 19, UNH at a 29, MSTR at a 14, CRWV at a 27, SoFi at a 7, SOUN at a 23, AI at a 70, Hood at a 16, Amazon at a 3, and number 20 for Tom, BMNR at a 63.
I bet you he can't repeat number 20 that you just told him right now.
I'm with you.
Which one do you want to know?
Number 20. Last one.
BMNR.
I would have bet a pinky. I would have been like a Yakusan.
That was
I would
impressive.
have bet a pinky on that.
Not only that, I can already tell you it's up like $13 today.
Oh, somebody emailed you. Somebody
is it?
had to email.
No. I've been watching it all day.
What is it?
It's the new
ETF for like
ETF. It's like a ETH mining ETF.
ETH?
Yeah.
Ethereum.
I got that.
For those who don't understand the lingo.
Yeah. But it's up, let's see. Hold on.
$13, 25%. You got it.
$13. Ridiculous move. It's been up the last 2 days. I mean,
markets are wide in there to trade, ladies and gentlemen, if you're looking at the options. Stock is wide.
Yeah, but there's good volume in there today.
Cents wide. But 69 million shares on trade on the 75-cent wide bid ask on
69 million?
69 million already. And markets can be 30, 40 cents wide in the cash in the stock itself.
And there's nothing above the 80 strike, and the markets are $1 wide in the options.
Right.
Wow.
Oof.
Strong to quite strong.
On a hard to borrow stock. Oof.
Oof.
That's for the real retail investor. That's where they should go.
There we go.
Side note, even the S&P is down 4, NASDAQ up 20, Russell up 2, and the Dow Dow down 167. And we had Mr. Scott Sheridan in the office. Isn't it a great day?
Barely.
Wow. Somebody's a little...
I'm a little hurt ass.
Somebody's a little hurt.
I said my computer didn't work this morning.
And everything.
And then this, and I'm like...
Oof. Well, you know what? Don't worry. Somebody who's not hurt, Liz and Jenny. They're not hurt. They're coming up next. Stay tuned for them. Sadnov, any words of wisdom before I say goodbye to our audience?
No.
Nice work out of you. You really were on fire today. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Liz and Jenny next. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, Two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. Happy Monday, Jenny.
Happy Monday, and happy back to school week. Most of the kids are back to school here, which seems early, but that's how life goes.
Annabelle left at 5 a.m. in her senior jeans. You guys have a uniform. This is, I think, the weirdest thing ever. All the girls buy a pair of jeans and they write seniors down the side and 2026 and like flowers. And so the entire school is all wearing jeans that say all this stuff if you're a senior.
Oh, that's fun.
Right? And then they go to senior sunrise. So they all watch the sunrise this morning in their jeans.
Oh, that's so fun.
Yeah.
I was actually thinking about that Billy Joel documentary. Did you watch it yet?
No.
Okay, lots of people are talking about it. There's a new Billy Joel documentary. I hear it was great. So anyway, yesterday on Spotify, it popped up Billy Joel. So I said, sure, I'll listen to Billy Joel. And that song came on. Remember, these are the best days of your life, but they will not last forever.
Yes.
These are the days to hold on to, but they won't, although we want to. So that song came on. And I was like, oh, this just brings back so many memories of high school. I remember playing this song when we were seniors in high school. So hopefully Annabelle enjoys every minute of her last year.
I think she will. She will. So it's already been the summer of Annabelle, so it's going to continue into the year of Annabelle. But yes, it's fine. They're getting so old. I mean, Lily's a junior, so we got a junior and a senior.
I know. I just can't believe. I'm actually looking forward to fall. Usually I'm a real summer person, but I'm actually looking forward to fall. And yesterday someone made like a maple pumpkin something bundt cake, and I thought, I'm ready for fall.
There you go. With a maple pumpkin bundt cake, she brings in the season. All right, let's take a look at the markets. Let's give the people what is actually happening today. We are dedicating. Hopefully on Mondays we're going to have somebody from Tasty Crypto, and today it's Dan, but it's going to be at halftime.
Yes. 10:30. We're going to take a break. And we're going to bring in Dan, the crypto man. He'll be coming on. Until then, let's take a look. We have a few things we could close. We're always trying to do a little cleanup here. We have one problem child, which kind of came out of nowhere. AI down $5, and it's not even on earnings. So I'm just going to take a look at what is the news in AI.
Stocks on the move after weak preliminary quarterly results. They must have had earnings.
Tell us if a weak preliminary quarterly results announces new leadership. Okay. New leadership, and I don't know.
Did I see that on your computer?
It looked like that just popped up out of nowhere.
It says it's going to update at 10:15.
That's what it said, right? Which is odd because I just did an update last week.
That's what it said. So we'll see. We'll see if we lose her at 10:15.
Hey, you know what? If we do, that'll be our break, and we'll bring in Dan when I come back.
Because you're sharing your screen, so when it popped up, I was like, wait, what? Why do I have to update at 10:15?
So it's strange because I just did it. This is something I'm gonna have to talk to Lester about.
Yeah, you got to talk to Lester.
These pop up constantly.
So C3AI got downgraded. Thank you. Big deal donuts.
Okay, we have this deep in the money put, and what we usually do with deep in the money puts is turn them into a zebra.
Yes, and let's do that same thing here. So the reason is it's going to save us. We're only getting back $300.
It's not going to save us any buying power. It's not.
Oh, then who cares? It's the same thing. We have a stock position right now.
Yeah, it's like we're long stock AI.
We're long AI. It is what it is.
It's not going to save us any buying power. We buy this back, we get $340 back. The zebra is going to be over 400.
Oh, no. Leave this. Same thing. It's the same position.
Right. It's the same position. So,
so it got downgraded. So we had a short put. So what? Because now you're long this time.
Yeah, we could just leave this deep in the money.
The only reason I would want to switch it to a zebra is if it's going to save us any capital, and it doesn't. So close that thing out.
The zebra here would be 427. We're getting $300 back by closing. I guess we just leave it.
Like I said, I do love a zebra. I do thoroughly enjoy a good zebra. It's a good stock replacement when you have deep in the money puts. Then you want to keep the stock position going if it saves capital. If not, just kind of synthetics. It's the same thing.
Now, do we want to start? So basically, like we're long 100 shares of stock.
Honestly, sell something stupid against it. Yeah, there you go.
Yeah. Now it's going to be a slow grind of reduce our basis, slow grind of reducing our basis.
You have 75 cents in extrinsic value in this position, and the zebra would have had nothing.
Yeah. So I'm going to just add on that call. I added on that 22.5 call for 50 cents. That's it.
Okay. Do you want to pick off our IBIT?
Yes. So crypto, and I kind of wanted to save this. We don't need to save taking off the IBIT, but let's save putting something new on for our crypto specialist who's going to be coming in.
No, I just kind of wanted to walk through why we would take off IBIT right now, because you're like, oh, like I looked so excited because this is a zebra-esque position, meaning we have the 68-69 call spread. So we have no risk to the upside, but keep in mind, if it goes through or continues up past 69, we make nothing. And here we have 30%.
Yeah. So if it keeps going through the call spread, which it's already starting, we only collected 97 cents. We wouldn't make anything. And this is a 4-day trade. So fine, we made $28 this week. Let's take this off. And I would say put on next week's. And we can just put on next week's. Because
he's going to come in and talk about what he wants to. I don't know if IBIT's on the agenda.
I know. So we'll take that off. Is this the highest IBIT's gotten? Are we at new highs? No.
The other day. Yeah, so I'm very excited for our crypto segment. Very, very.
I was getting crypto alerts all weekend. Every crypto skyrocketing.
Crypto is skyrocketing. I mean, and all of it is. It's not just one sector or the other, but I can't wait to hear what Dan has to say about this.
So here we have the struggle of, we go the 11-day, we got to use the...
I mean, you can do the 71, 72 and get 19 cents. We're just doing it because it's cash secured. Then go and buy the 62.5 or the 62. Yeah, that's fine.
So basically, we're just using that money from the call spread to buy a put, to release buying put. And then that 67 put.
Yeah.
Or even...
You can go 66. You're still getting capital. We're kind of reverse engineering the Jade Lizard because of the nature of this, meaning we're using that 20 cents or whatever in the call spread in order to buy something. And we're literally just using it as naked. The puts are in there, but they're very expensive to sell in IBIT.
If this goes up, though, we haven't covered.
I understand. Yeah, just go to the 67.
Yeah, it's just, this is what happens when the stock's going up. You have to keep moving your put up, right? Unless we...
We were only 66 before. It's not like we moved it up that much.
Yeah.
We did 66 put before.
There we go. So we're staying in IBIT. We keep doing these weekly Jade Lizards in IBIT. And they've been doing, like a slow churn, right? Here's our...
$30 is better than a sharp stick in the eye. I'll tell you that.
We have, look, 180 days. We're actually down in IBIT, which I don't know what went on 180 days ago, but I guess that makes sense because crypto had, some rough patches. In the last 60 days, we're up. So we're just slowly.
And Jenny, I kind of I know that we've had other things in there, but I kind of would like to do just one trade in this and see how it works out. Do you know what I'm saying? Like if we just keep consistently doing it.
I just went back like a full year, the full 365 days. We're net up in IBIT, and we never have more than a one lot on. So it's not bad.
Not bad.
It's not bad. So I'm working that new, Jade Lizard. Let me lower this.
Yeah, I mean, you just need over $1. You're fine. And then do you mind pushing those two through so I can do the other side?
Sure. Sure. Activity. All symbols today.
That's all we've done.
Close this. Yes. And close this. Yes. So those are out. Now I am going to close this CRWV. We sold a put in here on Friday. And CRWV is up $9 today.
Whew.
I know. That's a crazy move.
Yeah, that is.
Like, 4 or 5 big days in a row in CoreWeave. So we'll take those puts off. I know there's a lot left in them, but we got 20% in just a few days. We can always wait for a down day and try to get back in.
Yeah. I mean, I like that. To be honest with you, you have to be taking your profits. You have to constantly be taking your profits. AI. Okay, good. We got filled on those too.
All right. So we're out of 20%, in a basically one trading day. We'll take that.
For sure.
Then.
What else you got for me?
Webull, we're almost at 50%.
Yeah, you got to take that.
And we'll wait for a down day. We'll wait for a down day and try to get back in. I think that's like the story of, taking puts off when there's still premium in them, wait for a down day and get back in.
There you go. Story of our lives.
Yeah.
So you're doing a lot of good cleanup today.
And natural gas is still not, it still hasn't popped up at all.
No, it hasn't. I saw that. Look at our natural gas position. We're right on the cusp.
Right. It made new recent lows today. And our puts are
95.
Right here.
Right there.
15 days to go.
It's hard. Yeah, natural gas. We're still above. I still think natural gas is at a low extreme. I know natural gas is a big bust, but we have a spread. We have a $5 wide spread in there.
Right. I think that's, what did we do in ETHA here? 25, 19.
Oh, it's the same thing we did in IBIT. It's the Jade Lizard-esque type position. It's 32, 35. Now this is a little bit different because we're not through, and we did collect over $1. But the IBIT, we were through the 33 mark. So
and this is September. That was a weekly. So that's a little different too.
Yeah.
If we start going through and just take 30% out of this, that's fine.
We're trying to take 30% out. Did you see our GTC? We had a GTC in for 74 cents.
Now, with this up and all the cryptos up, what is that new stock that's just buying cryptos? What is that called? What is it? UX? What? You know what I'm talking about?
No. What do you mean that's just buying cryptos? MSTR?
It's not MSTR though. It's like a version of MSTR, but something different.
Because MSTR is just buying Bitcoin. It was the one that I told you about, right?
Yeah, right. That's what I'm asking you. Like UPXI?
Maybe.
Is that it?
No, hold on. Let me go to my account. I'll look.
Yeah, I think it is.
Yeah. That's down today, though.
I know. That's what I was trying to see. Is that up? But it's not.
But if you look at the chart, it has been up.
Right. Yeah. Okay, so anything else that we need to do?
Oh, did you see Intel today?
I know. Intel finally getting a little bit of a surge. It's
a big move for Intel. Look at that big bar. Look at that little big bar.
I know. Nothing made me happier than looking at my account and seeing that I didn't sell calls against my Intel because I thought about it. Anytime something has a fall, like this was earnings, right? Intel earnings. I think, yeah, Intel earnings, and then you're like, oh man, I got all this stock. What am I gonna do with it? I guess I'll start chipping away at my cost basis and sell calls against it, which is I don't know what stopped me, but thank God.
Do you know what's crazy is this chart does not look like any of the other chip makers.
No, but Intel's had its struggles, but I'm holding on. Intel's gonna be a lifer.
Okay, considering we are taking a break and it is 10:13, do you want to jump into Twitter or what else do we need to manage, young lady?
I'm just going to tell you, if you lose me, I'll jump right back on.
Oh my goodness. Is it updating? Is it happening?
I don't know. It's 10:17. Didn't say it was going to update at 10:18.
It did say it was going to update at 10:18. I'm going to get into our account just in case I lose you.
So if you lose me, monologue, and I'll be right back.
I'm gonna have to try. Just stay with me for a second because I got to try to get into our account.
Anything else? Yeah, I'll pop into Twitter. See what's going on. Earnings today. So Bob on Fire, thank you for sending these. OKLO, ASTS, Circle has earnings, SE, Pony, on, and CAH. What do you think?
I want in on.
Do you?
Well, yeah, I love on. Let's take a look at it. I'm literally just typing though, so you're going to have to bear with me.
Okay. On are the on cloud shoes.
Yes.
And it hasn't been, it's fallen over the last month or so since May. $45, $5 expected move.
That's a decent chunk.
You can eat. Whoa. It's cash secured.
It is?
Looks like they're a little concerned about on. I don't know that I see as many people wearing on clouds as I used to see.
Oh, I see them everywhere. Every kid that I know has a pair of on clouds right now.
Really?
The entire Lamont High School is wearing the whitest on clouds you'll ever see in your entire life.
I don't see them, but our kids are not allowed to wear gym shoes to school. So
it's on cloud or bust. And even like JD was like, I need new on clouds for college. Like it's on clouds.
Oh.
Yeah. Well, in my world.
In your world over there. So you want to get into on cloud because in your world it's on clouds everywhere. I don't see them because we're not allowed to wear gym shoes. And my son's in college, but he's not. He still wears Vans to school.
He's retro.
Yeah. He's every year. He's like, Mom, can you get me a new pair of Vans?
He's retro. That is terrible support. Get him some shoes with better support.
Hey, you know what? That's all. He wears Birkenstocks, mostly Birkenstocks during the day, Vans to the bars.
Vans to the bars. Those are his dancing shoes. I like it. It's pretty funny. Okay, so close this up. Let's go take a look at. Wait, it's OKLO's earnings. That's our priority.
I don't know what we have in there. We might have nothing. We have nothing.
Yeah. So what's a new subscriber to do? Let's jump into OKLO. The reason I say that's our priority is because Jenny and I have had stock positions in OKLO.
And this was the first thing I did when JD opened his trading account. I bought him OKLO. So I bought him. What did I buy him? I don't know.
I will look. Hold on. Let me go.
5 shares, 10 shares.
Oh, I can't. I just logged into our account, so I can't see it.
I think it was $20 at the time. So yeah. I don't know.
He loves it. He's one of the best performers on the year. One of his best performers on the year.
Yeah.
And all the XRP my brother gave him.
Oh, yeah. So I don't know what a new subscriber is to do. If I'm a new subscriber, I'm just waiting till after earnings, honestly.
No, let's take a look. Let's look at the trade page. And let's go through a fun example. So go to the trade page.
This is like a product of the future. This isn't gonna, I don't expect them to have good earnings. I don't expect them to be like, and their earnings were amazing. This is more just like future, is nuclear going to be the wave of the future? If you think so, you could jump on the nuclear bandwagon. But this isn't like our earnings are great. That's not, I don't see that.
I'm not going to lie to you. I don't know what company is going to say what. And even if they have great earnings or bad earnings, we don't know where the stock's going to go. So open up the trade page. Let's just take a look at the options. We're not going to put anything in, but if I was new, open up the 4-day. And I just want to see how much it is. Go to the expected move and sell a put. I don't want to do that. I just want to see how expensive it is. Nope. Thank you. 50%.
And another, so like.
Why are on and OKLO so expensive? What else has earnings?
Hold on. I just want to see what CCJ, because that's another one if you want to get into the nuclear game. Also, the chart looks similar.
Did you know this? And thank you very much, T-Port. OKLO is Sam Altman's nuclear company, the OpenAI CEO.
And the one that this one?
I don't know if OpenAI is C3.
I was going to say this one that just dropped 5%. No, No, not that one. Again, I'm not. If I'm a new subscriber, I'm not getting in on like before the earnings news. I think I'm just sitting out and waiting.
Well, I mean, if I'm I love that we keep saying if I'm a new subscriber, but if I'm looking at this, I don't care about what it is. You shouldn't care what it is. What I do care about is that it's cash, that it's a lot of capital. That means I don't like it. So what else has earnings? Let's see if all of them have a lot of capital.
I'll tell you, Liz, it's 10:22 and you didn't lose me.
You're still here.
Oh, Circle. I mean, Circle's going to be another one, another doozy.
Oh yeah, no, we know Circle holds up a lot. Let's take a look at Pony. I don't know what that is.
Hold on. I just want to see if Circle's having a crazy run too. Up 5. Oh, look at that. It looks like nothing. Looks like nothing. But they have earnings. $17 expected move.
Oh, and look at this one. Just press a button on a put. This is like cash settled, I think.
I know, but if you want to get back to close, so $17 expected move, IPO got up as high as 102. I can go into the 4-day. Yeah, you're not getting far. If I'm trading Circle, I'm almost going.
And you can't sell a put. Press the put. Remember, this is the one that's like $3,000, $6,000. Yeah, there you go.
It's expensive. It's expensive, but people can. Right? I sold puts in Circle last week. Like people can sell puts in Circle if they want to, if they have the capital. Yeah. Well, again, I don't know what to say. I talked to Tom about this the other day, saying our show account isn't a big account and we struggle with coming up with trades because it's not a big account. And I said, that's a struggle that we have on the show. But
his response was?
He had a handful of responses, Liz.
Give us one.
Whatever. I talked about, maybe using our own personal accounts on the show, which maybe would be more realistic because you do well trading. I do well trading. The show account is a real struggle because of we have so many positions on. We're in here every day trying to place trades and we're handcuffed with buying power.
It's also a very moot legal point for this, Jenny, and there's a reason. We are legally not allowed to give advice, and this is a show account. So none of this is also, the other point here is that not all things are equal, right? So you can't sell a put in AI and then have a $3 wide call spread in another thing and assume the capital to capital requirement in a small account is not there. This is just for instructional purposes only. That's why we're one lot traders in here. And when you get pushed through to the follow page, even if a rogue trader who shall not be named on the network does a 20 lot, it still goes through as a 1 lot.
Oh, why? Did a rogue trader do a 20 lot?
Oh, yeah. Accounts have been blown. You know that, right?
No. I don't know.
Oh yeah, we'll talk.
A rogue trader. Yeah. No, so yeah, I get it. It is just Circle earnings. If someone wanted to place Circle earnings, but you go back to, okay, if the company was valued at
80,
70, 80 when it IPO'd, and now it's trading double that. If I'm selling a put in here, I'd want to make sure I'm pretty far.
Yeah, you would.
Look at my old December trick. You know how I'd be like year end? You can get, honestly, look at this. Go to the 100 put gives me $560. I get $560 on the 100 put, and I'm using $2,400. So I'm getting 20% return on capital on that put for the end of the year, between now and the end of the year.
How much is the 80? I just want to see what your buying power is if you go. I'm picking the 80 because it's the lowest.
And that's that's pretty much where it was IPO day.
Yeah. And that's 10% return on capital.
Return on capital.
Yeah.
I mean, sometimes I don't mind the long game.
No, and the capital's a lot better. Now, keep in mind, let's just be honest here. If Circle goes down, this can grow teeth. So say Circle is trading 110 and you have the 80 put, then it's going to be holding up $6,000 on top of your loss.
Well, it's not. Well, at that point, it's going to be a lower price stock. So, right. We talk about this when you're selling strangles. If you're selling strangles and your call gets tested, well, that's when you could run into trouble because the margin's going up because the product's becoming higher priced. If we're looking at an $80 product, 100 shares of an $80 product is $4,000. If it's regular margin, it's 100 shares of this $8,000 right now. 100 shares of this is $8,000. So yeah. So on regular margin, if you owned 100 shares of 80, that's $4,000.
Oh, but on top of your loss, because it's just going to hold that capital because it's so far away.
Right. So yeah, on top of your loss. Well, if this went to 40, if it went from 165 to 40, well, yeah, then you'd have a loss on this. Plus, it'd be holding up.
Well, and the vol could blow up. If it goes down, the vol could blow up too, which would put more value in there. So the loss could be a little bit bigger than that.
Yeah, instead of using $2,000 in buying power, it could be using $4,000 in buying power. Right. And if this is worth $10 instead of $2, you could be using $5,000 in buying power.
And I mean, the at the monies are significantly higher than that. So the vol, could, if it's worth $34, because it could be.
I'm just saying, I might try it. I might, for earnings tonight, sell the 110.
I don't think it's a bad play. I just like to talk through all the scenarios of what ifs. Do you know what I mean?
I'll let you know what happens tomorrow with my 110 put.
Yeah. Let us know.
If it blows up, if Circle's down $30 or something and it blows up, I'll let you know.
Inquiring minds want to know. What's that from?
I don't know. I don't know, but it's 10:28. We've got a guest coming on at 10:30. So I think we are going to take a quick break and bring in Dan the Crypto Man.
Look at this. I love taking a break. We'll be back in 90 seconds. Stay tuned.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody, and welcome back to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. And Jenny, would you like to, because Jenny came up with this name today, so why don't you give it to our new guest?
Okay, so hopefully every Monday, Dan the Crypto Man will be joining us. Dan, welcome to the show. Thank you for coming on. Give everyone a brief rundown of who you are.
Yeah, no, thanks, Jenny. Liz, it's great to be here. I'm really excited to be on the show. It's my first time appearing. Obviously, longtime fan of the network. I am the head of growth for the crypto business here at Tasty. I've been working on Tasty Crypto. You might see me on the Tasty Crypto show with Ryan. And then if you're...
I've seen it.
You've seen it. Okay, great. I don't know, too many people might not stick around for that show, but we do a lot of great content. We have some great guests on over there. But I am leading up growth for the crypto business. I've been in crypto for the last going on 8 years. Started at 2017 at a similar business broker. Saw the first Bitcoin run up in 2017. Instead of running away from it, which a lot of traditional finance people were doing, I ran toward it. That led me down the rabbit hole of Bitcoin, ETH, Solana, some of this other stuff. And I have launched my own companies. I've launched my own projects. I've done NFTs. I've traded kind of all number of things, meme coins, stocks, crypto treasury companies. So kind of a jack of all trades when it comes to that. But I hope I can provide some value to your listeners, to your viewers, and hopefully we will have a good discussion here, and I can teach you guys some things, and you can teach me some things, because I am not I'm not a derivatives person. I'm very new to that, so maybe you guys can help me.
Well, Dan, this is perfect because, you know, I don't know if you've watched this movie, but you don't make sense, we don't make sense, but together we'll make sense.
Exactly,
right?
exactly. We hope that's the case.
And what a day for you to start with the boom in crypto over the weekend.
Oh yeah. We're doing well. I think everything's lining up for a pretty good summer and fall. Rest of the summer here in fall. We had ETH breakout. Bitcoin got up to about 122. I think it touched last night. I think that was due to some liquidations in the perps markets. And hopefully we'll get this.
Wait. Can you explain to people what that means?
Yeah, so similar to kind of traditional finance, there's something called perpetual futures. Because crypto runs 24/7, we don't necessarily look at futures markets that have like expiration dates. It's just a fully on perpetual kind of market. So there's this product called the perpetual futures. Actually, Coinbase just launched them. I think the CME group is introducing them in some capacity. And for the last I want to say like 7-8 years, at least as long as I've been involved, that's what's led a lot of like these liquidations or these like massive swings in the market. People don't necessarily look at like dated futures. They look at the perps markets, which operate overseas. So I can get into that a little bit more. Maybe next Monday, I'll put together some more graphics on that. But yeah, that's what I pay attention to as far as like futures, derivatives, where leverage is in the system. It's all off the perpetual futures markets. So I'll definitely have to drop some more information on that, and maybe I'll put together some graphics for you guys.
So if we want to look cool or sound cool at a party, what kind of sentence can we put together with the perps market?
The perps market sounds so sketch.
Yeah, so basically it's all based off of a funding rate, right? So, the perpetual futures markets gives you kind of an indication between where the spot's trading and then, like traditional futures, and where the perps market's trading, the futures market's trading. So the funding rate will give you an example of kind of like how far that discrepancy has gotten. So when when the funding rate is very positive, longs are paying shorts to go long, take on leverage and go long. If the funding rate's negative, shorts are paying longs to finance short positions. I think I got that right. I might have it backwards, but similar idea. So in some cases, when you see these like big swings, right? Something that happened last night, where it kind of went, we kind of were trending up over the weekend, right around the opening of the market in Europe. You kind of got this like big kind of push up to 122K on Bitcoin, and then it's kind of retraced a little bit. So all I was trying to make a point on is like some of these swings that you see, they're not necessarily like spot buyers. It's forced liquidations in the perpetual futures market. And some venues that you can follow are like Binance, OKX. There's another one called Hyperliquid, which a lot of people that are deep in crypto will trade on. But a little bit out of scope for our discussion, I think. We'll make a note of that, and I will put together more information on that for you guys, since I feel like it's definitely something that people don't pay attention to when it comes to crypto.
So if the move up over the weekend was from this liquidation, then will it quickly fall back down?
Typically that's what you'll see. I think where we're at now in the market is we'll have like this liquidation, right? We'll have some of these swings, but if you look, people are, you notice these like treasury companies, right? These like publicly traded treasury companies, they're scooping up Bitcoin, they're scooping up ETH. That's going to give a bid, right? That's going to give some support to the market. So I kind of put together a few slides here to show where we're at. And I specifically wanted to look at ETH because, I've been following this market for the last 8 years. Like I said, I've seen it when Bitcoin was 20K, went back down to whatever, 1,000. Same with ETH back in 2017. And typically what you see in this market at a high level is you'll get this bid up in Bitcoin, right? Everybody knows Bitcoin. It's digital gold, whatever narrative you want to go with. You'll see that. We saw that through 2024, through 2025, ran up to about 120K. And then you'll get this rotation. And usually it rotates out further on the risk curve. That would be ETH in this case, right? So Ethereum is a lot. I would consider it further out on the risk curve. I mean, it's not new to me. It's been around since 2014, 2015. But people usually get rich in Bitcoin. They rotate further out. They go into ETH. They bring liquidity more into the ecosystem because of that wealth effect. So what we're looking at right here is crypto DATs, which are digital asset treasuries, your crypto treasuries, MicroStrategy, Aspet, Bitminer, Tom Lee's company. And I just wanted to show the trend over the last year to date. So if you look on the left, the chart on the left, orange is the trading volume of Bitcoin and blue is the trading volume of ETH. So you could see right around June, end of June there, ETH started getting a massive bid because of these treasury companies. So then you can look to the right and see that the net asset value in aggregate has gone up. So I think that is an important part, especially for people that are more familiar with traditional finance. I think that's an important part to note because that's going to give a bid to spot ETH, spot Bitcoin, right? We have a market here that's supportive of where the price is at. So I just wanted to show that trend because if you look, it was all Bitcoin for the last year or last couple months, and then June hits and everyone announced that they're going to do this on ETH now. So that's something to pay attention to because it's something to trade. I think it's something to trade and something to understand where the flows are coming from. So if we go to the next slide, I'll show specific ETH companies. These are the biggest ETH crypto treasury companies that are publicly traded. And I just did a little quick dashboard and compared it to spot ETH, which is the top row there. You have SharpLink Gaming, that's Aspet. Game is another small treasury company that's like a video game company. I don't know. Bitmine Technologies is Tom Lee, the CNBC guy. It's his company, and then BT is another one. So these are the four largest ones. Go ahead.
So I just want to make, just so I'm clear on this. So there's your spot ETH on the top, but then these three companies, are these like your MSTRs for Ether?
Yes, MSTRs for Ether, 100%. That's the best way to think about it. And then the column you really want to pay attention to is MNAV, which is a modified NAV or multiple of NAV, because that gives you an indication of whether or not these companies are undervalued or overvalued relative to the assets they're holding, right? These aren't.
So N is net asset value, but what's the M?
Modified or multiple. It's modified net asset value, and it accounts for the volatility of the assets on the balance sheet.
Okay.
So if you look at like Game 2.12, that's trading at a huge premium compared to the token holdings assets on the balance sheet. Tom Lee's Bitminer 1.68, Aspet 1.16. That gives you an indication of the premium that these companies are trading at relative to what they're holding in regards to crypto.
Meaning the price of these are higher than what their asset value of the crypto is in their portfolio.
Yeah. Basically that's kind of what it's saying. 1.16 is not that high. Like one is equal,
One is, yeah. Okay.
Yeah. So I just throw that in there because it's just an indication for investors to kind of see, are they trading at a premium given the assets on its balance sheet? I mean, I haven't done too deep research into these other than kind of like the numbers you're seeing, but they don't produce anything. There's no product here, right? They're accumulating spot crypto, and allowing this as a vehicle for investors to trade in. So what's nice here, and what's something that our viewers can kind of take a look at, is if you're aware of these and you kind of see where they're at, the premium, daily trading volume, some of that, and I can do volatility too. It'll become something where you can play these with options. You can kind of see if they're overvalued relative to the other companies, and maybe there's a trade there for us. But I just kind of hone in for our purposes on that MNAV, that modified NAV, just as an indication of where they're trading at, given the assets on the balance sheet.
Okay, so now I know you probably didn't expect to get asked this question, but we're talking about Ethereum and these are here. So if you're looking at this and you're going to make a trade on this, would you go in and are you trading Ethereum or are you trading these companies?
It's a good question. I'm personally holding Ethereum and staking it just because I know how to do that. I'm comfortable doing that. I've held ETH since 2017, 2018. I'm just going to hold spot. But there's a trade there where you could hold spot and maybe like sell premium. Yeah.
Mm-hmm.
That's what I would do. And maybe we can dig into a trade here. We actually have a really interesting guest that comes on the Tasty Crypto Show. His name's Greg Magadini. He's a crypto derivatives trader. He works for a company called Amberdate, and he's actually gone through and done some ideas of some of these companies of how to play them. You could hold spot, sell premium. You could, maybe take advantage of certain spread trades. Again, I'm not as deep of an options trader, so I would probably just hold spot and trade some of the high premium, given where we're trading at with some of these. So that's probably what I would do. But I'm definitely down to take a deeper look, maybe next time, or I can come up with a trade and present it. But that's exactly what I would do. I'd hold spot and trade the premium here.
Did you think Ethereum has kind of taken off since it's now in some certain ETFs, like you have the ETHA, and now that it's allowed to go into your 401k as of Friday, I think, right?
Yeah, I think it's a number of things. I think, like I said, people that are crypto natives and trade crypto full time, as Bitcoin goes up, people get a little bit more wealthy. They rotate to relative undervalued coins. That's ETH right now. And then it'll become altcoins eventually. I think it is regulatory clarity, right? I think we have a boost from regulatory clarity from the SEC. Obviously, the administration is very friendly to crypto. I think we have more access, right? I think people are waking up to this asset class a little bit more and trusting it a little bit more. So there's more people willing to hold it, willing to trade it. There's more access to it. And then, the ETFs are huge, right? These are flows on chain into the asset. So if you guys want to go to the next slide, the fourth slide there, I can show you the next one. I could show you a trend in the ETH ETFs. Yeah, so these charts are just showing spot ETH ETF volumes and then cumulative spot ETF volumes. So like Liz said, around July, you see that huge spike into ETH, and then July 2025, you're seeing cumulative spot ETH volumes going up over 100 bill. So
ETH is the biggest, right? ETHA?
Yeah, ETHA. Clearly. Yep. So that is positive. That means money's flowing in. That means there's a bid for ETH. That's how I look at it. And you can see the trend there as of the last month. So I think it's an interesting time in the space because, like I said, that rotation usually happens, and I think we're seeing that, right? I think now that we have some publicly traded companies where you can kind of own ETH as a proxy through these, it'll get for a fun trading environment.
And do you think it's easier for people who have accounts to just go buy one of these underlyings that they could buy instead of trying to go in and buy the crypto?
It's a good question.
For some people who have never done it before and they're not that versed and they think, I can just go buy the ETHA and that'll give me my exposure.
Yeah, I think that's fine. I don't necessarily agree with that because like I said, I'm a crypto native. I want to hold it. I want to own it. That's the whole point. I can transfer it out. I can go on chain. I can borrow against it. I'm pretty well versed there. But for somebody who's a beginner and just wants it as an exposure in their portfolio, buying the ETH ETFs, buying any ETFs, I think that's probably the way to go.
I have a very basic. I'm sure. Jenny, you're gonna kill me for asking this question. So we're saying ETHA is the Ethereum ETF. But what else is in it? Because an ETF is an exchange traded fund that's a basket of things. So what else is in the ETF? ETHA.
But I mean, IBIT's just Bitcoin.
There's nothing else in it. It's just it's a vehicle for traditional finance markets to acquire exposure to ETH. So like BlackRock is the issuer, and yeah. Sorry.
So it's going to go 1-for-1 with Ethereum. Like it's straight up ETH. It's just you're paying more fees for it.
Yeah. So I think there is a premium. I think there's an expense on it. I haven't dug too deep into that. I think there's probably like a tracking maybe discrepancy. That's why like I would rather just hold the spot because it's probably not trading 1-for-1. There's also staking, which is earning yield on ETH, which I think they just allowed. Not sure if they're passing that through, but I think as far as like a liquid vehicle and to get exposure, ETH is fine. But I think it just acquires ETH, spot ETH. It holds it, custodies it, and issues this ETF. There's no basket of anything else.
But at the same time, we're protected, and it doesn't even look like it was moving 1-for-1 because ETH was up, and I don't know when they take the markings or things like that, but ETH was up and Ethereum was down at one point.
Yeah. Good question. I think maybe that's probably a way to trade it. If the spot is kind of moving away from where the ETF is, then you could see a trade there. I don't know. Like it's really something. I have my homework cut out for me because I need to dig into these ETFs a little bit more.
On this show, there is no homework or no homework. We're all doing this together, and I have some very simple questions like that. So
To me, it seems similar to IBIT. Like a while ago, I had X amount of dollars in Bitcoin, and I thought, and this was when Bitcoin was kind of just not moving, right? Or it was down more. And I thought, I'm going to just take the money I have in Bitcoin and just every week just sell IBIT puts. And so I've been doing that, whatever notional value I had in Bitcoin, I just took it, and every week I'm selling IBIT puts. And I think it would be similar, if I wanted to take whatever I have in Ethereum coins and instead just sell ETH puts. I think it's like similar concept. And then you're getting premium every week instead of just holding it. But again, you could have a mix of both, but I think it's a nice way to get some premium selling in there.
Or you could sell calls against it. It's the same concept in the fact that there is something to sell against it because they're all cash settled. So it's the same amount if you're going to be selling the puts or if you have the ETH and selling calls against it.
Yeah, I think that's exactly how I would play it. Very simply, just taking advantage of that higher premium. If you look at Ryan does a great job with this. He does volatility dashboards, but I believe like ETH, the spot crypto, I think the implied volatility IVR is 79%. Here it is at the bottom. Monthly IV 80%. I mean, that's pretty high given, comparatively to what else you get. That's like a tech stock. So I think taking advantage of the premium and having the spot is the way I would do it. So yeah, I think there's really easy plays like that. And then to your point, Liz, it's cash settled. You don't get the advantage of the staking, which is earning extra ETH on top of your holdings. I believe there's an expense ratio involved in it. So there's probably some tracking error there. There's probably some discrepancy in price or movement that you can take advantage of with the options in the spot. So I would just sell premium. That's how I would play it. Obviously, you could see the trend over the last month with flows. I think that bodes well for the price. I think we'll get another run up here. We're over 4,200 right now on ETH. We were at 1,500 in April with that tariff crash. I mean, that's an amazing trade if you took advantage of that, even if you were just buying the ETFs. So again, a really, really, I think it's just a fun trading vehicle. I think it's very volatile. It's similar to like tech stocks. Something else for people to learn. I see a lot of chat questions in the chat here. Tasty needs a Crypto 101 primer and complete an entire series from start to present. Yeah, we have that. It's Tasty Crypto. We'll be redoing some of that and kind of pushing it out to our clients as we go. If you guys want to watch the Tasty Crypto show, that's at 4:30 p.m. Central today. So we do a lot of that content. We'll do more of it. I have some Crypto 101 videos coming out in the pipeline for our traders. So yeah, definitely a lot more. And then if you ever want to email us, I'll answer any questions as well. So we run a small community with people in Discord. So yeah, I'm definitely down to answer questions. I don't know that I have all the answers, but I kind of do this all the time.
You have a lot more than most of us. And what I love about this is it is slightly confusing, and it's confusing to me too. I can see the chat as well. But I love it because all you have to do, you kind of remind me of people that come and watch the Liz and Jenny show for the first time. We're using words. You have to be like, wait a minute, what was that word? And then eventually it all just start to click, right? Once you just keep it and you keep learning about it, it'll all start to click. But my question is, where do you think Ethereum is going to go this year? Give me a price point.
Yeah.
10,000.
I think we'll touch 8,000.
You think we'll touch 8,000?
Yeah.
Now, do you think in this calendar year or
like you're saying by the end of 2025?
Yeah, are we saying end of 2025 or are we starting right now and we're going to touch 8,000?
Probably starting right now.
But it doesn't seem that unrealistic because I know you said we came from like 1,500 up to 4,200, but we were 4,000 a long time ago. Ethereum was 4,000 long ago.
In 2024, right?
Yeah.
Yeah. That's why I don't think that's why I think we're going higher, because in 2024, if you look back, there was no flows into these ETFs. People thought ETH was dead. There was like this narrative that it was just this dead chain, which, if you actually look into the fundamentals, is not true. That's why I think we have sort of this setup for it to really run parabolic. And the market structure's there, the bid is there, people are paying attention. I think it'll be interesting to track. It'll be interesting to watch. I do have an idea that for some people, if we want to go to the next slide, similar to ETH, there's another crypto asset called Solana.
Solana.
Yeah, it's another layer 1 general purpose blockchain. Has its own smart contracting language, but it's it's faster. It produces blocks faster. It produces transactions faster. It's cheaper. A lot of trade. This is where meme coins came from, right? This is really what kind of the meme coin craze. If anybody's following that, this is the chain that it was happening on, because their whole thing was they want to be the NASDAQ of the blockchain, right? Very fast trading chain. So we're starting to see treasury companies pop up for Solana. So
I just glanced. Solana's trading $178. So
yeah.
it's not like ETH, where ETH's $4 grand plus. This is $100 right now.
Yeah. Different token, different type of supply, all that. So there's a treasury company called UPXI, UPXI.
That's it, Jenny. That's what we were just looking at
today. So yeah, explain that, because we were talking about that today.
Yeah. So I didn't dig into the company. I know it's one of the ones scooping up Solana, but I just wanted to show this chart because you can see beginning of May, aggregate holdings for Solana in some of these treasury companies. So I think up at the top, it's UPXI, DFDV, and some smaller CYFRF. That's like those are the ones that are holding Solana. So I'm looking at UPXI because it's the biggest one. It's one that people are tracking now. So again, I think like this rotation happens. People get rich in Bitcoin, they go out to ETH. People get rich in ETH, they go out to Solana, and then further out on the risk curve, and that's how we end up with NFTs. So I just want that's like the high level kind of like left curve way of understanding how the market cycle works in crypto. It's this wealth effect, right? This cumulative wealth effect is people get rich in Bitcoin, they want to speculate some more, they go out to ETH. People get rich in ETH, they speculate some more, they go out to Solana now. And you'll see some of these other things popping up. Sui.
How do you land at XRP?
Sorry?
Yeah, XRP.
How do you land at XRP?
Ooh, yeah, that's a good one. XRP is probably, that's part of the altcoin rotation. So with that rotation from Bitcoin, ETH, and XRP is kind of there. I know a lot of people love trading XRP. I hold a little bit of it. I've gone back and forth. I actually did an interview with another crypto show, and they were like all about XRP. And for the longest time, because it's been around for a while, and it's always had this narrative in mainstream media where like it's going to replace banking rails, it's going to replace the SWIFT system, You know, I don't believe that. I just believe that it's stuck around so long that it just continues to exist and people continue to trade it. And it's just kind of a mind share thing. So
I just got to give you a little bit of my background. We will always I will always ask about XRP because my brother is a lunatic.
Okay.
So, and he's surrounded by lunatics, and XRP to me has a cult-like following.
Yes, that's where the value comes from, I believe.
He gifts my son for every one of his birthdays. He just gets XRP.
Yeah. Yeah. Perfect. I mean, hey, that is actually, cults are really important in crypto. I mean, any stock, Tesla, you know, it's not just crypto, right? There's an underlying structure to some of these where cult-like followings kind of support the price. So I think that there's value in that. I mean, I'm not part of it, but I'm aware of it. I think that's where it comes from. I don't think it's like anything that they're necessarily producing or there's like a product that people are using. I think it's just XRP Army is just screaming about it and you know,
loud and they're crazy.
Yeah. Yes. But I think there's other things too. Like they've fought the SEC for the last half a decade, close to a decade over regulations and some of this. So I think that's important, right? So I believe like it belongs in, you know, in the discussion. I just don't use anything on XRP. I don't know like what, like where is it generating revenue? I think like that's where I need to kind of dig in, but I don't bet against cults. So I definitely have exposure. It's, you know, it's one of our most traded assets here at Tasty. I respect the XRP Army, full disclosure. I'm a fan. I hold it. So like, I don't have any issues with it. It's just, I'm not like, these things don't trade on fundamentals sometimes, right? It's just kind of like internet, you know, or tech stocks.
Well, Dan, on that note, we are out of time. It's almost 11. So I thank you so much for coming on. This was great. I feel bad that we kept you for 30 minutes. I know when I asked Dan to come on, I said, just like 10, 15 minutes. And now we've got you for 30 minutes.
No, and we really appreciate it, Dan, and your wealth of knowledge is vast. So we can't wait to, if you'll come back, we can't wait to have you again.
I'll be back on. I'll prepare some more stuff around, like, I'll present some options trades or some ideas. You know, we'll talk about some more altcoins because Tasty has over 20 plus tokens. We have stablecoin funding, instant buying power if you fund through stablecoins. If you guys have any questions or your viewers have any questions, you can email me. You feel free to share my email with your viewers if they have any questions there. And thank you for letting me come on. It was a pleasure. And I'll see you guys next Monday, I think.
Yeah, that sounds good. Thank you.
We'll shoot you an email because Liz will be taking her son to college next Monday.
Not next Monday.
Oh.
I'm going to switch it.
Oh, okay. Then you're bad. Then we'll see you next Monday. Liz will be here and we'll be Dan the Crypto Man will be back.
Let's go.
All right. Thank you very much. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Thank you.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mike Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike, Thomas. Thomas, good morning. How are you, sir?
Doing good. You know, the weather's getting nice and cool at night. I love it. Doing a lot of canning with my tomatoes.
Ooh.
Yeah.
Very nice.
Got like 30 jars so far. So
really
working on it every night.
How many plants do you have?
I got like 20 San Marzano plants and 5 super saucers, a few other random. You know,
that's a lot. That's a lot to keep track of.
How does the canning process work?
So you like blanch the tomato, the skin pulls off easy. You know, you put in some steaming water, put it in ice, peel the skin off, boil it down in a pot, then you just put it in the cans.
You got to seal the cans.
Yeah.
You got to do the
screw it on, water bath can it for like 35 minutes if it's a pint.
Yeah.
45 minutes if it's a quart. So, yeah, but I got.
So this is a whole operation.
Tomato sauce all through the winter. So
It's gonna be great.
There you go.
awesome.
And then you have the Westwater Farms logo on these cans.
Yeah.
Oh, that's awesome.
Yeah.
Yeah, and I pulled like 80 onions the other day, so those are all curing. Gonna have those all through the winter. So
Very nice.
I'm set for spaghetti all winter.
You might have something here. I think you should make your own, like actual like sauce.
Maybe, yeah.
And just start selling that thing.
Sauce or something.
Yeah. Tom Sauce Snoff sauce.
Yeah.
No,
Sell it here.
don't put that Tom on it.
Yeah, no.
Don't scare the children. Although he could kind of look like an old like grandma. You know, like if you kind of make the picture a little bit like grainy, it could fill the spot of like the old Nona.
Yeah,
You know, like he could be a Nona.
You could create some AI stuff.
Yeah, like make it a little bit more feminine.
Yeah.
Yeah.
Well, that's exciting.
Yeah,
Good stuff.
It's pretty nice eating food that you've grown and processed yourself.
Mm-hmm.
There is something to that.
Yes.
You gotta buy the noodles and beef.
I've always said living in the medieval times would be tough, but that chicken, let me tell you, that chicken's got to be so good.
That's
Yeah, just
At least they had
completely unprocessed, just organic. Everything's organic in the medieval times. I'm just saying.
All right. That's.
You have to brush your teeth with like horsehair.
You're going into the what was that meme, like the Roman Empire?
Oh yeah. How often do you think of the Roman Empire?
Yeah, you're basically there.
It's more than zero.
Yeah, you think about it a lot.
I do.
Okay.
Yeah. All men have been conditioned to think about medieval times, the Romans, at least once a month.
Certain periods, in the Roman Empire, the tax collector comes, you could just kill him.
There you go.
So,
You got to work on your sword skill.
Can't do that today.
Can't do that.
You have a lot of medieval times experience, so maybe your
do.
sword skills would be quite good.
I've seen a lot of sword fights.
I'm buddies with one of the guy that
Really?
He's a knight at times. Yeah.
Is he? Do they move him around, or is he a specific?
No,
one?
I think he specifically stays here. I used to do.
No, I mean like which color he is. Like
the last time I checked, I think he was the blue knight, but I'm not sure. That's what he always is. Yeah.
because don't they have? Isn't it always set like the Green Knight is the bad one?
He's like the villainous one.
Yeah.
But the narrative always changes. It's a different.
Is there a different winner?
Different wins.
Oh, really? Oh, okay.
Yeah. I think they usually do it by like what group is the largest.
Yeah.
And has the most amount of kids, and then they make them win.
Yeah.
Gotta make the kids feel good.
Yeah. No.
We'll have to run some data.
Mm-hmm.
Figure it out. But yes, I'm sure I'll be going again this fall.
It's a
your annual
yearly pastime for you.
Mm-hmm. Anyways, market's red again. This is interesting.
You say again like yesterday was red. It was not. Yesterday was a face ripper to the upside.
Well, it's giving back a little bit.
Tiny bit.
Tiny.
A little bit.
But in the last week, we've had 1, 2, 3, 4, 5, 6 red days.
I know. It's pretty
6 red
crazy.
days, 1 green day.
Times are changing.
Yeah. Rates are changing, it appears.
Yes.
I think they heard me talking, saying, you're not going to cut rates, you're not going to cut rates. And then next day, they flipped it. Now we have an 87% chance we get a 25 basis point cut in September. A 40% chance, 60% chance we get another 25 basis point cut in October. And then it's a coin flip, whether we get another one or we stay at 50 basis points for the year. It's going to be crazy.
Money printer go burr. Turn it back on.
And I think this could be the situation where if they do end up cutting, that's when you might see some big market moves. Because so far it's been push, 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 push. There's still a probability that they don't cut. But if they actually do cut, I think that's when you see the reaction in the market. And you can kind of see it if you look at the September 17th expiration.
For what? SPX?
For SPX, which is really the September 19th. See a little bit of an IV boost there, but this will be more prominent as we get closer to that expiration.
Yeah. I mean, volatility hasn't really gone all that high. It's still in a pretty decent contango here, so there is that kind of drag on volatility, especially after yesterday. The vol crush yesterday was quite spectacular. I mean, if you look at the chart of volatility, it basically reversed the entire move from Friday in terms of volatility. We actually got to a low point, a little bit of a bounce today, but it has, volatility has not been sticky to the upside, to say the least. It hasn't held any sort of legs in any of the down moves that we've had.
Yeah.
Been no continuation. Even into last week where you had a little bit of market weakness, you can see volatility itself was basically unchanged / lower. So, no big move in volatility, unfortunately. Quickly to the markets, E-mini is down 25. They've bounced about 10, 15 handles from the lows today. We got to 63.15. That was the low of the session here. NASDAQ down 111. It's the weakest of the group today. You have some bigger moves in Nvidia was down like $4 or $5 earlier today. Meta's been kind of weak. Microsoft, and by weak I mean they are just down. They're all very much near highs here. You have some of the lower there, the middle tier tech stocks. I was looking at CrowdStrike today, which was down a handful. It's down 12 now. It's had a pretty big move to the downside. Netflix is one that since earnings seems like it hasn't caught an uptick at all. Apple and Amazon catching a little bit of a bid. Apple's actually up a tiny bit today, but it's near the lows. Amazon as well. It's up $3, but has looked like duty for the better part of the last week or so since earnings. So some weakness in the big name tech stocks here, despite the big move in Palantir up $10 and change. That stock seems to just go up every single day. You got the Dow down 59 and the Russell actually up 2. So the Russell bucking the trend. It was moving with everything else yesterday, but has been relatively strong. You got, as Mikey was talking about, bond rates projections seemingly coming down, or at least, you got the bonds at 115. So they're telling you that rates are coming in a little bit, which should be overall bullish for small cap stocks. They have a little bit more reliance on debt and financing and whatnot. So rates do kind of play into those a little bit more than the NASDAQ or the mini stocks. Oil down 68 cents / CL 65.61. Swift move from 70 and change here. As we talked about, volatility futures 1836 were up 41 ticks. They got as high as 19, so we are certainly off the highs. The VIX itself at 18 and change here. Vol getting bid, but not exactly exploding into this down move. Gold and silver have both been super strong. Gold's up $15, silver up 49 cents, and then Bitcoin giving up a little bit here in the 113 handle, down 1,700 on the futures, spot down 800. A little bit of a risk-off day across the board, it seems like. Risk on, risk off. Risk on, risk off. That's what it's been. One little dip, explosion, and buy the dip.
Yeah.
And then a dip again. Maybe we buy it here.
Yeah, it's it feels like that's the MO of low VIX environments.
Yeah.
Certainly a lot more dip buying because the general fear, like the real true uncertainty, isn't really there.
Sure, what it seems like.
Yeah, but we'll see.
Yes.
I think the September Fed announcement will be an interesting point in time. We did get through a lot of the earnings this cycle already, but there's still some more coming down the pipe. So maybe we'll see some big moves there. But yeah, it's been kind of two-sided.
Mm-hmm.
Coinbase got hammered.
Yeah, Coin's getting killed today too. Down 16 and change, 300. Man. Mm-hmm. Swift move from 450 to 300 in about,
it's very odd,
2-3 weeks. Yeah. See, it's at a certain point, don't you have to take some chips off the table? You ride from 200 to 450. Mm-hmm. I don't know.
Pure euphoria.
Yeah, I look at Palantir. It's in my spots of places to maybe get some short delta. Yes, but Had some good trades in there for earnings. We had the Strangler I closed out before earnings. I also had a Butterfly that was perfect at about 175 was kind of my spot for Palantir. So I closed out of that. That was a nice little trade there. Closed out of the HIMS position. So HIMS was one that I've been getting a ton of questions on. Stock was up at 65 and change. Had about a 10-point down move on earnings. I closed out of that ratio spread, so took some profits out of that in both this account and the Johnny account. So that was a nice one. OKLO, I bought in the risk on the down crab trade. That stock has gone parabolic as well. And Toast.
Mm-hmm. And yeah, we have a bunch of earnings previews in the News and Insights tab. I'll put a link in the YouTube chat for that.
Uber tomorrow morning, Shopify, NVO, Disney.
Yep.
McDonald's. So there's a handful. Yeah.
But yeah, we will be in Seattle.
Yes.
This weekend.
Come hang out.
Yeah. On Sunday.
Get a couple drinks on me.
Yeah. The old,
not really on me, on Tasty, but
yeah. The old crocodile. It's gonna be fun.
Very nice.
Do they still do grunge music in Seattle?
Oh yeah.
Oh, I think this place is like a grunge spot.
Grunge spot.
Yeah. They have a couple shows I think we have the option to go to.
Or we will see.
Yeah. I didn't plan this one very well. Should have gone a little earlier. Enjoyed Seattle for the weekend, but
I mean, we'll be there bright and early Saturday, so we can explore Saturday.
Time change.
Mm-hmm.
The flight back, disaster. Disaster. The time,
because we go backwards and then we're adding time.
it's like an 8-hour time difference.
Yeah.
And you get 4 hours flight plus 4-hour or 3-hour time loss. Woo.
They'll do you in. Have to call off Monday.
Well, it's on Monday.
We are.
So
We are
Monday's our flight, and Tuesday.
It's gonna be all loopy on Tuesday.
Yeah.
August 10th, and then we have the
Chicago event.
Chicago event the following Friday.
Yes.
So Talia Hall, great venue. Lots of great Mexican spots around there. So if you are going,
Pilsen.
plan on eating lunch there.
Yeah.
Afterwards.
Some good food.
But yeah, doors at 8, show starts at 9. Friday, August 15th. Reserve your tickets today.
Yes. Very nice.
Mm-hmm. Cool. Well, it is Thomas Tuesday. We're talking futures, specifically live cattle, which I don't have a position in. I'm very excited for it.
Getting in now.
I'm going to.
I think I do have a live. Yeah, I have a short call spread that's right at the money. So we'll see if we're on the same page here.
Yeah, we'll see.
I don't think so. I don't think so. That wasn't instilling confidence in my position. So that's okay though. Two sides to every market.
Yeah, I think we could get right into the slides. There's a couple interesting things going on with beef cattle right now. It's it's pretty crazy out there. So just go to the first slide. August, usually seasonally, we're headed a little lower.
Okay.
August, September, October before you get a little uplift there. But, one big thing is these Trump tariffs on Brazil. We have a surplus with Brazil, so it doesn't really make too much sense for these tariffs. But again, they're saying it's political. He doesn't like the person that's the president right now.
Yes.
So the tariffs are here. There's been a lot of exemptions announced. Beef is not one of the things on the exemption list. So that 50% exemption, it's going to hit these numbers, and we see this blue line. This is from S&P Global Commodity Insights. This is showing, the huge rise in beef imports from Brazil. And one thing that's going on is why we need all this beef is the U.S. supply is pretty low. We've had years and years of drought. The head counts have just been getting lower and lower.
Okay.
Now we have this thing called the New World screwworm. It's this fly in Mexico.
Okay.
A couple months ago, it was about 700 miles away from the border of Texas. Now it's more like 300 miles. So they're coming up. The USDA is doing a lot of stuff in coordination with Mexico to try to prevent these screwworms from getting up here, one of the things we've done is we've suspended imports of Mexican beef. So one of the main import avenues that we get beef from. And the screwworm is really devastating. They're trying really hard not to let it get into the U.S. supply. The U.S. hasn't had it for decades. When we did have it, it was killing, thousands of cows. This fly lays its larvae in open wounds, and then these larvae, they eat the flesh. So it pretty much severely injures or kills the animal. So what the USDA is trying to do is they're funding some production sites in Mexico where you actually breed millions of these flies and you release them, but they're sterilized. So you're releasing male sterilized flies out there. They breed with females, and then in turn the females become infertile. So it's pretty much like you're interrupting the life cycle of these flies.
We're playing God.
Yeah.
I've seen these movies. They don't end well.
Yeah.
That's a little scary.
Lord of the Flies?
Oh, it's different than Lord of the
I'm not
Flies,
sure how they
but-
do it. I think they radiate these flies or something. They do something to them to sterilize them, and then they release them by the millions, just out in the air. So if it gets closer, yeah.
Just a black swarm of just sterile flies.
Engineered flies. We know about engineering from a couple years ago, and that didn't turn out well.
Is this how the zombie apocalypse starts?
Pretty much.
Yeah, I mean, it's one way, but
yeah,
I get nervous.
They've been doing that though with haven't they been doing stuff with mosquitoes and all that?
Yeah, we do a bunch of crazy stuff. I mean, the other thing is India. India right now, Trump is saying we want India to take a lot of dairy, a lot of agricultural products. The one thing is India really doesn't like GMO stuff, so genetically modified things. They don't. Their stance in that country is it's harmful, so they don't take in a lot of that stuff.
I don't blame them.
And Brazil has these elections coming up soon, and if the president of India, accepts a deal where you take in a lot of this stuff, a lot of India's populace, they're farmers, so they, it's going to lower their prices for corn, it's going to lower their prices for cattle, all this stuff. So. It looks like products not going to get sent there anytime soon. It's a lot of political headwinds. From Mexico, the cattle's not coming in. And now Brazil, where we've been sourcing a lot of this stuff, those 50% tariffs are probably going to slow down these imports.
Okay.
And that's just going to drive beef prices higher and higher. The demand is still there. People are still buying beef. That's why these prices are staying elevated.
Yeah.
We like our beef. It's probably going to take us a little more price increases to really, throttle this demand. But we'll go to the next chart. This is just, your seasonality. So, August, month 7, you start going down through August. September, you're going down. It's not till October you find a little bit of increases. And the blue line is live cattle. That's what we trade, the LE symbol. Feeder cattle is, forgot the symbol for it, but feeder cattle is what moves onto the live cattle lots when they get up to a certain weight. So there's two segments of that market. It's really, we're counter trending the seasonality right now, and that's because of the things we mentioned, Mexico, Brazil, etc.
Screwworms.
Yeah, screwworms, all this crazy stuff. And, there really isn't too much, besides for that, too much analysis behind this other than, the chart. We've been supported by the 9-day moving average, the 21-day moving average for, going all the way back to the start of or late June. And we've maintained those levels. So the chart is telling us, the prices are telling us that, to stay long. Every dip, and there hasn't been many, there's been 2 dips over the past 6 weeks, and they've gone bought up pretty quickly. We're buying up a dip right now. I mean, prices up 1.7% today. Last week, we had probably the biggest down move of the year.
Yeah.
And that took us to the 21-day moving average, the 1 month, EMA. and it supported us again. So, you know, it's just a market where buyers are coming in, and the, you know, selling pressure is not lasting anything past 2 days. We'll go to the next chart. This is just from the USDA. U.S. cattle on feed down 2%. The marketing, which is cattle that are up to weight and go to the market, that is the lowest for June since the series began in 1996. So a lot of supply problems in this market, more supply problems coming with these tariffs on Brazilian beef. And it's just kind of a perfect storm of, you know, things to get these prices higher. You could short it, saying the prices, you know, we've run too far too high, but if you've done that over the past couple months, it has not worked out. You have to be very precise in when you take that entry, because you've only gone these couple times where it's
gone down.
It's really gone down, and it's you know, it's not doing that. So the seasonality trade, if you were coming into August, you were saying, oh, seasonality, we're slated to dip here. It has not worked. We'll go to the next chart. This is just net speculating position for non-commercials, and we are still maintaining that, you know, these this very long position. We've been at the longest since, you know, going back to 2023. If you go back before that, you have to go to 2019 during COVID times. So the market's still thinking we're very, very long. I mean, I think the market's right here. I think the speculators are right to stay long. I think it's, you know, getting in this trade, it's got a good IVR. The IV rank is at 87.8. I have an order filled. I did a short put spread, the 59 days out at 225, 226. Just a pretty simple trade. You know, either we stay the same or we keep going up. And if we keep doing what we're doing, you know, this is just a trade where you're doing what's worked.
Yeah.
You know, you're not doing anything fancy. You're not trying to call a top. You're just staying in something that's worked. And, you know, if the market keeps doing what it's doing, if these screw worms keep getting closer, the market's going to keep getting more and more nervous. These Brazilian tariffs stay on. That's excluding a big supply avenue into the U.S. We already have low head count. So, you know, even if demand drops a little bit, and I think I did have a chart somewhere in here.
You think that's the only way it flips the script? Is like demand dropping?
I mean, demand is dropping a little bit. If you look at the cutout prices, we have come down a little bit. I was going to put that chart in there and did not make it in there for some reason.
Oh, good.
But yet the market is not, you know, these slight decreases in cutout prices, which are where you slaughter the cow, you cut it up, you send the loin, the primal cuts, you send it out to the market. Those have dipped a little bit in line with seasonality. But the futures market has not, you know, it's not taken the cue from that downstream demand. It's taken the cues from the screwworm thing, the real stuff. It's still, you know, we're going to get over this 2 month of seasonality downtrend. And then, you know, for 60 days out, you're starting to get into that seasonality where you're lifting up again. So, I mean, I think this is a trade where you don't overthink it. You just jump into what's happening, you know, and, you know, these screw worms, they're not going to be, you know, unless they all decide to head south all of a sudden, you know, they're going to keep doing what they're doing. If these USDA reports come out that they're getting closer and closer, the market just gets a bit more nervous, you know. Maybe, you know, if they get really close, maybe all the farmers try to push a lot of product right away, thinking their herds are going to get potentially infected. Maybe that could create a little, you know, temporary boost in supply and bring prices down a little bit. Maybe that's something that can happen. I'm not too sure, but I don't really see anything that's going to immediately cause a drop in prices.
Yeah.
So.
Well, it sounds it sounds good. It sounds good. I have a call spread that I've had on. I think it was part of a trade idea or something from. I've had it for a while, and I'm right at the money. So I wish you all the best, but I'm
go out
selling.
Go out and buy some beef.
Yes.
Hedge yourself.
Yes. A little bit of a hedge, except it is getting quite expensive.
Yes.
You see it at the stores.
Yeah.
A pound of ground beef is like $9 now.
Yeah, it's getting high. I mean,
It's getting like a little bit much.
So you gotta go to Costco. I got 36 organic eggs at Costco for like $7. I'm like, how is this possible? Unless we're getting absolutely gouged from the other places.
Yeah. I don't know. It's quite
I mean, the
expensive.
one place that's cool is, have you guys been to Wild Fork?
Mm-hmm.
Yeah.
That's pretty cool.
You got some pretty good cuts there. I mean,
Yeah. We have one. Is that one on Halstead still? That one's still there. Yeah. Yeah. They do like the flash freezing of like
flash
local
freezing, vacuum sealed.
Westwater Farms could get on that.
Yeah.
You need a little second
I need
revenue
some more
stream.
land, so maybe if the neighbors sell.
That's true.
There you go. Sell to you.
Yeah.
Go on. Sorry.
Yeah, I just got filled. So I did a diagonal spread, very small diagonal spread. It's basically a calendar. But I bought the 235 in October, sold the 236 in September. That was a debit of $700. But just moving the 236 short to the 236 short from 235 gets rid of basically all of the upside risk, and it adds a lot more profit potential. So yeah. Same contract. The October and September both settled to the V contract. So it is not calendarized through different contracts. It's calendarized through the same contract.
Any other of the ags or something like that are? I mean, all of these are kind of at lows.
I mean,
Corn is getting
crushed.
killed.
You know, all the like satellite imagery, the weather, it's been really good. The crops look like high crop yields per acre. You know, it's just a season where a lot of farmers planted corn, and it looks like that crop is going to turn out pretty well. I mean, I don't know how the farmers are going to take this. I mean, prices are pretty bad right now. If you were looking back 20 years and you were like adjusting for inflation, corn prices should be up like $800 to $1,200 right now. And, you know, it's just, you know, without the government subsidizing all these corn farmers and stuff, I don't think anyone would really be planting corn.
Because the prices haven't gone anywhere. Is what you're saying. Yeah.
Yeah, but it's looking ugly. I mean, I don't know. I don't want to short here just because it's. I mean,
it can't go. It can only go so low.
Yeah, I mean, but it's gone a lot lower than I expected. I thought that that 400 level a few weeks ago, I thought that would hold. Then the 390 gave out. Now we're trading, 382. It's. I mean, there's some good volatility in there. It's just this is.
It's ugly.
If you don't get any like severe weather events like hail ripping through some of these fields or tornadoes, all that stuff, it doesn't look like there's going to be much relief as we get closer to this harvest. There's less chance for this crop to get impacted, and it's not looking like we're going to get any crazy heat waves through the Corn Belt. I mean, there's some chances for severe weather, but it would really be like some severe drought that would really hurt this crop.
Yeah, all these are basically at lows.
It's crazy.
There.
Someone was asking about the wheat calendar spread that I have got. It's the 560, 595. So that's a really long-term one, so I'm not doing anything there. But I bought the 108 day, the 560, and then sold the 52 day. 595. The 595 still has $120 of value there, so I'm not adjusting that, and it's really long term. So maybe we get a little boost here.
Yeah, we do have the WASD next week. It's on the 12th, so that's a week from today. A lot of people are going to be watching the acre or the yield per acre on the corn. It's not looking like it's going to get downgraded right now because, like I mentioned, the weather, everything, it's all looking good.
Okay.
Yeah. We'll be praying for it. But yeah, shout out to the farmers that shorted corn at 480 to lock in their price. Beautiful. Well, long live cattle.
Oh.
Long micro natty gas. Long corn. Long.
Yeah, we got that
long
natty,
everything.
that natty gas move. You had, didn't you get out? Didn't you have like a?
I still have the micro contract
You
up.
have a micro?
For natty gas, yeah, I'm taking some pain on it.
But now
It's helping a little bit, but yeah, I'm still.
Now we're at low, so I got to just.
Now you got to hold. You
weather the storm.
Yeah, you gotta let it ride.
Yeah, I still got a short put spread too at 3.
Mm-hmm.
So as long as we stay above 3, and I think I think I said 2 weeks ago I think we bottomed, but now we're up against this November 2024 swing low in natty gas.
How low can it go?
I mean,
can't be zero,
if
right?
that breaks, I mean, it could go down to 2.6, 2.7, but it's we're holding 3 for now, so that's good.
Any view on oil too? I mean, oil's had a pretty wild ride over the last like 2 weeks or so. Up to 70, back down to the 65 handle. I've been doing iron condors in there. It's been a nice little trade. I did a short position in my Johnny Trader account, a short call spread, so that worked out. But anything changing with oil for you?
I mean, I think iron condors are the right move to do right now. It's fallen back into its range that it's been in for, going all the way back to early July. We're at the bottom of the range now.
Mm-hmm.
I think an iron condor with a little room on the upside.
Yeah, a little skewed a little bit. Mikey's looking at it for an MCL.
I'll probably put that on today.
Nice. I like
A long MCL. I mean, you got OPEC saying they're going to do more. You got people doubting that Trump's actually going to put these secondary tariffs on the fuel.
The India selling of Russian oil, all that
like
stuff.
India and stuff like that. But you never know what he's going to do. So
I'll put an order in at 65 flat.
Ooh. There you go.
I want the flat order.
Gold and silver moving, obviously the rate effective, or you would think maybe ineffective, the projections for rates. You think they're going to continue this move, or are we bouncing back off that like kind of 3,500 top that we've had in gold? Like gold's been chopping between 33 and 35 for pretty much all year.
yeah, I think an iron condor here is maybe the thing to do. I mean, it's in the middle of the range pretty much right now.
Mm-hmm.
So I'm not going to try to, trade it long or short out of this range. I don't think that's the thing to do.
Yeah.
I mean, we've really come up here as rate cuts bets have come up, so that jobs report has helped us get this boost, but I don't know. I don't know. I think even if we get these 2 rate cuts, breaking above 35 is still not looking like it's really tangible too much right now.
Uh-huh.
I think the range trade is the thing to do here.
I have a gold futures position, but I'm going to put a slightly short skewed iron condor on in GLD. So I've got kind of 2 short positions in slightly tiny 2 deltas, 3 deltas in gold on GLD. And then my gold position, I'm like right at the money, but I've been rolling down calls, rolling up puts. So I need a little bit of a down move in gold, I think is kind of where I'm at.
I just did a 24-day, August 29th, end of August, call Brookwing Butterfly.
Okay.
Bought the 3480, sold the 3500 twice, bought the 3540, classic 20 by 40. I've done this like 6 times in a row, and they've all worked out just because on any sell-off, I'm removing the risk immediately and locking in a credit. But we'll see.
I like that.
It's been a great trade this year for sure.
Yeah.
Trading the price moves against what's happening.
This has been this year gold trading has been the most interesting I can remember.
Yeah.
Like the gold used to be one of ours, like why even trade it? It was kind of like bonds.
I remember you saying, who cares about these boomer rocks?
Yeah, the shiny boomer rocks. Yeah.
Yeah. But now
they're tradable. Now you got a little bit of volatility.
Yeah. I agree. Cool.
Sweet.
Yeah, I was filled on GC for $260 in the 24-day cycle, and I'm still working that MCL order.
There you go.
Diving deep into the futures market.
Awesome.
All right, popping over to the YouTube chat now. Colin, best P&L year so far. Love that.
Sweet.
Trying to learn futures options. I was wondering if you have any tips. Looking at ticks is confusing. Yes. So I would not trade futures if I had to do the math. I just wouldn't do it. I would trade an ETF.
Yeah. Or
Like-
just stay really small, or, the micros you kind of have to be directional with.
The micros are easy. You just buy them straight up or sell them.
Yeah.
But to give you a tip, Colin, so I don't learn any of these ticks. I know that they are what they are, but what you can do, and what I do is I throw trades up and I look at the information that's provided from the Tasty Trade platform. So like going back to, I think the lean hogs example is a better one, where like, so I bought the 59-day 235. So I click the ask there and I say, okay, I look at the max loss. So this is a $1,300 option. And then I went to the 31-day and I initially sold the 235 and I say, okay, this is a $630 debit. That's my total risk, nice and small. And then I go to the curve analysis. And
You have the 235 and then the what? The 240?
The 235 calendar.
Oh, calendar spread.
Yeah. So I looked at this curve analysis and I saw, okay, this is a $600 position. There's risk to the upside. What if I move this 235 call just up a little bit to 236? And now you can see it removes almost all the risk the other way. So it's a small diagonal. There you go. So now it's
236, 235, 236.
Yeah. So it's just a small diagonal for $700.
I'm moving the long option. Now I'm really messing everything up.
There you go. So this is all I did. I looked at this. I said, okay, $700. That's in my wheelhouse. No risk to the upside, which tells me that the max value of this 1 point wide spread is more than $700 because there's no upside risk here. And yeah.
We also have tons of resources on futures. A lot of them, these are not our wheelhouse of futures.
Yeah.
E-minis are $50 a tick. Like that's.
Right. But my point is, you can trade all these futures because the platform, it takes the tick sizes and everything and it converts it to dollars on that max loss, max profit line, and also the Theo here.
Yes.
So I use this exclusively. That's how we can trade, 6J options, which are impossible to even look at.
Yes.
Unless you do the same exercise. And then now you can look at these and just be like, okay, these options are $500 at the money, 30 days out.
Yeah. And I think the point being, too, of doing defined risk spreads.
Yes.
There's no, we don't really do any naked positions in futures because they're big. You get extra leverage. They have a lot more risk than the capital you put up. And so it's important to understand that the buying power is going to be far different than what the max loss is. Your max loss is going to be bigger on a lot of positions.
Yeah. And then the other little tip I would say is to determine the notional value of these positions is to go to the trade page and just pull up the nearest expiration and just sell an at the money put. So if you go to the 227, you can see, okay, this option is $1,700. The max loss is $89,000. So this is a $90,000 contract.
Yeah.
For what it is. But you're only putting up $1,900 to hold this contract. So I do this to determine the notional value. If I'm ever curious, I just sell an at the money put and just look at the max loss. And then add in the credit you'd receive. So those are some just easy things you can do to dumb it down, for lack of better words, or simplify it. Because, I find the ticks to be
a barrier.
They're certainly a barrier unless you do stuff like that. Let the platform help you out.
Yeah.
What do you put on chicken in medieval times? I looked it up. They would just roast it on a spit.
It's the
throw
most
some butter on there.
disgusting food.
Actual medieval times?
Yeah.
Yeah.
Medieval times.
No, I'm talking about like back in the
Gross.
day, like how they actually prepared food. They would
Oh,
just,
you've gone
it would
into
just
this?
be
You've
herbs.
been-
I just looked it up.
Yeah.
It's just herbs and butter. Like that's
yeah.
it.
Yeah. It's simple times.
But it's organic. Tell you that.
No, medieval times. Have you been to medieval times recently?
I haven't been in a couple of years.
Okay. It's gotten progressively worse. It's gotten worse since the food wise.
Yeah.
Since didn't they call it a dragon leg when they give you the turkey leg?
Yeah.
But they don't do
Now it's
turkey
a
anymore.
half chicken.
Half chicken, not even the full chicken.
Half roasted chicken. You know how much food that is? I can barely finish all of it.
Yeah, but it used to be the thing was that it was like an obnoxious amount of food, and you like dig your hands in,
Yeah,
and
you
like,
still
eat it
still
like
do
a.
that.
Yeah, I know, but if you get a half chicken, it's like not as sexy, and they're probably they're GMO chickens. That's no doubt.
sure.
Those chickens have been
Those are cheap,
pumped with shit in the back of the gross.
All of a sudden, you have the symptoms of steroids.
Yeah.
You leave medieval times because you're just
You need that
jacked on this.
You need
half
that
chicken.
thing of wine to just like sterilize.
That's probably GMO too. GMO grapes.
That's true. Yeah,
It's all GMO.
It's all GMO. Come on.
But if you're going to medieval times, you got to get the medieval times chalice.
Yes.
Because then it's like an extra $10, but it's like
Mike has like
glass.
10 of them at his place.
Yeah, it's like glass.
Drink out of it at home.
You drink it out of it at home, but you also get it's like free refills. Not free refills, but it's cheaper refills, I should say. And then yes, you can drink it at home when you're watching Game of Thrones or whatever you're doing.
Kingdom of Heaven.
Here you go.
There you go. That's a classic. It's a good one. Never got enough credit.
Yeah, it was underrated.
It was underrated for sure.
It's a good one.
For sure.
Let's see.
What E-mini's down 30. We had a little bit of a rally. Volatility was basically unchanged. Now they're selling off a little bit.
Are we staying long natty gas?
Yes.
Yes.
I have an at the money put spread. 21 days. We're there. I'm gonna hold this. I'm not looking to roll it. And with futures in general, just to go off on a little tangent, with defined risk positions, I try to hold them as long as possible. One of the other things that is funky about futures is that they trade on a curve. They're not exactly the same price. So our natty gas position is trading at about 3. The next contract is actually higher at 3.12. So when you're rolling futures positions, you got to roll based on delta rather than the actual strike because you're trading a different price, right? So, the 3 strike is a 45 delta. In August, if you go to September, your 45 strike is going to be like 3.1. And so we roll based on the delta rather than the actual strike because you have to adjust for the difference in price. And this contract is trading at a higher price. And so being defined risk allows you to hold it a little bit longer, not have to worry so much about it because you're putting trades on with the appropriate sizing. And then when you have to roll the position, just keep that in mind that it's not the same exact product or the same exact price.
142.20 strangle in AMD in September.
140 to 20. Yeah, I mean, the big wide strangle into earnings. I have a little butterfly on the upside.
Yeah.
Around 200 would be my spot.
Yeah, you'll get a little bit of a vol crush in September still. But yeah, I think it's a decent setup if you're playing for an inside move.
What about like the 150, 200?
Nice round
$8. You're not exactly playing. I mean, you're kind of playing for an inside move.
I mean, this could be your start to a core position.
Oh, you're telling me I'm getting blown off to the top side?
That's what the options are telling you. No, I think it's
make it a wide.
It's obviously a good starting premium.
Maybe like a 20-point wide. Rather just go naked here. All right, I'm gonna leave that on the back burner for now, but I'm thinking about that.
Ryan's looking at an SLV call zebra for September. The 33.35 call zebra for $300.
Yeah.
Sure.
Why not? Cheap way to.
Yeah, we've done this a handful of times.
I wish you did it yesterday or 2 days ago.
Would have been nice.
In the middle of last week.
Yeah.
Would have been a home run already. But yeah, a couple $100 to rent 100 shares, essentially.
Anything to sell against the Amazon long call from the earnings? No.
No, I'm
It's
stuck.
only $200 still. So the value of the long option is only $200, which tells you that the short options to sell against it are like 10 cents.
Yeah, nothing.
We need more.
Yeah. Good move today, though. Good start. Volatility's
Especially
super
into
low,
the
too.
sell-off. It's a good sign.
Yeah. It's unfortunate the vol has been crushed so much. You would expect to be making a little bit more than 30 cents, but it's not the case.
Sell a neutral back ratio against the screw worm. Sell.
We're fading the screw worm. They're going to genetically kill it off.
Yes.
Genetically modify and kill it off.
Sell the 31-day 228 call and buy 2 of the 236 calls. And yeah,
They're doing like a flipped ratio.
Yeah.
Not our wheelhouse, but do it. Small.
So yeah, it's like a $400. Looks like right now it's a $400 credit. But yeah, it's up to you. Why is UNH going up? Well, can only go down.
Stock has been left for dead.
So long. But yeah, this is a giant move.
I saw all sorts of rumors. Like I see somebody saying, "Can we make a rumor about NVO?" I think I still have a long position there, but there was some like speculation or rumor that Buffett wants to, sprinkle in UNH, which would fit his MO. But
Yeah.
I think he'll probably wait until all the bad stuff is done with.
Yeah.
And there was a, I think we talked about this before. When it dropped initially, there was a Reddit post. The guy took out all the equity from his home, didn't tell his wife, and then bought leaps in UNH. And
It's having a tough. She's having a tough couple weeks.
all right.
Yeah. Hopefully he just is diamond handing it. You know.
You have to at this point. I mean,
At this point, yeah, you
No
can't.
choice. Yeah.
You can't eat that sort of loss.
either tell your wife and or
Yeah, you got to somehow hide that. It seems like a lot to hide, though.
maybe not sleeping the best at night.
No.
I mean,
you got to think: are those posts real? Like some of them have to be real.
some of them are, they're
are
definitely real.
fake.
Some of them are.
Some of them are real. Some are fake. But I think that aligns with like UNH multi. What is this? What is this?
I think it's like 10 years.
There you go.
20 years.
Yeah.
I mean, it's been a huge.
Actually, it's not. It's from 2020. So it's a
2018-ish. I mean, this is pretty down there.
Yeah.
I mean, you take for granted 6 years. It's a lot of years. 6-7 years.
Now, if you would have taken the equity and just bought shares, I think that would have been
More
a
conservative
better scenario.
But that's not how you 10x.
That's not your mentality when you're taking all the equity out of your house.
And you're like, this is it.
Especially if they were listening to the 10x podcast. Have you ever heard this guy? It's this guy that's like, all you should ever think about is what's your next 10x.
Mhm.
It's like a very aggressive,
yes,
crazy podcast, but that could
All right.
be it. A couple more here.
Sure. E-mini's only down 19 now. Moving around. Volatility not doing much, which leads me to believe that this is kind of over with. Just another routine little dip. It's getting monotonous. Need some pop and volatility here.
If I get a sign on cattle futures, does it settle to ground beef or tomahawk? Good question.
No, you have to take all the cattle, actually. Yeah, so they'll be just in your living room.
Yeah.
I mean,
And then you got
40,000 pounds
20,000 pounds. That's what it is? That's
freezer space.
Yeah.
Large freezer. big.
Yeah, you're gonna need like a whole like shipping. You gotta need what is it? Multiple shipping containers? It's gotta be like 5 or 6.
40,000 pounds. I mean,
what can you fit? Like maybe 5,000 in each of those?
Yeah, it's a lot.
Yeah.
What's the plan for the coin trade? The coin trade was a symmetrical butterfly. That's just going to expire worthless.
Yeah, you're
because coin is down 100 points.
Yeah, I got a short put spread.
I still have it on. There's no reason to close it. It's basically worth nothing right now, but you need a swift reversal of this move for that to come back. I have a deep in the money Jan 26 naked call on AMD. What can I do for earnings today?
What's the strike?
Yeah, it depends on what the strike is.
Why are you in January?
Just a long leap call.
Selling it. I have a deep in the. Oh, maybe you're long it. Yeah.
If you're long it,
could sell something against it.
Yep.
You know, sell the
pretty much it.
190, 185.
If you're trying to get out on like a continued up move, yeah, so you could sell the 3-day 190 or 185. Call it a day if it reaches that point. Pins earnings play, hoping for an inside move. Double calendar. 33.42 August September.
I think I might get some short delta here. Fade that.
33.42. I mean, it's not. You're reducing basis quite aggressively, and it's a cheap trade. So if you want to do it, I think it's fine. Security sector all getting blitzed today.
Yeah, all those stocks. I know Palo Alto Networks is another one that has been just absolutely killed. Zscaler, see where that one is. That one's near the higher end of where it's trading. Net, I think Cloudflare had earnings before the open today. Yeah, those stocks are getting killed. Maybe Palantir is the new cybersecurity. They're just going to scoop them all up. $400 billion company now. Insane.
They just might.
Yeah. They got all our data, so why not?
Yeah. I have no qualms with that. Just take it all over. Monopolize us. Send me to the Tesla lab. On that note.
That's it.
That's it. We're out of time. So we're all long lean hogs.
I'm short.
He's short lean hogs.
Screw you guys.
Okay. Screw worm.
I want cheaper beef prices.
Well, I'm not sure you're going to get it.
Probably not.
No. But yeah, we'll post those to the follow page. Thank you for the analysis.
Yes.
A lot of people in the chat loving it. But yeah, if you want to shoot us a note on Twitter, I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow.
Peace.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We are back. It is Monday, August 11th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, bad day for gold.
Bad day for gold. Strange day across markets.
the gold story seems to be part and parcel of the dollar story. It's back up, but you don't really see consistency across these markets here today. You don't get a story where you say, oh, well, stock's down or stock's up, and from there emanates a risk on or a risk off type of a situation. It looks more like we're getting ready for some sort of shoe to drop tomorrow. Is it going to be the deal on trade with China, or is it going to be the CPI report? Maybe it'll be both.
Could be both. We got some interesting news over the weekend that's maybe parlaying into an interesting market today.
That we did.
NVIDIA and AMD, of course, having their chip sales approved to China, so long as they give a 15% VIG to the U.S. government. So much for being a national security concern.
The right word to use here.
So where do we find ourselves in dealing with China? We're becoming more like China. American capitalism with Chinese characteristics, if you will. Does that mean anything bad for the market today? Look, trade is going to continue, right? I think the investor class traders are understanding that maybe we're not really deconstructing the U.S. role in the global economy. We're just changing the terms. And so the dollars will continue to flow. The treasury buying will continue. And of course, we don't need the collateral of the metals then if that's the case. So mixed for stocks. But you think about how gold, the dollar, and of course treasuries are performing, all those fears, certainly fears that you and I have discussed the market talking about, different vibe. We'll talk about whether or not this is good for the broader stock market, which is trading a little choppy today. But you mentioned ahead of that, we do have a CPI report tomorrow to discuss.
That we do.
I'm going to make the claim that I do not care about the year-over-year figures. And the reason why I don't care about the year-over-year figures is because that's the level. I'm more interested in the rate of change and the direction we're heading in the short term. Why do we say that? Because we can take the month-over-month CPI readings, we can annualize them. And if you get a 2% year-over-year reading, you're looking at something like 0.18 to 0.2%, right around there on the month-over-month. I point out the month-over-month readings here in the Cleveland Fed Inflation Now Tracker because going into tomorrow, more or less in line with what we saw for June, but this is the impulse.
Yes.
Month-over-month readings are starting to edge up at the headline. Maybe not in the core, but in CPI and PCE they are. And this is one of two inflation reports coming down the pipeline before the Fed meets next in September. So I can't help but think, could this be a report that catalyzes a rethink over the certainty of that September rate cut?
It certainly might. And to your point, the Fed likes to look not just at the year-on-year figures, although, of course, that's sort of the benchmark that everybody looks at, of course, the Fed included, but it looks at the dynamics. And they get at those dynamics, and we've heard Powell talk about this with 3-month annualized changes and 6-month annualized changes. And if we look at what's been going on with CPI, and PCE for that matter, is we've started to see those things creep in the wrong direction. So looking at CPI here, the 6-month annualized core has been rising. The 3-month annualized core has been rising now for 2 consecutive months. The 3-month annualized headline rising. And of course, the 6-month annualized headline has been, at the very least, stopped in its decline. So this would be, and the PCE numbers show something very similar. And of course, that's the Fed's preferred gauge. But more often than not, when you get both CPI and PPI, both of which come out this week, you can back out PCE in a fairly straightforward way. Although, in fairness, the latest numbers did surprise the markets a little bit. So you can't back it out perfectly every time. It's not a 100% hit.
No, it covers like 80, I think it was 88% of the total PCE inputs. So
right.
But you can get very most of the picture. Yeah.
You can get very close. And to that point, the latest PCE number surprised on the upside. So we'll see if the markets start to make adjustments to what they saw there. But it's going in the wrong direction. And we know what happens because we saw this same thing last year. The Fed was waiting for things to start to trend correctly for 3 to 4 months, letting it unfurl and see that things have really turned before that big September dose of stimulus. And inflation by that time had to already have run in the correct direction for a while. And in fact, the easing was so dramatic in context that the market said, okay, whoa, we wanted easing, but this is a little aggressive. So when we look at this going forward, it's certainly possible that we get the kind of inflation number that gets the Fed going, well, is it all done deal for September? Maybe not.
Where do we find ourselves with the stock market today? Slinking. Slinking? Yeah. That's a word. We find ourselves slinking because we have, all words are made up. We find ourselves off the highs. The Dow Jones is underwater, 6416.75 here on ES. The steady decline of volatility does continue in today's session. IBR is back down to 13.1. We're range bound, 62.40 up to 64.60 or so. It's been a nice bounce off the lows that we found in July. The August rally, of course, has been furious post non-farm payrolls because, quite frankly, it means we're getting more rate cuts. And so I guess bad news is good news and good news is good news. And everything just means the market goes higher, Ilya, for now. But a range is here. A range is here. And so looking at this particular range, one thing that you and I discussed last week was, is it appropriate, even with these low volatilities, to think about a potential short iron condor here that plays through the end of this week? And given the fact that we're closer to the top side of the range and we have this inflation data due that doesn't look like it's going to be something that really convinces the Fed that it's time to cut, could make them just say, wait a second, hold on. Is this really the right idea? The range seems like it may hold the next few sessions. So I'm going to continue to play this. It expires at the end of the week. It's more comfortable than being directionally long, establishing a new position so close to the highs, 50 points off or 40 points off. And, do I really want to short it up here? This thing could run for a little bit and could break out. So just the range, I think, is the best bet for now.
I mean, I think you've just hit the nail on the head. We're so close to the highs that the risk reward to getting long looks terrible. Just because even if you assume that you stay within this range and absolutely nothing happens, then you're still looking at a lot more downside potential than upside potential, even inside the range. Now, of course, if you break out on the top side, that resets risk reward, and that's a different story. I've been basically sitting on put verticals in all three of the major indexes here, not the Dow, S&P, Russell, NASDAQ, basically on the idea that when we faded those Microsoft and Meta earnings, when even that couldn't get the market to stick higher, that was, of course, August 1st. And when we set that August 1st high across the indexes, that was going to hold July the 31st into August 1st, I should say. And so that's my story until it's not. And you'd need to take that high out for it to be something different. So in the case of the Russell, of course, it hasn't come anywhere close to those levels. The NASDAQ is at those levels, and the S&P is somewhere in between. So my NASDAQ short is making money. I'll leave that one alone. The other ones are a little bit underwater, but they're within that high, and so the idea at its core remains. And so we'll see. If, in fact, this is a top, then it should hold. If it's not a top, then the idea is wrong, and it's time to rethink the near-term bias. But to do that, risk-reward in the near term has to get reset, either by a pullback from these levels or by a break through these highs. One or the other.
One or the other. Russell, slightly higher vol. I think perhaps one of the things that we should examine here today is the difference between, say, the market cap S&P and the equal weighted S&P. The breadth here has not been fantastic. And while equal weighted stocks haven't really done much of anything for the past week, you can see this in the NASDAQ equal weighted as well. Not portending to a fantastic fantastic situation, just quite frankly. You'd like to see more participation, right? This is one of the reasons why I have a difficulty saying, we joke, if you see a bubble, what do? You buy into it, as Soros would do. But it's difficult for me to call this a bubble because bubbles mean everything rises. Everything's inflating. And you're seeing that in the tech sector when it comes to the Mag 7, but you're not seeing it much of everywhere else just right now. So frothy, I think, as Sosnoff pointed out last night, for sure.
Yeah.
This is very low vol, though, I think is the point. And I think if you look at QQEW versus QQQ, you see that not negative 10.8 IVR versus the 11.9 in QQQ.
Yeah.
And it kind of shows like who's steering the ship still.
Yes.
And if the Mag 7 lose participation, then we have a real problem on our hands because everything else is really not participating.
Yes. And I think this is where maybe the Soros advice gets into sort of the second half, where Soros's advice is, as you say, to run up the bubble until. And it's possible we're at the until part of it. At some point, you do have a bubble that pops. And of course, AI has been, and the Mag 7 have been something that have powered stocks, not just since the April lows. I mean, this was the story of last year too. So this thing has been running up for quite a while. Is this the moment? Nobody knows. It's impossible to know.
What about the perspective, right? Just playing devil's advocate here, thinking about this. If the Mag 7 stocks are the ones making all the money, because they are, and everyone else really isn't doing so hot. If you look at who provided the growth in earnings for the S&P 500 this most recent quarter, it's the Mag 7 names.
Sure.
Why would you want to be invested in other things that aren't making money in this environment? Why not just stick with the winners? So can't this just be capital rotation out of underperforming positions and just jumping in bed with the winners who, at this point in time, haven't let you down so far?
That is certainly a reasonable argument, and that is certainly an argument that has continued to propel these things higher. But as we know, there is, at some level, and again, it's impossible to tell what that level is, but there is at some point a level at which the price becomes too high. Not too high for any sort of fundamental reason, because I think we've left those on the table a long time ago. This is not about that. This is about speculative fervor, and whether that speculative fervor has reached some sort of a sticking point, and when it will reach some sort of a sticking point. And to this conversation, the Fed really is a very important question, because I think for me, as it does for most situations in this kind of an environment, it's about the cost of money. If money is cheap, then allocating incremental dollars to spin out the bubble further, and I use bubble here as shorthand just for egregious rally, whether it's justified or not is a subjective question. But if the money is cheap, it becomes easy to spin that out further. But if it isn't, then it isn't. And then at some point, you get to a place where the money is just not cheap enough to paper over all the various things that there is to be concerned about. And what we've seen since the beginning of August is that the markets have been reluctant to embrace good news and eager to embrace bad news. That's not the kind of an environment where you easily skate by unless suddenly the money starts to look like it's going to be very cheap and very soon. So it really is this CPI report. I think this is why the market is so jumpy on ISM numbers, more so than usual, why the market is so jumpy on NFP numbers, et cetera, et cetera. I think it's not even so much that the market cares about the cost of borrowing as it pertains to the business cycle, maybe even because the Mag 7s can survive a downturn in the business cycle. We saw this in spades during COVID.
Oh, yeah.
It's that, will the money be cheap enough to make it make sense to paper over the various risks? And if the Fed is going to be resistant into next year, and if we really have to wait for Powell to end his term for this to really really change, that might be too late.
You know, the importance of tomorrow's CPI report, only 40 points. It's been oscillating here, but 40 points priced in through the end of the day tomorrow. To contextualize this, through the end of the month, we have 131.62 points priced in. So not quite an even 1/3, but effectively 1/3 of the action the S&P 500 will see could be a result for the rest of this month, could be a result of tomorrow's eventual close. Now, thinking about that, 40 points in another direction, 64.50 on the high end. You know, staying short against the 64.60 high in terms of the short iron condor. If we do go to the 1 standard deviation move tomorrow, we'll be pressing up against that, but we won't necessarily have broken through yet. So the trade, I think, remains viable even going into CPI.
Yes.
I guess like buzzwords here, Ilya, knowing that the market is putting some stock into this, what does it care about more? Does the market want to see, how should I say this? Is there a Goldilocks number for stocks?
Well, I certainly don't think that stocks want to see a number that is so weak that all of a sudden the non-farm payrolls revisions look like just the tip of the iceberg. I don't think the markets want to see a very weak number. I don't think they want to see a very strong number, clearly. So this once again starts to look like the type of thing where what the markets want is something middling. I think they can probably wrap their head around a 3% core CPI number, which is what's on the menu. And that's probably digestible, considering that's the baseline forecast as it stands, and we're looking at an 86% chance of a rate cut in September. So I think the markets think probably by then it'll be okay for the Fed to make a move. But if you get a number even a little bit hotter, let's say you get a core at 3.1 and you get a 3 figure on the headline, given how jumpy the markets have been to outcomes they don't like and how much relative inactivity we've seen to things that should have been embraced but a few months ago, again, those Meta and Microsoft earnings blowouts that they were, and you can see that clearly in the stocks themselves, those should have been very, very juicy fodder for sentiment. And we couldn't make that go. The EU-US accord on tariffs.
The good news was exhausted, basically.
That should have been great. On and on and on we go. Last week, the selective reading of the PMIs that come out within 15 minutes of each other, and the markets go, yeah, this rosy one, we don't care about that one. We care about this bad one. So the markets are picking and choosing here. The response to earnings that you were talking about last week, same thing. Markets are much more reactive to bad news than good news. So something is occurring here. The mindset is changing. So I think the bar is relatively low for an upside surprise that spooks. I think the bar is very high for a downside surprise that spooks. I think the markets don't want to see us go above forecasts, but it would take a really violent miss for them to not like a lower number.
So 90% of companies, you mentioned this earnings issue, were good. And so I say good news is really not being rewarded. Bad news is being punished. According to FactSet, the split has diverged even more. So the metric here is what happens to a stock in the 2 days before, 2 days after its earnings release. If it beats expectations, historically speaking, the 5-year average is a plus 1% gain. If they miss, the 5-year average is a minus 2.4% loss.
Yeah.
Last week, that split was plus 0.9 to the upside and minus 5.6 to the downside. Now that we have 90% of the companies that have reported here, we're seeing an average increase for beats of 0.4% during that window, and misses are minus 5.5%. So
yeah,
one of the reasons why I don't think these trade deals matter is because the signaling from the administration has been directionally, let's make a deal, right? Like these numbers, they don't really mean anything. And actually, that's one of the reasons why I don't think I'm shocked SMH is the leader on the board today. We only have 4 sectors of among our 25 in the positive. Why I quip about this having weak breath in today's session. But yesterday, when we saw NVIDIA and AMD, the news that's coming out, they get 15% tax hit directly to the US government if they sell chips in China, which begs a whole nother question about whether or not, are we really decoupling from China, or do we just have to keep the doors open? But my view, I said this with Tom yesterday, Ilya, I think 85% of a pie is better than having no pie at all. And so NVIDIA and AMD here are among your leaders today. Whether or not it lasts is a different story. I don't think they're immune to the broader swells of market concern. But we can talk about America.
Extortion is better than an embargo, though.
I mean, from the market's perspective.
From the market's perspective.
Seems
from the market's perspective.
The case.
When you value the shares of NVIDIA, when you value the shares of AMD, and you go, they're either selling to China or they're not selling to China. They're generating earnings or they're not generating earnings. 80% of earnings is better than 0% of earnings. We'll take extortion over an embargo. And what's particularly interesting about this is that, and Bloomberg and the Wall Street Journal picked up on this, within China, they've started to talk down the quality of NVIDIA's H2O chips. Basically saying, yeah, we don't even want to buy your chips anyway. Forget it. And so it's an interesting kind of set of things. Perhaps they're on both sides attempting to dilute the idea that really the president and Xi Jinping want to be doing business. And then now they need to sell it to the hawks on both sides of the spectrum. So on this side, we get grumbling of one kind. On that side, we get grumbling of another kind, particularly from those areas of both of their support that is wary of the U.S.-China relationship. In China, obviously, the hawks have been spun up in the context of the trade war. In the U.S., China hawks are now the predominant kind of bird, as it were, when it comes to China on both sides of the aisle. So you have a lot of interesting perspectives now, and a lot of people that don't like this, but from the market's perspective, capital is going to flow. Good.
I don't want to make this political, so we're not, but I find it interesting that the market, like Apple did the same thing last week. They went and, kissed the ring, so to speak, and their share price.
Put a little money on the table, said, hey, say, good Lord, we don't need to, we don't need to have a problem in the fiefdom.
It's Gilded Age 2.0 then.
Yes.
Which, people could go back in history, read up on the Credit Mobilier scandal with Vice President Schuyler Colfax. If there was, of course, the whiskey ring scandal in St. Louis under the Grant administration. And basically, people were paying the government just to be able to do business.
Especially the second one.
Yeah. So, but like the point is that, sometimes that's the cost of doing business in America. Do the markets have a problem with it? That's our only concern here. This is not about political economy or ethics. This is about whether or not the doors stay open. So just keeping this in mind, right? Maybe there's a little roadmap here. If I get isn't the CEO going to meet Trump this week?
I would encourage folks.
It's up 4.38% since that news came out that he's meeting Trump this week. So
I would encourage
that's how you play the game,
folks. If you haven't watched Gangs of New York in a while, give it a rewatch just for a little refresher of words like Tammany Hall and tweed and things like this, just, to reacquaint yourself with where we've been, just to get a little bit of historical perspective on what we're watching here. This is by no means an unprecedented kind of thing, and obviously in a Martin Scorsese movie, it's very stylized, but you do get the elements and you do get the vibes of exactly what this is looking like in a very glossy package that's very enjoyable to consume.
You don't have to force me twice to watch a movie with Daniel Day-Lewis and Leonardo DiCaprio and Liam Neeson. Sorry. Has to be rewatched. Okay, let's keep this train moving here. Treasuries are up across the curve. Again, thinking about how this market's reacting to the NVIDIA news, it seems that the Trump administration, for all of the headlines that we see, they're really prioritizing U.S. corporate market access abroad. And if that's the lens with which we're going to be viewing things, that means the spice continues to flow. We, of course, will be buying trinkets from China. China will be buying trinkets from us. We have a trade imbalance with them, so they'll recycle the excess US dollars back into our debt. Let's keep the party rolling. No reason to empty the punch bowl, Ilya. Let's get along. So, that's right. Bonds here, up a little bit. Both bonds and notes up here a little bit. Do you have any strong feelings on the long end of the Treasury complex this week with CPI tomorrow?
I'm still long. It's been a crawl. I've had the trade on for essentially a month at this point, a little bit over, as a matter of fact. To be perfectly precise, I've been holding it for 33 days. Just looking at my dashboard here, I've got 39 days left to expiration. The market is crawling, but it's crawling in the right direction. And frankly, the kinds of things that we're seeing here engender the idea, to your point, that the recycling of US dollar surpluses into the Treasury market continues. Frankly, if by some incredible luck, this meeting in Alaska, of all places, really can't make this stuff up. The president really does love a great TV story. The U.S. and Russia meeting in Alaska. Alaska, of course, famously sold to the U.S. by Russia. This thing could have very interesting dimensions to all of this. Because if, in fact, there is some sort of a deal here, or at least the outlines of one, well, then the relationship with China can get much better. Because ostensibly, one of the big sticking points is China is enabling Russia to continue this war by essentially being its commercial partner of last resort amid sanctions and near embargoes almost everywhere else that matters. And if you get some sort of progress here, there's all kinds of things you start to unlock in the conversation with China, in broader normalization terms, all of which means that you can start to step away from some of this anti-dollar siloing of economic activity with China's help. That just helps dollars, that just helps recycle more capital back into U.S. debt. So lots of interesting things on the table here. And frankly, I think if the CPI number is untoward and stocks don't like it, the long end might actually rally anyway, because it would suggest more rate cuts are going to be needed downwind, and it would speak to the Treasury market's longer-term haven appeal now that you've sort of defused the bomb of self-immolation that seemed to appear in the wake of Liberation Day.
Well, we're sitting basically at the midpoint of the post-Liberation Day trading range, which captures the year so far.
Yep.
This has been a brilliant spot over the past few weeks and months, early July, here at the start of August, to put on something directionally neutral. And so, as it were, would I do this trade again today? Again, we're taking a look at the short iron condor, 2 points wide, wrapped around the 1 standard deviation expected move, 46 days out. That gives you 65% probability of profit, risking right around 4 to make 1, a little bit under there. Buying power is almost in line with this is not an exciting trade, but it's been working. So not going to dismiss it. I think that it's a 5.2 IVR. So this is the other side of it.
That's the only thing, right?
This is a big product.
That's the sticking point. Yes.
Yeah, it's a big product. So maybe not ZB. ZN is probably a little bit better on the future side of the equation for your average retail trader. And the difference here in volatility, it's exactly the same thing, 5.3. So you're not going to get any extra benefit from being in ZB. ZN is the more appropriate of the two, in my opinion. And so what do we see here in ZN? Guess what? Another short iron condor. And would I put it on at these strikes today? No, I may do it a little bit differently, but it would be around these levels is the point I'm getting at. And, to that end, carry on. There's no reason to change the path forward. Risking 3 to make 1, yeoman's work.
Yeah, I mean, I think for me, nothing has changed here. The creep continues. It's slow, but so are bond markets. So who are we to be surprised? We don't want bond markets to be swinging like a penny stock or a meme coin. That would be bad. That would speak to all kinds of other bad things in the offing. We saw that in April in spades, of course. So we don't want that to happen. So if we're going to slowly creep from the lower left to the upper right, we're still creeping in the right direction.
You know what's not creeping in the right direction today? Metals, which is really interesting.
I'm pretty happy with this because we talked about.
You played brilliantly again
on first call with Tom, and of course you and I talked about this on Futures Power Hour on Friday, saying, "Well, hold on, has it actually broken?"
Oh yeah, we haven't even talked about this on air. You and I were speaking on Friday, complaining about how gold was supposed to be the haven from tariffs, and thanks to the Swiss tariff news, it was probably going to be something like, do I really want to stay long given what just happened with copper? People who are listening will remember that. If you don't believe me, go check the tape.
Yeah.
Because just after the show ends on Friday, what do we have? We have news here right at 1:55 p.m. Eastern time. And literally, we get off air and this hits. The Trump administration is going to clarify what it means around those tariffs with Switzerland. And so gold has been a straight line down since then. We were up near $3,500 an ounce. We're now closer to 34, which, Ilya, now you've been short an iron, short a call spread up here. I question, you have called this out very diligently here in recent weeks. That 3,400 is basically the midpoint of this trading range since April. Do you evolve your position now into something that's directionally neutral instead of leaning short deltas?
Not yet. At this point, I just wait. There's lots of duration in the trade. It looks like it got rejected at the top of its range. Let's see what happens as we move into the bottom of the range, if that's what ends up happening. We might get a spicy CPI number. Markets have been a bit wrong on their inflation forecasting for the past several numbers. In fact, that's how the markets got themselves all frothed up with maybe we won't have a September rate cut before that jobs report, because the market, frankly, has been forecasting inflation on the softer side of what's actually occurred. So looking at it here, I think you get to a place where gold could very easily get spooked back down to, let's call it 3,200 or the inner part even of that range. So for me, I don't think anything has changed. I'm sitting, I'm holding. We'll see how this develops from here. I think the most kind of straightforward thing for me here is just to be short vol and wait.
So last week looked like we were breaking out. No longer. because we're now back into the consolidation. If this is the appropriate technical interpretation, you have a triangle there. What do you see on the other end of this triangle? Up green, doji, down red. Evening star candlestick cluster, as our young charting friend Josh would say at home.
That's right.
We're back to the 1 month moving average. You point out being at the midpoint of the range. This could be a lot more chop. Do we take a stab again, reestablishing longs at the 50-day? It's held up. That would be closer to 33.50 in the current contract, which that means we'd be heading down a little bit more here, another percent or so. Silver, not as bad as gold, although still the same thing. 1, 2, 3 for the rectangle. And we go here. Okay, Ilya, left shoulder, head, droopy right shoulder. The metals all of a sudden aren't looking too hot. Now, last week it was, I could make the excuse that, I have 80 something days to go in the silver position. No matter how I'm slicing this, particularly if I try to slice this with the prior uptrend, that looks like we try to rally back into the trend and failed.
Yeah, that's right.
So there's the metals really not great. Not great.
And if you take a look at the gold chart, and let's say you look at a 8-hour, if you were to put a line directly through, let's say 3,400, then you do get that sort of oscillation, and you can see its bounds. You're basically right on that in the Z5 contract. If you look a little bit closer to home, you look at, let's say, GCQ or even the September contract, then you'll see it's through those levels. GCQ, GCU,
GCV.
It's taken those levels out today. So as you look at that, you go, okay, well, maybe it's the bottom of the range that we're aiming at now. Maybe we have to see that next before anything else. And that's what? Just under 3,300 for most of these contracts. So let's see. Let's see if we go anywhere ultimately.
I'd point out here in the GCV5 contract, we talk about being at the midpoint. I look at the post-Liberation Day high in gold, the flash high that we had. We didn't close up there, but that is where we hit a high, 35.63. And then I looked at the flash low in mid-May, once we get on the other side of the US-China announcement in Geneva, Switzerland, that we would have some sort of truce, right? Another 90-day pause, which conveniently ends tomorrow.
That's right.
The midpoint in this chart is 33.70. Which GCV5 is at 33.76. It's one of the reasons why, if I'm looking, forget even 45 days, go out to 29. Just for the next, just what's going on with this week. Let's pull this back in. We'll go to 29 to you. 68% probability of profit, risking 1 to make, or risking 2.5 to make 1 kind of deal. Not the worst thing in the world, right? No. In fact, for this week, I like it. Let's see if we get filled on it. Let's go directionally neutral in gold on a shorter term basis for the next few days. We're at the midpoint of the range. There's enough vol here. And if silver is any sort of guide, silver vol has collapsed today. Okay. The low IVR reading for today's session is where we currently stand right now. That's not been a good sign for gold or silver in the past. High IVR for today was 16.778. Low is 1.282. We're currently 1.6. So that relationship always bugs me. You get the pullback. If vol stays low, wait till we get back into the 50-day maybe. Maybe it's down to 36. Thinking about cheaper calls, but bad news bears. If we lose any further ground in gold or silver, you probably swing to the downside of recent trading ranges. But hey, another trade. Let's make it. Oil up, nat gas down. Let's go over to our crude, which is up by 0.08%. This has been an absolute magnet, sir.
This line just keeps working. It just keeps working and working and working.
Wherever you put it, 63, 64. I'm still operating over in the CLV5 contract, which now sitting at 37 DTE, playing the trading range, which we're not quite at the halfway
midline
mark.
Just wants the price there.
it seems to want the price there. I would look at and this could go all the way back further, but you do have a band between 62 and 64 effectively, where it's been an area the market has centered itself. At a 22.7 FER, I get that it's not super appealing, but even so, right, thinking about just what kind of trades could be put on, it's a quieter week. Could this work? 63% probability of profit, risking 3 to make 1. Standard. Very typical, looking to extract the vol out of this market. There's not a ton on the board, but this is still in the wheelhouse of acceptability as far as I'm concerned. Am I going to double down and put another position on the table here? No. But as part of that checklist, would I want to put on a short iron condor today as thinking about the justification for holding on to this position? The answer is yes. And we don't need to overcomplicate it with oil. If there's geopolitics off the table, maybe an inverse geopolitics, Ilya, this thing collapses because of a Russia-Ukraine deal.
Could be.
But directionally long,
no.
The range
directionally long doesn't make sense to me. As we've been talking about, I think the thing that makes the most sense in my mind, if you're not going to be directionally neutral, if you are going to take a directional bet, is to let this axis break and then look for a directionally short opportunity. Other than that, I'm not terribly enthused. So I'm just waiting here. I'm sitting on the sidelines and saying, okay, well, if I don't want to put on something neutral, which I don't, just because that's not the way I think about markets, then this is not the opportunity for me. I just have to wait. I have to let this thing pick a lane, and then off we go.
Natural gas prices here struggling. They try to bounce back at the start of the week. They're now down by 1.54% following the gap open lower. So technically, they are up in today's session following that gap open lower, but we're still not able to get back above that pre-election high.
Right.
Pre-election low, which is basically 2.96. This is still catching a falling knife. There is no sign of upward momentum. The rate of change for the 21 and the 50-day moving averages, your 1 month, and then the psychologically round 50, the rate of change is still increasing to the downside. So until that stops, there's really, there are times when it's appropriate to try to catch the knife. You see momentum break. You see the rate of change on a 4-hour chart. The shorter term moving averages start to turn higher. But the slope here is actually still negative 3 for 3, even when you go down to the 4-hour. Not that any of these numbers mean anything. So who looks at a 21 4-hour chart? Anyway, but the point is that the moving averages are still slope negative. So this is still not a catch a falling knife, even on a lower term time frame.
Absolutely. I mean, this is one of those times to remember that the markets don't have to anything. They don't have to bounce just because they've fallen a lot. They don't have to sell off just because they've rallied a lot. They don't have to mean revert on anybody's timeline. And so just because the risk reward here is much better being long than it is being short, nothing says that this is the spot to do it. And the risk reward is simple. There is a lot more room, seemingly, on the top side than there is on the down side. But for that logic to make any sense, you need to see some sort of sign of a turn. There has to be a tradable signal of some kind to tell you this thing is maybe done falling. But
I don't think
even have that here.
No, I don't think we have that here. But what we might have is enough volatility still. And I'm not placing the trade myself. I'm still in the timeout box for natural gas. I don't like, I had 2 bad trades in a row here. I'm not going to trade it the rest of August, but this is a future show and it's not just about me. 64% probability of profit, basically risking 2 to make 1. You want to go short iron condor here in natural gas. We go back to the chart. You have highs right near 3.6 in middle of July. So just stepping on the outside of there on one hand. And then we think about where the 1 standard deviation move is at 230. Wow. We could actually pull this up a little bit maybe and get a better sacrifice and probability of profit, maybe start to look at a better risk to reward, possibly closer to 1-to-1. Okay, that's perhaps too cavalier. But the point is that calling a direction, I think if you're going to call a direction, the shorts have it.
Yeah.
But if you look at vol extraction, 41.8 IVR. Ilya, we need to keep going to the currency world because slight early exit here today. We're going to see why these if these ribs are sprained indeed. So the pain stops. Got to get to the X-ray. Dollar bounces back. Don't ever. It's just terrible. Dollar bounces back. So DXY here in today's session, charging higher, not quite clearing out the levels that I'm looking for just yet. But I do see a market that is trying to regain its footing, up versus the euro, up versus the yen. I think the yen is the most interesting story here, if only because it has the highest IVR, 44.5. And so if we want to extract the vol in a typically tasty methodology at 53 DTE, this would mean doing something like short the 118, 119, 63% probability of profit. If this thing breaks higher, you're going to have some room before you get back to the yearly high to kind of reconsider the position. Currency shouldn't move that fast. Given how gold and silver are behaving, let's do it. The euro, 53 DTE, short call spread. Are you still a dollar bull?
I am. And for me, what this means is that basically the long dollar futures positions I have on, which I have on just the micro futures directly. I'm not using options. And that's how I'm managing size. There's not really options on the micro futures of any significance. And so I am just sitting here on long outright positions, short euro, short pound, short the Canadian dollar, short yen. And I've been sitting in these positions really for quite a while at this point. As you know, I started laying them out when the British pounds started topping in early July. So I'm sitting on positions now for almost a month and a half. I don't see any reason to change tack. I think you really see very clear signs of topping, especially in the Canadian dollar, especially in the Aussie, but certainly also in the pound, certainly also in the euro, certainly also in the Swiss franc, which is now a futures contract that we have on the platform here. Alas, not micros, but we do have it. And so I have all of this on. In the case of the yen, the franc, I have it on in spot just to manage size down. But everything else is micro futures. I don't think anything has changed. I think you get this week the kind of catalyst, perhaps from CPI, that revives this move. Because if CPI is hot, well, then the dollar goes higher on yield grounds. If that hot CPI number spooks the stock market, it goes up more because you get yield and risk aversion grounds. If the CPI number is exceedingly weak, shockingly so, this is an unlikely scenario, I think, be clear, then you get a risk aversion sweep. The worst possible thing here is if the CPI number is very risk on, and then you go, well, but then what? The rate cuts are already priced in. How much damage is the dollar going to sustain there?
Ilya, we're going to talk about CPI tomorrow, of course. Should I subject Tom and Tony to that and let me explain? I think so. Canadian dollar, 42.6 IVR. Last or 2 weeks ago, at the end of July, when it started breaking down, we looked at a short call spread here. It bounced back a little bit, but now it's turning lower against that 2150 day. So is it still appropriate to do something at the 53 DTE in that area? I think you'd actually be a little bit more aggressive right now, right? Short the 73, 74 instead of just the 50 pips wide. But still 55% probability of profit, a little bit better than a 2-to-1. Either way, there's vol here in the currency futures. Canadian dollar might be tougher to get filled than the euro or the yen. And I guess What's next on the calendar for tomorrow? It's a busy day. If you're trading the pound, you have UK jobs data. If you're trading the yen or the euro, you're going to see movement because of the cross currencies. You have zoo economic sentiment, which is just a reading, but it's an important reading, like our U of Michigan. We have inflation data from the US. We have Fed speeches in the afternoon. We're going to have, of course, then our oil inventory. So there's a little bit of everything for everyone tomorrow. Every asset class gets touched by the news. And to that end, let's see if we get those 40 points out of ES, Ilya. Will we hit the 1 standard deviation move? Hopefully not. Otherwise, those range trades are busted. We're done here. I'm going to go get this rib patched up. We'll see everyone later on overtime. Good luck trading. After a bit of an extended break, you'll have Dr. Jim Schultz with From Theory to Practice. Cheers.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
The
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain, and I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. I have to move back in order to see everything. And somehow when you're on air, you're looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
oh, here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Man, welcome to the Honda Civic is Gone edition of what it is that we are trying to do. So, got in touch with the insurance guy over the weekend. He's coming to get it today. He said, listen, man, it's probably gone. You should probably just say your goodbye this weekend and pay your final respect. So we are obviously going to be in the market for a brand new 2010 Honda Civic in the coming weeks. I will keep you guys updated. Thank you so much for following along this journey with the Honda Civic that I've had that car for. Man, it's been at least 10 years, maybe 11, 12 years. I think I got that car back in Charlotte, so it's definitely hard to say goodbye. Boys to Men nailed it about 37 years ago. So thank you guys for watching the show. Thank you for being a part of what it is that we are trying to do. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. And of course, you can drop whatever questions you might have for me in the chat, and I will try to get to as many as I can in the course of the program here today. But Josh, go ahead and bring us into the market. Let's take a look and see what might be happening there in the old stock market. We got some things cooking. Even the S&P is down 6 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 24 on the day. Got the boomers down 188, and you've got the Russell 2000 futures index down a point on the day. Very, very quiet day. Incredibly quiet day. Not very much action on either side of the market, which makes sense because if you guys know, man, tomorrow morning, this is not good. At 8:30 Eastern, 8:30 a.m. Eastern time, we have a CPI print that's going to drop. It is unlike any other CPI print that has come before. It is indeed the most important economic print of our lifetime. So I would imagine the market is preparing for that. The market is in preparation for potentially it having to say goodbye itself to itself. And so bonds up 9, that doesn't make any sense at all. But hey, it's only Monday. We've only got 5 more days. Like, don't worry, it'll all be over before you even know it. And we'll be right back into another weekend. So bonds up 8. You got notes up a few ticks. You got oil up 7 cents. You got UB40 up 12. You got, man, look at the shifties. Whew, man, somebody check on your neighborhood shifty. Down 82 points on the day, man. Look at gold. Silver also down 71 cents on the day. And so the shifty's getting spanked. Silver bros, the Hunt brothers getting slapped. And so, man, this is just, man, it's not good. Got Bitcoin down a couple thousand on the day. You got volatility is up. Volatility futures up a nickel. And then spot volatility. Let's see, spot volatility is, I think it's up a little bit more than that. Yeah, you've got VIX up about 70 cents on the day. And so you've got the VIX up to 1585, up exactly 70 cents here in this moment. So volatility's on the rise as the market's not really doing much of anything on either in either direction. But nevertheless, man, you guys are here with me, and I just, man, I appreciate you guys. All right, so let's go through the portfolio. I want to go through at least a few things that are happening in the portfolio. Let's kind of go through anything that's notable with the positions that we currently have on. And then, of course, we have, a binary event tomorrow morning with CPI. So I thought, hey, let's go ahead and trade the binary event tomorrow morning. Let's go and see if we can't get a little something cooking for CPI there in the morning. I mean, a Monday is a good day to light a stack of cash on fire. So if I take a look at my Amazon position, this is one I definitely wanted to talk about, because this was a put that we sold for earnings. That was, let's see, it was a couple weeks ago, maybe. I go to, let's bring up my chains here really quick. The old trusty Allison chains. There you go. 731 we did this trade. So 731, we sold this put alongside this butterfly. The butterfly did not work, so that was an expected move butterfly. That did not do what we expected it to do, pun intended. And so that guy's gone and never to be seen again. But the 731 short put that we did, it looked like it was going to be under some water too. It looked like it was going to take some heat as well, but it never really did. I'm not even sure that Amazon ever pierced down through the 210 short strike. We'll take a look at the charts here in a minute to see if it actually made it down that far. But right now, we're in a pretty good spot. You've got Amazon down a little bit today. But again, this is the power of a short premium. Like, this is the power of selling out of the money premium. You don't have to be right directionally to move forward with your P&L goals. Now, again, as we kind of talked about this morning with Tom and Tony on the Skinny on Options Abstract Applications, if you are directionally correct, it makes things a whole lot easier. Like, if you are able to nail the direction of move, which will happen to you from time to time. I mean, it even happens to me from time to time. And I can assure you that is just sheer luck. But when it does happen, it does make your work a wee little bit easier. But you don't need it to happen. And that's kind of what's happening here with this this Amazon position. In fact, let's see here. What was Amazon? Let me delete all that. If I right click and I do a view market state snapshots, what was the price of Amazon when we put this trade on? So, oh, wow, look at that. Okay, all right. So I'm gonna leave my mouse hovering on that. Oh, we missed it. I'm gonna leave my mouse hovering on that yellow diamond there. There you go. So the price when we sold this put, now if you saw the show on July 31st, then you saw this happen in real time. If you didn't see the show on July 31st, go back and watch it in the archives because your boy needs that watch time. But Amazon was 234. So Amazon was selling at 234. It's currently at 220, almost 221. We're down on the position, but we're only down about 50 cents on the position, even with the stock being down 13, 14 bucks. That's pretty good. Like, that puts us in a pretty good spot to potentially be profitable on this trade in the coming, days, weeks. I mean, whatever it takes, essentially. But this is a really, really good example of how you don't need to be directionally right to be in a good spot with the trade. Now, again, to be fair, we're still losing money on this trade. This is still a negative trade. We are taking a loss on this trade, of course. But always remember, what is the end game here? Like, always remember, where is this thing headed when the dust settles and it eventually goes all the way to expiration? If I were to go that far with the position, I probably won't. I'll probably manage early, 50% of max profit, 21 DT, whatever it might be. But just understand, where is this thing headed? If it's still out of the money, I'm in a really good spot. And not only that, but we're not like on the razor's edge of being out of the money. We've got $10 of buffer between where the stock price is now at 220, 221 and the strike price of 210. Like, we've still got a decent amount of cushion on this position before we're, in a much worse situation. So the Amazon trade is working out okay. I mean, we'll wait and see what happens over the course of the coming, days and weeks, but Amazon's doing okay. So Amazon's doing all right. So Best Buy, we'll skip over Best Buy just to, refuse to pay homage to the P&L Open Bros today. We'll skip right to Chipotle. Man, let's look at our Chipotle check. So take a look at this, guys. Once again, I feel like, I don't know what this feels like, but it feels like we're doing something we shouldn't be doing. Like, we're running from the cops. Like, we're just kind of cheating the system. I mean, look at this extrinsic value that's left in this Chipotle option. It's $1.50. And yet we still have not been assigned on the position. And I don't necessarily want to get assigned. But again, and I've mentioned this, I've been very clear about this the last week or 2 weeks, however long we've had this trade on for. It's okay if we get assigned. We're not really going to be in a different position from a risk standpoint. We're holding a deep in the money short put. You can see the delta on the deep in the money short put is 98. In fact, it's 98.5. And so 98.5, if I take the shares, my delta is going to be 100. So 98.5 and 100, not too much of a directional difference in terms of the magnitude of the bullishness that I would have in Chipotle long 100 shares relative to what I have right now. So I just want to very clearly show you that when you have a deep in the money short put, you're saving some buying power for as long as you have that position on until you get assigned. But the actual delta impact, the directional risk that you're taking, it's not too different. It's not too dissimilar from holding the long shares. And so when it finally comes for you and you are assigned on the position, it's not really going to change your direction, your directional exposure too much at all from what you've been holding for however long you've had, that deep in the money short put. So that's why I'm so kind of, nonchalant about this deep in the money short put. Like if you've just started trading, I should say, you might be like, wait a minute, shouldn't you be doing something? Shouldn't you be this? Shouldn't you be that? It depends on what you're trying to accomplish on the position. But because I've kind of made my peace with the fact that, okay, we may be long some Chipotle, we may be pushing more chips in the middle on 3-day-old stale chips that we all get every time we go in there. But that's just the game we're going to play. That's what we're signing up for here with this Chipotle position. So the reason why I'm so nonchalant is because my directional exposure is not going to be any different. It's going to be a literal delta difference, one delta difference. That's nothing. It's not going to feel any different. It's not going to essentially behave any differently. And so this has been a good little case study just in that, when you have a deep in the money short put, if you've also made peace with, your Chipotle, your McDonald's, your Wolf, for all my Wolf fans that might be still trading that stock out there, although I'm quite certain it's out of business by now. But whatever the trade might be, whatever the stock might be, if you've made your peace with the fact that I'm just going to hold this thing and play it to the upside on the long side for however long I deem appropriate, then you can hold the in the money short put for essentially as long as you want to. And so, all right, so there's Chipotle. So let's go ahead and let's delete that. Other than that, IWM's working okay. We've got a strangle on, that's fine. Meta, we've got a short call spread on. We're obviously taking some heat on that guy with Meta up to 770, 769. And so, we'll have to wait and see if this guy comes back to life here anytime soon. We still have 39 days to go, though. That's a long time. Let's grab our Magenta. Happy Magenta Monday to you guys. 720, 730 call spread. Got the stock at 770. Yeah, we need it down another 50 points. But 50 points in Meta, that's not really a big move. That's like a 7 or 8% move. That's not a big move at all. And again, with CPI tomorrow, with PPI, I think PPI is Wednesday or Thursday. And so, you've got some market movers, in just the next 48 to 72 hours that could completely change the landscape of what it is that we're trying to do here, which again, I still don't know what that is, at least not on this very show. But you've got Meta, 7-8% drop in 39 days is not that big of a drop. And so Meta will sit tight. We'll see if we can't get bailed out on that guy. Palantir, you can see that the strangle is finally starting to cooperate here. You've got the stock at 184. We're 125 and 210. Not too much to do there, right? There's not too much to do there, and that's going to be that. And so QQQ, man, we are moving through this with the quickness. Like we have an efficiency that's never been seen before on From Theory to Practice. And so I just felt some pressure there to slow us down and get out a tangent or two. It's like, man, we never move this quickly. It's like, wow, I'm wearing a collared shirt. It's like, man, this is like, are we doing things differently? I don't know how I feel about all this. But anyway, I digress. QQQ, this was a long put spread that we put on last week for playing a little down move this week. And hey, you've got the NASDAQ down 27 points. I don't really know what more you want out of, a down move from the week. This is pretty good. Like, beggars can't be choosers, man. You've got, the NASDAQ index now almost at 24,000. And if I go to, let me delete that. Let me go to the chart of the NASDAQ. Oh, I want to look at Amazon really quick too, actually. I want to see if Amazon did get down below 210. I don't think it did. But yeah, so you look at the NASDAQ, this thing was up to 23,804 just earlier this morning. Not even this morning, but this afternoon. About an hour and a half, 2 hours ago, maybe. And so then the bottom just fell out. And I don't know why the bottom fell out. I'm sure the media will assure us of what the reason is, attaching the story after the fact, of course. Nothing that will actually help you in the moment. Nothing that will actually make you a better trader in the here and now. But afterwards, you got to sell that advertising, man. Like, I got it. I understand. But NASDAQ down 27 points. Right now, we'll have to see what happens, 24,000. Let me think here. Is that let's see here. If I do a 1 day, what's the high? Is today the high? No, I guess the high was just a couple days ago. 23,845 on 731. Okay. So no, week and a half ago. So on 731, the high was 23,845. And we almost got back up there today, but not quite. And so, man, that's quite a chart, man. If you look at this again, that's really quite a chart, And again, I'm not even talking about like from a, I'm not even talking about from like a technical analysis standpoint, support analysis. Yeah, whatever. I'm not even talking about any of that. I'm just talking about just looking at it with just common sense. It's like, man, that is a chart. Like, look at that. Look at that. That is like a 60-degree line. That is like a 70-degree line. Like, if you put your adjustable incline bench at that degree, you're doing a shoulder press now. You're not doing incline anymore. Like, you're getting mostly delts, a little bit of upper pec. And like, that's how you know that's a pretty significant move. I always, match it into, okay, if I did that on incline press, am I doing chest or am I doing shoulders? Like here, I think you're doing some shoulder work. And so that's a pretty impressive chart. Indeed. And so there's some NASDAQ, but we're playing it to the downside. We've got a little long put vertical, and we'll kind of see what happens. Rocket Lab, we have a short put at 38 strike. You got the stock at 44 and some change. And we're down a little bit on the trade, but we'll sit tight and do nothing. And then Starbucks, hey, we effectively comb the streets of all the positions on, so that's good. Starbucks, we have our 100 shares on. I'm not interested in selling any calls against it right now. I'm gonna wait until hold on a second. I'm gonna wait until, man, this mouse is janking me out. I'm gonna wait until we get maybe a little bit more of a pop. All right, so let's go ahead. What I want to do for tomorrow, though, and I see you guys in the chat, man. Look at you guys, man. I see Rancher. I see Joe's in the house. Joel James in the house, man. Flower Power in the house. Brian Dowdy's in the house. Samuel, Daniel Perkins, Miko, Scassman, Ashton Weiss in the house. So many other people that I didn't grab. Sergio's in the house. Man, look at you guys. I appreciate you guys so much. I'm going to get to you guys here in just a few minutes. But what I want to do for tomorrow, so here's what I'm thinking, guys. I don't know that we need to overthink this. I really don't. I think we need to kind of play the reversal of today's move. And so today feels like, it doesn't really feel like a down day in the market. It feels more like an up day in the market. And I don't know why I feel that way, because it's obviously a little bit red. It's not even green. But I do feel like let's play gold to the upside for tomorrow, or maybe for the week or whatever. But then let's do a little SPX butterfly to the downside. So let's go with the patented. Let's go with the tried and true expected move butterfly to the downside. And we'll do that in SPX. And then maybe we'll do an expected move butterfly to the upside in little old GC. And so this is a trade we've done before, kind of pairing up SPX with GC. And I think it's worked out okay. I can't remember. I don't have the stats in front of me, but I don't know that we've done this maybe 2 times or 3 times before. I don't think there has been a time when we've lost on both. I don't know if we've cashed on both necessarily, but I think we have the 2 or 3 times we've done this trade, we've come away with a winner on one and maybe a loser on the other, which generally with butterflies, that's going to lead to a green net because of the profit potential on the butterflies if you get the move that you want. And so I don't know, I kind of like this, this setup for tomorrow. We do SPX to the downside, we do gold to the upside, and then let's just kind of see where the where the wind blows us. So we go into SPX. And I'm choosing SPX because it's cash settled, and I'm going to do a trade that's in the 1-day cycle. So I am going to choose, this is my version of 1 DTE. I'm sorry, 0 DTE. I don't really do 0 DTE because I want all of my trading to be live on the show for you guys so you can more easily follow along with what I'm doing, and you can follow along with the analysis and like trade entry, trade exit, and all the things in between. If I were to trade like in the morning and things like that, then it would be much more difficult for me to kind of bring you guys in as to, what was going on when I made the trade and things like that. And I know when I'm trying to learn something, especially in the world of trading and finance, like it's highly complex, it's very complicated stuff. And so being able to see someone kind of start to finish, I think there's a lot of value in that. And you guys have told me yourselves that there's a lot of value in that. So we're going to keep it going for some time. But because of that, I don't do any 0 DT because it doesn't make any sense. I mean, look at it right now. If I did one now, right, for the end of the day, that just wouldn't make any sense. That wouldn't make any sense at all. And so I'm going to do my version of 0 DTE for CPI tomorrow, which is going to be a 1 DTE. And so August 12th is going to be the expiration that I choose for SPX. And I don't really think we need to overthink this too much. I think we just try to cover the expected move to the downside, and let's just see what happens. You've got SPX at 63.84 for my audio only crowd out there. You've got the expected move goes down to about 63.45 on the downside, and it's 64.25 on the upside, so fairly symmetric. And by fairly symmetric, I mean it's exactly symmetric. And so let's go in here. I kind of think, we buy a 63.80, we sell a 63.40, we buy a 6,300, $40 wide. We double up on the guts. I mean, that looks pretty feng shui, man. Like, we're not using janky strikes. We've got the 6,300 kind of anchor on the bottom there. Like, that's nice for all my technical bros. Y'all love your big round numbers. It's like it's right there. I mean, everything kind of checks out on this trade. I mean, the buying power or the maximum risk on the trade, kind of same thing in this scenario. At about $6.50, that's a little over 2% of the account. And if you saw the show this morning, the Skinny on Options Abstract Applications, you heard the story about how the Civic got totaled, but you also hopefully learned a couple of things about risk of ruin, about like, okay, you know, what are the probabilities associated with, you know, me taking total loss on my account? Like, what are the probabilities associated with me going to zero on my account? That's a lot easier to calculate and figure out with defined risk because you know the maximum loss potential. Even though we can all agree that undefined risk has the potential to do the most damage, still what we learned from looking at both strategic categories is, man, size is the key. Like, staying small is the key. I mean, there was just a radical drop off in the risk of ruin if you were, you know, risking 5% per defined risk trade versus only risking 2% per defined risk trade. So for those of you out there that are looking for ways to get better, you're looking for ways to improve, you're looking for things you need to work on, I would strongly encourage you to kind of use the discussion this morning as a catalyst into really thinking hard and long about what you want your position sizing to be, about what you really want your, you know, your trade sizing to be. And to understand that, you know, the smaller you can go, the higher the likelihood that you remain solvent, the higher the likelihood that you're able to move forward towards your goals. Now, the other side to that is, of course, Jim, I want there to be some economic significance behind what I'm doing, right? Like, if you've only got $10,000 or $15,000, the reality is you're probably going to have to be more like 3, 4, or 5% per trade. And that's just kind of the, you know, the concession that you have to make. That's, you know, one of the costs of doing business with a smaller account. But once you start to move up to 20, 25, 30, 35,000 and more, then you can probably begin to shrink your trade sizes down to 2% or less, pretty much across the board. And so the nice thing about that, of course, having that amount of capital, 25, 35,000 or more, is you end up with a nice marriage between trade size and economic significance, right? To where if you're going, if I've got $35,000, let's say, or even like in this account with 30,000, I've got 30,000, 2% is $600. It's like, man, that's economically significant. You know, you're managing early, you're managing 50%, whatever. It's like, that has a lot of punch behind it. It's got some chutzpah, right? Whereas if you've got, you know, let's say you've got $7,500 in your account, and it's like, if I only risk 2% of my account, that's $150 of risk per trade. And then I'm managing at 50% of max profit, that's $75 per trade. You've got transaction costs, you've got commissions, you've got second Range Rovers that need to be bought and paid for, of course. And so it's like, man, I don't know. It's like, maybe I need to be a little bit bigger with my trades to make it economically significant. And so I can appreciate all of that, and I understand all of that. But again, hopefully this morning's discussion around trade sizing was valuable for you guys. But with this trade right here, you know, I'm really thinking, I mean, $6, 645, 660, that's not too bad, you know? And, you know, look at the pop. The pop's even, man, 34%. That's pretty good, honestly. That's higher than a lot of butterflies are when we put them on. So I kind of like this trade. I kind of like the way that this guy is setting up. So let's go ahead and let's do it. Let me go in at 6. I'll go in at like 670. See if we can get filled. All right, so no takers at 670. Let's try a little bit more. Let's see here. Let's try 680. I don't want to keep chasing this thing higher. All right, so we got filled. We got improved to 675. All right, beautiful. Okay, now what I want to do, let's go into GC. So let's go into the big dog futures. I'm not choosing GLD. And the reason why I'm not choosing GLD is because you could choose GLD, of course, but I want to match the sizing between SPX and GC a bit more closely. And since, you know, with SPX, we did a $40 wide butterfly, we're risking about 670. I'd like to try to set up a similar trade with GC, maybe a little bit smaller, just to be mindful of, again, I mean, I can already smell the smoke in the air. So you need to be a little bit mindful of the stacks of cash that you are lighting on fire, or the stacks of cash that I'm lighting on fire. Of course, you should be doing the exact opposite of everything I do if you are indeed serious about making money. But I'm going to go to GC, and I think I'm going to choose the 4-day cycle. So I'm not going to do the overnight play. And the reason why I'm not going to do that is because the options the expiration, I should say, for these futures are for gold for the metals markets. It's in like the middle of the day. It's like 12:30 Eastern or maybe 12:30 Central. And so I don't really want that to be the case because that's before our show. And so, of course, I could choose like Wednesday's expiration or something like that. But I'm like, all right, let's just keep this clean. Let me just do this as if I don't have an overnight cycle available to me. I don't really even have a 1DT option. And let's trade this like we would do any expecting move butterfly in like an individual stock. So like, like NVIDIA, for my NVIDIA bros that might be out there. You're going to be choosing something like this where it's going to expire, at the end of the week. And so I think for GC, we've got 4 days to go. I don't know, man. I mean, let's just set it up. Let's just set it up in a similar fashion. We'll do this one to the upside, of course. I really feel like this move is overdone. Could it be related to the Trump stuff and the tariffs? I don't know. I mean, nobody really knows. But I think it's a little bit overdone. I could see gold bouncing back 30, 40, 50 points tomorrow. No problem. And so let's see. What if I do a 33.85, 34.25, 34.65? How expensive is this? Ooh, that's like almost the exact same trade. Wow, that's crazy how close that is. 33. Okay, so if you're listening to the show, I'm looking at gold. It's currently trading at 34.05. Well, okay, hold on. So we need to pause for a second because this is another situation where, okay, I'm going to point this out. We've done this several times on the show before, but it's so relevant right now. I'm going to spend a few minutes on this again too. You can see that Z is trading at 34.05. But if you look at the at-the-money strike on the option chain, it looks like it's around 33.77. That's because this is not Z. This is V. You can see it right there in the actual quote. And so let's bring up V. What is GCV? GCV5. Yeah, 33.76. So I thought it was 33.77. It's the same thing. And so for this one, let me scroll back down on the screen a little bit. You can see that we're doing, yeah, here we go. I don't want to keep moving my mouse around. But we are actually setting the butterfly up based on the V prices because this option chain is tracking to the V contract. It's not tracking to the Z contract. Now, we're still going to have gold exposure. It's still, the V and the Z are essentially going to move one for one with each other. I'm not too worried about there being any like tracking error between, the V cycle and the Z cycle. There could be a slight one, I suppose, since there are different products. I mean, one of them expires in, I think V is October, and then obviously Z is going to be December. And so you just want to be aware of the fact that when you choose futures option cycles, especially in things that expire like monthly, like a gold or like an oil, even like a silver, you want to be aware of, all right, what is the underlying tracking product here and its expiration? Does that match up with what I think it should be? Or does that match up with what I think it is? And so just understand that, if you're trading Z for like your scalps and like your outright positions, it may not be tracking to Z in the actual option chain, which is what we see right here. It's actually tracking to V. And so that is why I'm choosing, these strikes, 33.85, 34.25, and then 34.65, which you can't see on the screen, but it is down there, even though Z is 34.06. And so, because we're trading based off of V. And so, I like this trade. The only thing I'm going to do, I do want to minimize the width a little bit. So let's do 35 points wide instead of 40 points wide, just to kind of take down the cost a little bit. So instead of a 33.85 call, let's do a 33.90. And then instead of a 34.65 call, let's do a 34.60. All right, so that looks really good. So now the debit paid is only $5.50. So just in case this doesn't work out, which that would be par for the course based on my historical track record. The pop says 31%. For my own personal records, I'm going to put this down at about a 17% confidence interval on this trade. But $5.40 is the debit that I'm paying. My maximum profit, of course, is if I pin the short strike and I carry it all the way to expiration. I'm not going to do that. And so the maximum profit of nearly $3,000 is a bit of an illusion. Like, it's a little bit of a magic trick for all my Prestige fans out there, all of my Christian Bale and Hugh Jackman fans that might be watching the show. Very, very underrated movie. Very, very underrated movie. If you haven't seen The Prestige, man, I wouldn't even keep watching the show today. You can come back and check it out in the archives. I would drop everything you're doing. Like, if you're at work, drop your work. If you're watching the show, drop the show. You need to watch The Prestige. Phenomenal movie. Absolutely phenomenal movie. But that's not really real, the maximum profit, because, you know, so many things would have to go right for you to actually hit that number. But could we get multiples of the debit paid? Yes, we could, if we get the move in our direction. So let's go ahead. Let's put on this GC trade. 550, and yeah, let's do it. And so let's see if I do. Yeah, let's do maybe 560. So that should get us filled, I think. All right, so we got filled at 560. Okay, so there you go. So filled at 560 on GC, and boom, there you go. So SPX and GC for tomorrow. SPX to the downside and GC to the upside. And there you go. That's what we're doing, man. Let me see where you guys are at in the chat. And so here we go. I got a great one. Here we go. I got a great one that I see right in the middle. A surprise and delight, smack dab in the center of the chat. Madalena G. What's going on there, Madalena G? I know we've emailed back and forth, and hopefully that's been helpful for you. Madalena G says, hey, Jim, how do I manage a deep in the money short put if I don't want to be assigned? If I don't want to be assigned the shares with 39 days to go. All right, so this is a very different scenario, right, Madalena? So thank you so much for the question. This is a great question. So, like, take Chipotle, for example. I'm just going to use Chipotle because that kind of mirrors what you're going through. Now, I've been very clear about my Chipotle position in that I am okay being assigned, right? And so that's why I'm totally okay with holding this trade. Okay, you have a similar trade on 39 days to go. I don't think you said the ticker, and so you didn't, but it doesn't matter. You don't want to hold the shares. You don't want to be assigned. Okay, I'm going to talk about strategically what you can do and the maneuvers you can make. But before I do that, let me just go ahead and assure you, Madalena, if you are assigned, so if it does happen, because again, it happens to us all, you trade long enough, this is going to happen to you at one time or another. If you are assigned, it's not that big of a deal. If you are assigned and it throws your buying powers completely out of whack, I mean, they're negative, Scott Sheridan's coming by the house, like all that stuff. Like if that stuff happens, then don't worry about it because you're only a couple clicks away from just cleaning the whole thing up. And if you're not sure how to do it, then call the trade desk at Tasty Trade and say, hey, you see what I see, you got to help me clean this up. And they will walk you through exactly what you need to do. But it really is only a couple of clicks. And actually, if you go into the old Google machine and you Google, Tasty from Theory to Practice, unwinding an assignment, you will see me do this live. I've done this live on the show a couple of times because I've taken assignment on various positions and then I've just held it until the show so you guys could see me actually unwind it on the show. And you'll see it's really no different than closing any other position. And so, you right click, close a position, close it all together, close it in pieces, whatever. That will restore you back to, buying power looks fine, everything looks normal, whatever. Okay, but what can you do to avoid that position? Okay, well, there's a couple of things. So number one, the main thing you're going to want to consider and the main thing you're going to want to really focus on is you need to get this extrinsic value amount to be higher because this is essentially the thing that is controlling or influencing the other side of the contract as to whether or not he or she is going to exercise the contract. When this number falls below, and there is no hard and fast rule on this, this is just my number that I use in my head based off of experience. When the number falls below 10 cents, so $10 for the whole contract, that's when the assignment takes a much more higher likelihood, in my opinion. Once it, or as long as it stays above 10 cents, the likelihood that you're assigned, especially with 39 days to go, is just not that, it's still not that high because the other side of the contract is going to lose out on that extrinsic value if he or she decides to exercise the contract. Okay, so how do I lift the extrinsic value? What is the simplest, easiest way to boost the extrinsic value? Well, one of the simplest ways is to go ahead and roll the position out. Now, again, I don't know what trade you have, but like if you see like my Chipotle trade, I mean, this thing is deep, deep, deep in the money, right? So if I roll this thing out to October, I mean, it is very deep in the money. So you can see that this is actually a really, really good case study. If I change implied volatility to extrinsic value, you can see that the extrinsic value on my 50 put in this later cycle is only 7 cents. So the extrinsic value on the 50 put is only 7 cents. And so, you're not really if you're really deep in the money, you could be in a situation where it's like, all right, if I really want to boost the extrinsic value by rolling out in time, I'm going to have to roll really far out in time. I'm going to have to push this thing out into December. I'm going to have to push this thing out into January or whatever. And so, you can see right here, 67 days to go. There's just not that much of an extrinsic value differential between the cycle that I'm in and then the next cycle. It's only about 5 or 6 cents. So that would not really be worth the roll in my opinion. So then what could you do? Well, the other thing you could consider is instead of rolling to October, let me clear that away. What if I roll to, here, let me just bring up the December option. What if I roll to December? What is a December? So this is December with 130 days to go. You can see the extrinsic value is significantly different. It's significantly higher in the December cycle for the 50 put. And so generally speaking, it doesn't matter what the underlying stock is. If you're really deep in the money, the reality is as long as you're willing to go out far enough, you're going to be able to collect more extrinsic value. You're going to be able to lift the extrinsic value on the position. Now, the other side to this is like, if you're really, because now you're kind of committing to the position for potentially another 4 or 5 months. Even if you manage it early, it's like, all right, you're not looking to get out of this trade anytime soon. In that scenario, then it's kind of like, I don't know. It doesn't really, why not just potentially take the shares? Now, it could be a buying power situation or things like that, but this is getting very similar. It's getting eerily close to, man, if I just had a long position in Chipotle, it would essentially be, ultimately the same trade. And so just keep that in mind as you're potentially rolling out in time. The other thing you could consider doing here is, you can add calls and things like that, but that's not really going to help you in terms of the assignment risk on the short put. The other thing that you could do is you could actually roll the short put down. So you could roll this thing down to, closer to the action. So you don't have to roll out at all, actually. You could say, all right, I'm going to roll this 50 put, I'm going to roll it down to, the 42.5 strike. So I roll from, the 50 strike down to the 42.5 strike. You're going to pay a $6 debit for that. Does that make sense? No, that doesn't really make sense, because then you will absolutely be locking in a loss on the position. There will be no chance of coming back on the trade. And so then it really doesn't make any sense to do that. The reason why I want to bring this up, though, is because you can see that the extrinsic value differential between, the 50 strike at 3 cents and the 42.5 strike at $1.12 is quite significant. Right. And so if you really wanted to avoid assignment, this would be the way to do it. But the gotcha that you have to absorb with that huge debit is not really going to make any sense. And so that brings me back around to ultimately, what are you kind of faced with from a decision standpoint? I think when you have a deep in the money short put and you don't want to take assignment, I actually think it's usually time to just close the trade. Now, I could have said that from the very beginning and say we could have saved, 8 minutes of our lives that you will never get back. But man, we learned so much and we had so much fun along the way. Right. So it's like, if you actually, you might be like thinking, nah, not really. But if you don't want to take assignment, then I would probably just close the trade. I would close the trade and be done with it and just say, hey, the stock beat me. Like, they got me on this one, and move on to the next trade. But in my opinion, the effectiveness of the deep in the money short put, it's really illustrated when you are okay taking the shares and you are okay holding it longer term. And so that's why I keep coming back to that with a short put, which is not to say you have to do that every time, because you certainly don't every time you have a deep in the money short put. But I would probably, rather than just trying to get cute, rather than just trying to get fancy with the different things we showed, rolling out to December, potentially rolling down with the strike, you can do a combination of rolling out plus rolling down. All of those are not going to be great options if you're really, really deep in the money. Probably just close the trade would be the way that I would do it. So hopefully that helps some, Madalena. Very good question. So let's go to the beginning, though, of the of all the chats and the questions and the comments, as we've got 9 minutes left in the show. So that's about right. So Emmett Morrison's in the house. What's going on there, Emmett? I appreciate you. Hope you had a wonderful weekend. I did, other than the Civic, and so, but again, its time was drawing near one way or another anyway. And so I will keep you guys updated as to what the next, Dadmobile ends up being. It's going to be very much a Dadmobile. Let's see. Gasman, good afternoon, Dr. Jim. What's going on there, Gasman? Emmett says, what are we doing for the most important CPI print of our lives tomorrow morning? I gave it to you, man. SPX to the downside, gold to the upside. Very clear fades for you. Very obvious fades. You should be bullish on the market and bearish on gold, and then you should be in a really, really good spot. And so Sam L's in the house, starting the week with Dr. Jim. What's going on, my friend? Like hitting a surprise leg day you didn't plan for. Ooh, yeah, painful. But you know it's good for you, especially for the P&L bro haters. That's correct. Surprise leg days. Yeah, even I don't do that too often. I need to know what's coming, man. Like I need to be in the right mental headspace, to know that we've got a whole bunch of lactic acid that's going to get built up on these extensions. And, you just gotta embrace it. Weiss in the house. Hey, Dr. Jim, good to see you. Could you explain the fee profile for 0 DTE iron condors? Is it 8 times 77 cents to open and close a trade? The fee profile. Well, I mean, so let's take a look at this. If I did, again, I'm going to choose, let me just go to SPY. I'm going to choose the 1 DTE because that's what I would do, of course, but the fee profile shouldn't be any different. So if I do, if I do an iron condor, if I sell like a 633 and I buy a 628, and then I sell, 640, buy a 645, right? So if I go in here, and again, I don't know if this is a good trade or bad trade. I'm just using this for illustrative purposes only. I know that iron condors and iron flies are really popular. I know there's been a lot of good research around that. I haven't really been able to latch onto that just yet because I'm focused on some other things right now. But I know that there's some great stuff out there, and I know that a number of you guys are trading those, which is awesome. But if we go in here and we go to review and send, I mean, you can see, I mean, you're looking at, you've got $1 per contract, which is what I would expect, right? And then you've got 49 cents in fees. So you're looking at, the commissions are $4, the fees are 49 cents. But when you go to close this trade, the commissions will be zero. There's zero to close it, Tasty. The fees will probably be similar. And so, you're looking at $5 total, I guess. And so it looks like you put, is it 8 times 77 cents to open and close the trade? It's a little bit less than that, I think. But yeah, so that's what we're looking at. Oh, you said for SPX. Would it be any different? Maybe it would. I didn't catch that the first time I looked at that question. Let's see. Is it any different? I don't think it should be. I mean, maybe it is for, it's a different product. I mean, it is a different product, obviously, but I don't think the fees are going to be that different. Let's take a look. Let's learn together. No, it's, the fees are a little bit higher. Ah, look at that. Man, once again, guys, that second range, like again, you got to get the capital somewhere. Boom, there it is. Yeah, okay, but again, remember the commissions will be zero on the back end. And so you're looking at about $10 in total. So you're looking at $7 on the way in. You'll pay the fees on the way out. You're looking at $10, kind of round trip. So again, this kind of gets back to what I was saying before with like economic significance, account size, like things like that. And so like for this trade right here, you have to be mindful of the fact that, your maximum profit of 385, you're looking at about $10 in transaction costs for your maximum profit, which is about 3%. It's a little bit less than 3%, I guess. That's not too bad when you start thinking about transaction costs as as they relate to the actual notional value of the P&L potential. I haven't really looked at like what's a good number, what's a bad number. My intuition tells me 3% is not too bad. I wouldn't say it's like phenomenal necessarily, but it's not too bad. And so obviously the zero commissions to close is pretty good. And then, if you want to boost the number, one of the things you can do is collect a higher credit. So sacrifice some of the probability, collect a higher credit, and then you'll have, greater profit potential relative to the transaction cost that you have to pay. And so hopefully that helps a little bit, Wes. Good question though. And so let's see, Samuel, we've got AI and space in the company names. Who cares what their business is to the upside? Yes, that's true. We are getting to that point in the cycle where it's like, hey, who cares what they do? Like, just buy them, man. Just buy them. They'll be higher by the end of the day. Ash Finn in the house. What's going on there, Ash? I appreciate you, my friend. Gas man, I just sold my 2010 Honda Civic a few weeks ago. It's a great, are you serious? That's amazing. It's been a phenomenal car. And you should buy a Tesla. No, I don't think I can do that. I don't think the wife is going to allow that. I think she wants me to stay in the beater category, just from a cost standpoint and, those kinds of things. But, I might surprise her though. So I try to surprise and delight you guys by picking up a comment in the middle of the chat. I may surprise and delight my wife. So here's what would absolutely like shock her to her core. And I would build up so much street cred in her eyes. And I'd have all these brownie points that I could just redeem later on for essentially whatever I would want. If I went ahead, so let's say my car is totaled. I don't know yet. It won't start. So that's probably not good. But let's say it is totaled. I'm going to get 3,000, 4,000, whatever it's worth. If I actually upgraded to a van, my wife's car is a Nissan Pathfinder. So if I went out and bought a van, like a 2022, 2023, whatever, like a Chrysler Pacifica, Honda Odyssey, like whatever, right? My wife is like, she's chomping at the bit to get a van, but she understands it's like, it's expensive. It's this, it's that, whatever, but if I actually did it, like if I left one day, like when the market closed and then I came back and I just materialized with a van, like you guys don't understand. Like you guys don't understand how good that would be for me. I could leg that thing out for 9 to 12 months minimum. And then I would just take her Pathfinder, which would be that'd be pretty cool too. So I don't know. I'll keep you guys updated, but with the kids and stuff, the van, it might be the way we end up going. I'm not sure. But let's see. Mikos. Hey, Dr. Jim, do you ever look at a trap or 1-1-1 trade, debit spread with a short kicker? Okay, so a 1-1-1 trade, I've never heard of it referred to as a trap, but that kind of makes sense, I guess. You are kind of setting a booby trap below the market. But also a 1-1-1 trade, for people that might not be familiar with this, is let me choose like IWM. It's basically a ratio spread where you stagger the short strikes. And so rather than like if I go to IWM and let's say I go to October, just because I don't have a position on October, I could buy like if I did a regular ratio spread, I would buy the 220 and sell a couple 215s. This would be a standard ratio spread, right? And so if I went into like the curve view, hey, take a look at this, guys. We're doing the curve view today. Got a collared shirt on, some crazy stuff. We actually kept it somewhat buttoned up today too, with the actual discussion. And so, this is going to look all messed up because of my current position. Hold on. Let me bring up, how do I uncheck? Hold on a second. Let me see if I can, let me get rid of my strangle. Yeah, there we go. So this is a standard ratio spread, right? This is, you collect the credit if the stock rallies, you make the most money if you pin the short strike, you have all the risk to the downside, right? Well, if I go back to the table view just to break up those shorts easily, let's say instead of, selling two 215s, what if I actually, if I only sell one of those and then I sell like a 210 or something. And I'm not as familiar with this trade in terms of like the subtleties and the nuances of strike selection, but this is the basic idea where you're actually putting, because remember, that's where your risk is, right? Your risk is on that extra short put. So if you push that further down, then you're taking on a less risky, a more conservative trade. It's going to have higher probability. You're going to have less risk in the trade, a lot of really, really good things. But what's the gotcha? You're not collecting as much of a credit. Like the credit that you collect goes down, as you can see right here. And so I haven't, if I go back to the curve view just quickly and I got to run, you can see that your profit profile, you widen out the range where you can achieve maximum profit. But the maximum profit that you can achieve actually goes down. So it's gimmicks and gotchas. I mean, I like it as a version or iteration of a ratio spread. And so maybe we'll mix some of these into the show. I think I've done one or two before on the show, but it's been a minute. And so maybe we'll mix these in. But man, I can't believe the show is over. Guys, it's so fast. You guys have no idea. I mean, I see you guys. I see George is in the house. Man, RC's in the house, man. Daniel Perkins. I appreciate you guys. Julian's in the house. If I can ever help you guys, and please come back tomorrow. If I missed you today, come back tomorrow, drop in the chat, try to get in early, and I'll try to get to as many of you guys as I can. But guys, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay optimistic. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
What's going on, everybody? NVIDIA is willing to give up like $9 billion just to be able to keep doing business with China. That's a whole lot of do-re-mi. We'll talk about what's going on there. Inflation reports, they're coming out. If inflation is picking up again, we might be in trouble. Who knows? I can't tell. I can't call it. Finally, another day, another streaming bundle. That's right. More streaming bundles are coming, and it's all centered around sports. So we'll talk about those three things and more. Earnings are dying down, but there's still things to trade. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler, and it's Monday. Everybody's favorite person is back here, Josh Fabian. What's up, man?
You know what I'm going to say.
Say it.
We're back.
We're bad.
You're black.
I'm mad.
No, that's me.
What's up, man? What's happening?
I'm good. My weekend was fine. I'm just thinking for a second. Had football yesterday.
Your football?
I had well, no, not my football. Just had football to watch.
Oh, true that. Yeah. I was kind of on the move. I didn't really get to see the game. I saw some highlights, but I didn't really get to watch it.
Saw future Super Bowl MVP. My Super Bowl. Hey, listen.
Show.
So, full disclosure. Tyson and I are very good friends.
Mike Tyson?
Tyson Bajan. We're tight. We're good friends. We've been good friends for a while. He's coming out to my football practice tomorrow night. We're gonna hang out.
Okay, you know what? Why don't you get him on? Tell him to come on the show one day.
Okay, I'll ask him.
One Monday.
I'll ask him.
I'm asking. We'll probably. He's a good friend. You don't.
I'll ask him tomorrow night. I'm going to see him tomorrow night. He's coming out. I'll ask him tomorrow night. We're going to go out for pizza afterwards. I'll ask him to come on the show.
You do that.
I'm going to do that.
Maybe you can get him on next year's quarterback on Netflix. How about that?
I don't think he'd want to do that. But yeah, I don't care. There was just football on, man. It's awful football. Let's just be honest.
I know. I really haven't watched much preseason. I typically don't watch a whole lot of preseason. Yeah. That being said, though, obviously the person who lit it up this week, everybody was talking about, was Shedeur Sanders.
Yeah, he looked good.
He looked good.
Yeah.
He looked good. People are talking about him.
Listen, you don't put a chip on the shoulder of a guy who's got talent. And that's exactly what the NFL, all these managers did by passing him up. It's like, okay, fine, pass me up. Put a chip on my shoulder. I dare you.
Basically.
Yeah.
The team seems to like him.
Yeah.
Myles Garrett seems to love him.
Yeah.
That tells you a whole lot.
Yeah. Yeah.
I saw this funny ass picture, man. It was a picture of the sideline after he had threw a touchdown. There was a picture of the sideline, and it was Joe Flacco and the Dylan Gabriel kid who got drafted along with him, came out of Oregon, and Deshaun Watson.
Mm-hmm.
And Watson and Gabriel were like this. Joe Flacco's like, and the caption is like, you can tell who's nervous about their job. And Flacco's like, hell yeah, I ain't got to play the whole season. You know? and Deshaun was like, damn, it might be over. You know what I mean? It was kind of funny. Speaking of, I've been watching that Netflix quarterback thing. I don't know if you watched it yet.
Yeah, I did.
It's good, man.
It's really good. Yeah. The Kirk Cousins story, that aspect of it, really good.
Yeah, it is. It is. I mean, first of all, how many great clips does he own?
Dude,
he's clearly
that guy is
great clips.
That guy is the weirdest dude in the world. I mean,
strange,
it's like,
man.
what did he get when he signed with Atlanta? Like $260 million?
Something like that. I don't know. Yeah.
And he's like, yeah, I'm gonna go hit up Great Clips. Like, really?
Yeah, I know. He is. That guy is. He's a.
Like, even I won't go to Great Clips.
But you gotta give him credit. It's the same dude.
Yeah.
That is like quoting Atlanta trap lyrics. And it's hilarious when he does it, but that guy is good enough to galvanize the team.
Yeah.
He ain't gonna be, it's Michael Penix. It's just it's really interesting to watch that whole show. I love watching it. Let's pull up the platform. Let's take a look around at a couple of things here. What do I have going on? Well, first of all, let's start with what we promised. NVIDIA.
Yeah.
So,
Yep.
Of course, I mean, the government wants their cut.
Obviously.
NVIDIA and AMD.
Obviously.
Is this just like the appetizer to tomorrow's situation?
This is the weirdest thing. This is the antithesis.
I mean, this is tariff related, essentially, right?
It's an export tax. It's the antithesis of capitalism. I don't get it on so many levels, but it's now I can make the argument that we shouldn't be sending AI chips to China. Okay, I can get on board with that.
But clearly that doesn't matter anymore, right?
Yeah, but I mean, I can get on board with that argument that we shouldn't give this technology to China. I'm like, okay, yeah, I'm in agreement with that. I could potentially be, but to tax it, I'm like, that just doesn't make sense to me. It's tariff related. Is it part of the whole China-U.S. tariff negotiations? Is it okay, we'll sell you this stuff and we'll just force NVIDIA to pay? It's really when you start to think about it, it's kind of
it feels like the appetizer to what essentially is supposed to be tomorrow, the deadline between U.S. and China to come up with what they're going to be tariffizing each other, whatever the hell you want to call it.
Tariffizing.
Yeah, right.
That's
right. I made it up. That's right.
I know you made it up. There's no question you made it up.
It's kind of like it's a very unique word. You know what I'm saying? I love what very unique.
That shit ain't funny.
Does to your face. It seems like it's the setting for that.
It is.
And you know what? I haven't even looked. Is that really supposed to be? I feel like there wasn't that much price in for August 1st, yet we did kind of move around it. Tomorrow, I mean, well, there is CPI, obviously, in part of tomorrow. 43 points. That's not even 1%. Is that underpriced?
I don't know.
Should I buy that shit?
I don't know. I've been short some puts here.
The only problem with this is it doesn't really. I don't like. So it's funny because somebody asked the question. I think it was this morning. Yeah, it was this morning to Tom and Tony on Confirm and Send.
Mike, are you sure about that? It was put off till November 9th. Did that come out today?
Yeah, I hadn't seen that unless that happened.
Unless that just happened. So
unless that just happened since we've been in the studio.
Yeah.
Yeah, you're right, Donald. Kirk is corny. That's because he's a former Minnesota quarterback.
You guys are sure about this? He kicked the deadline in November.
Did he?
If somebody could please.
Yeah. I'm trying to. I haven't seen that yet.
NEO today, really?
Today. Oh, yep. 13 minutes ago. Trump extends China tariff deadline for 90 days. That's why I love my viewers, because they pay attention to things like this. That's right. You guys are the ball. You guys are the best. So yeah, just 13 minutes ago. We've been in the studio, guys.
Taco.
Hadn't really noticed that. So yeah,
we
they kicked the deadline down the road. But I feel like that was the table setting for it. I
still think you're probably right about that. That it was some sort of a concession in the sense that, hey, I'm still going to allow the chips to be sold to you guys. But the 15, but I still don't understand the 15%.
See, that way people can't say he chickened out this time. They did some kind of deal, and then they're going to push it down the road. You know what I'm saying?
Yeah.
So speaking of, we're on SPX. We're looking at tomorrow's expected move. 43. Is that light? I don't even know exactly how that compares. I feel like the last several ones were at least, maybe not 1%, but like 50 plus points expected move. This one seems fairly low.
Tomorrow's is interesting, right? For a couple of reasons. One, at least as of this morning, Fed funds were pricing in like an 86% chance of a rate cut in SEP, which had come down a little bit from last week. So it's interesting in that respect. How does it affect the probability of a rate cut? But what I find is going to be even more interesting is that, it's produced by the BLS. And if that number comes in a range that is, higher than what's being forecast, at least by, more than, say, a couple tenths of a point, is it going to be questioned? And does it become politicized? And I really hope it doesn't. I really hope it's just like, hey, listen, this is the number, this is what it is. But I think that at least the media, from what I had read over the weekend, there's a lot of attention being paid to just how is this spun? Is it just accepted like it typically is? Hey, this is the number, this is the month-over-month growth, which is expected to be, if I'm remembering correctly, the core is expected to be up 0.3%, and then 3% year over year, if I'm remembering correctly. So, but in terms of how it's priced for tomorrow, VIX is low.
15 and change. To your point, I pulled up SR3. The 3-month SOFR futures, which again, if you just 100 subtracted from the current number on the screen for September, basically gets you to like 4.09, which basically is in between 4 and 4.25, right? So that tells you that they're expecting a cut. Like you said, it's over 80+%.
Yeah.
You're right. I mean, this has been the thing, right? The last couple of inflation reports we've seen, they've been ticking up. We saw the same thing at the end of July for what's it called? The Fed's thing, preferred inflation gauge.
The PCE.
At it. Yeah. That it ticked up there, and so, but does the market freak out, or does the market like that? Does the market want that?
Want the higher or the lower?
The higher inflation. We're going to get to a point where now higher inflation causes the market to go higher?
No, they want the weak number. Like. They want the weak number. They want it to be.
They want the inflation number to be lower, you're saying?
Yeah, so you can cut rates. If it's high, you can't cut rates.
No, that's the thing. If inflation is going up, that means we're in trouble, and I think that's the only way they cut rates, is if we have an issue in inflation again. I think if we have an issue in the economy.
Inflation's going higher?
I think so.
You can't cut rates if inflation's going higher. I mean, no.
I agree, but I think it makes them nervous if we get to that point. I don't think they do, but I think it's going to make the market nervous if we have inflation going higher. I think it's going to make the market nervous is what I'm saying. I think the market's not.
I agree with that. If inflation's going higher, I think the market gets nervous 100%.
I think the market gets nervous on that, and I don't know if it ends up. I feel like this move might be underpriced if that's the case.
Well, I definitely think that the market is getting a little bit on edge because you've seen what's VIX cash doing right now? You've seen it.
You're right here, 1581.
Yeah, so you've seen that, and
slightly. Yeah. I mean, I think that's just more of a. This event is coming up.
Yeah,
it's the VIX one day.
Yeah, VIX one day is 13.5, and I commented to you earlier today. VVIX was creeping higher. I was surprised that it was in the mid 90s.
Really?
With VIX at 15 and change. I would have expected to see that in like the 80s, high 80s maybe. Like I was surprised it was mid 90s. High 80s to low 90s is where I would have expected to see VVIC. So again, I do agree with you, 100% agree with you that looks to me like it's expecting an event tomorrow, which, makes sense. And that I thought it was with the China deadline that had been tomorrow, which isn't tomorrow.
Take some of the sting out of tomorrow a little bit.
Yeah.
And I wonder if fall came in after that. I didn't even notice. Again, it happened 13 minutes ago.
How did I not even get a headline on that?
Yeah, I don't know. Because your phone is tired of giving you.
Hey, Trump extends China tariff deadline 90 days. Just got it. Breaking news.
Disney and Fox are in the news again, but this time together, basically. I guess there's going to be. And this gets
this one, I got to take my glasses off for this one, dude. I got to take my glasses off.
There's going to be apparently they're going to bundle together something. And you know what's related to sports. And what it boils down to? We're not going to have free games on Fox and CBS and all that much.
We have gone.
It's not going to happen.
What has happened? This whole thing, okay? It was cable's too expensive and it's contracts and I want to be able to just do what I want and no contracts. And now it's like you have 16 different services and I know from personal experience, I'm paying more than what I used to pay. And it's so confusing. So like Disney's like, okay, well, we'll just get Hulu and then we'll get ESPN and, we'll take our stuff and we'll just put it all together. And hey, all of a sudden we're a cable company. Yeah. And now we'll just grab, now we'll grab Fox also. And maybe we'll get HBO or HBO Max or
Max. Is a service like YouTube TV going to even make sense anymore if all you're doing is going?
I have no idea. Like,
right?
I'm watching TV.
I've been asking myself.
I'm watching TV with my kids over the weekend, and I'm like, I don't even know what to do during a commercial. Like, I can't surf. Like, if I'm on one, like it's so convoluted at this point that I'm thinking about just going back to Xfinity.
Well, I'm not doing that.
Well, I don't want to do that because I hate them.
I feel like there's more commercials on TV than actual content sometimes these days.
Even on the.
By the way, thanks for tuning in to Tasty Live for content, folks.
But even on the services, like I'm watching. Great movie. If you haven't seen it, I'm throwing the recommendation out there now. I already gave it to you.
Oh, Jesus.
Listen, if you have not watched the remake, if you have not watched the remake of War of the Worlds on Amazon Prime with Ice Cube.
Like this is new?
This is new. It is a 0 on Rotten Tomatoes. I am telling you.
But it's a great movie.
It is a great movie. If you want to turn it into a drinking game, every time Ice Cube says, I got you, within 15 to 20 minutes, you will be pissed drunk. But even that, I had to watch 5 minutes of commercials before they started the damn movie.
Yeah.
Like, everything is getting commercials thrown into it.
It's the same thing when you go to a regular movie, too, by the way.
Yeah.
It's not commercials in the movie, but before the movie, dude, it's like 10 minutes now.
Yeah.
I mean,
it's like, hey, thanks for tuning in. This will start in 12 minutes.
Yeah, for real. You are not in danger of missing the start of a movie anymore.
No.
I just realized, too, that I think this is Paramount Skydance. So this is the stock now. I mean, is this, ever since there's been the Paramount, the stock sucked, it tanked. Does this make any difference, you think, for these companies? Does Disney become more of a streaming company than just parks? We were talking about this off air about Apple, right? It seems like that's where they're headed. That's in the services portion, though, but it is a smaller part of a portion that it makes up 35% of their revenue. So for those who are banking on Apple to eventually really bounce based off of streaming, I think it's going to be some time before that really happens. So I don't know, man. There's a lot going on in this streaming thing. We knew it was going to change things, but dude, I mean, I think it won't be long before sports aren't really on major networks.
No, you're going to lose it, and it's
because that's the way they're paying salaries, right?
So and it sucks. It's unfair if you ask me. I mean, like,
does this change how you bet on sports?
How I bet?
Yeah.
No. I still plan to lose money, if that's what you're asking me. But I do think that, like, in terms of strategy, I think that this is where these guys are going, like Apple and stuff like this. They're going to become more and more reliant.
You know what they're going to do? ESPN.
You just had an epiphany. I saw it.
I did.
I saw it in your eyes. Yeah,
no, but you know exactly what. When I say, you're going to be like, oh, shit, that makes sense. They're going to do a Fubo was trying to.
I like Fubo, but go ahead.
Yeah, Fubo. Remember they were trying to have mostly sports and be able to bet within it. They never got around to it. But ESPN already has their betting service. Sucks, by the way. They already have that.
Yeah.
Couple that with their app.
Yeah.
You can bet it all right there. They're going to be the ones to do it.
Yeah, of course. Yeah,
They're the ones to do it.
Yeah.
That's where, I mean, that's
I bet
where
you
it's
Apple
headed.
buys a sports betting company. I'll bet you anything.
Yeah, but they don't have sports like that.
But they're trying to. They're going
to try to get F1 on the heels of the movie.
Maybe. I don't know. They're going to listen. They're going to try and get into it. But where was I going? Oh, the streaming stuff. It's like I think that one of the effects of the tariffs is going to be that companies like Apple are seeing like, okay, listen, the streaming services like this are a safer, more reliable source of income for us. That we don't have to worry. And also, let's be honest, manufacturing costs and the profit margins there are the manufacturing costs are expensive, the profit margins are slim. Whereas with the streaming services, even though movies are incredibly expensive to make and you can hit or miss, when you have shows that have been a hit, then you just buy them and run them over and over, like Friends or any of those shows. It's a nice source of income for those guys. So I do think those are going to become a bigger part of the equation for Apple. And you see Netflix try to get into sports. So
for sure, right?
Yeah.
You just see it kind of all heading.
Yeah, who just picked up UFC today?
Skydance.
Skydance, that's right. Yeah.
I don't know what they're called. Skydance, Paramount Skydance, whatever it's called. Yeah. I mean, they just did that. So, interesting moves that are going on overall. Earnings.
Oklo after the close.
Oklo after the close. I actually have some calendar calls on in here. The August 15 kind with the longs in September.
Mm-hmm.
I initially put some on late last week, like Thursday or Friday. So I had to readjust some strikes because I had like the 90, 95, 100 when stock was trading 85, but obviously stock has fallen some. So I got 3 on. I got the 85. I got the 85, 80. I'm sorry, 85, 90, 95. Got those 3. We're just going to roll with that. I think it might be actually more than I want. It's like these options are expensive.
Yeah,
I probably shouldn't have done these. These are not my normal MO. So come on, baby. You got to jump.
Yeah, I got the stock. I've owned the stock since 53.
Really? Oh, yeah, you have. Yeah.
Yeah, I actually owned the stock.
You're actually first one to tell me about it.
Yeah, I actually owned the stock down around 10. Get out of it probably, knowing me, I'm going to guess I held it probably at least until like 12. And then probably got out.
I mean, I can't believe you've held it this long.
From 53 to 73?
Yeah.
Yeah, that's pretty impressive.
That's your MO.
Yeah, but I've got...
It's a long-term relationship for you.
Yeah, it really is. Sold the 95 call. Yeah, we'll see what happens. I'm trying to turn over a new leaf.
Okay, all right, I see you. This BBAI AIA name has earnings. I was thinking about buying stock in it.
The heck is BBAI?
It's one of those.
Oh, Big Bear?
Yeah, I was thinking about buying stock in here. Persuade me not to.
Don't do it.
Why shouldn't I? It's pretty cheap.
That's a pretty inexpensive stock.
What's going to happen is it's going to drop. Even if it has bad earnings, it's going to drop to 5. I lose $200 at most.
Probably drop to like 3.
You think?
I don't know, dude.
No.
It's whatever. Buy it. I dare you. How's that? I dare you to.
Yeah, I'll buy it. I'll buy it for $7.15.
Do it.
Buy 100 shares.
You fool.
No, not
I'll sell it to you. How about that? How about we just do that? Instead of actually buying it, I'll sell it to you.
Okay, sweet.
What's the price?
$7.15.
I'll sell you 100 shares at $7.16.
No, $7.15 is my price. It's not trading on the screen, so no. It's not trading on the screen.
You missed it.
Yeah, missed it. I don't really see any other earnings that I'm interested in, though. Honestly.
So we're 90% of the way through earnings season.
Yeah.
There's not. We're onto the B side of the album.
You know, there's things like G-Dot and Triple D, things I used to be interested in, but I don't care about
There's
those
just
names.
not. No, there's not much.
Yeah,
What's an ST?
I was kind of interested in. CRCL, Circle, I know that's one that a lot of people are looking at, but I don't know what
I haven't touched it.
Here. Yeah, I don't really.
Actually, you just reminded me of.
I don't know what I want to do
Fig
here.
too.
I'm not interested in this.
No. Oh, Fig's up $5 today.
At all. Expected move of $18. Fig is up $5.
Yeah, this one's interesting because it fell when this went public. When we were watching it that day,
Yeah.
And the opening print was $85.
I have a zebra on in here.
Yeah, the opening print was $85. So I was watching that 85 number because I thought if it fell below that, that could be bad news, which it then did. So I think that 85 could prove its resistance.
Yeah, it kind of has. I put the. I don't even remember what day I did it. Oh, I guess I could just look here. You can tell me.
I don't want to buy them.
I did it on.
I'm gonna do something stupid. I'm about to do something stupid.
Do it.
I am.
I did this on the 5th, and then I moved it further out.
I did it. I did something stupid.
Is that this morning? I guess it was this morning. Oh, you know what's funny? Yeah, that was FIG. I'm getting confused between FIG and FI, Fiserv. I keep forgetting, a little confused, but different prices. I rolled this out earlier this morning. I rolled FIG out to October from September. This Robinhood has been doing well. I should have closed it. See, I was trying to be nice.
Makes me so mad.
I was trying to be nice and wait and close this thing on the show. I was up 80% earlier today. Also, I'm not going to get greedy. I should just close this out. I should. UNH was up earlier, higher too. I'm planning on, I could close these two out today. I just haven't done it. I was going to close them out, but I don't want to close it out here. I wanted to close this out when it was up more. Same thing with Robinhood. I might have missed my opportunity, especially now markets are down. Whatever. Outside of that, man, I don't know. I do think it's, as you can hear me talking about closing stuff, it's about that time to build up some cash again.
I'm with you. I was just going to ask you, actually, like, what do you, there's a part of me that's like, I don't know, like an uneasy feeling, I guess. Like everything, earnings is coming, they've been really good. Interest rates look like they're going to be cut. Most of the uncertainty around tariffs has passed, and now I guess we've punted for 90 days. What's there to be scared about? And that's what gets me scared, is I'm not sure. And it's just like we're heading into a time of the year where I'm not a big believer in seasonality.
Neither am I.
But September, October can get dicey. I do know it can get volatile. And so it's just like I've closed out a bunch of stuff recently and built up cash. And I don't know, what do you think heading into tail end of summer? And
I'm not a big a big believer in seasonality either, just like you. But to that point, I could see a situation where we trail off over the next 2 weeks, and it just really might kind of depend on the CPI number, and who knows. So, I know I might need to not get a little bit greedy and just close these two, because those are two of my biggest positions. That's the reason why I'm actually thinking about closing it. Now that I've made some money on this UNH, this thing is almost $5,000 net lick. I mean, that's almost 20% of my portfolio, basically. Robinhood is actually a decent sized position as well for this portfolio, so it probably behooves me to close those two. It's not the worst thing, though. I mean, again, they're further out. They're 39 plus days, but it probably makes sense, and I might just do that towards the end of the day. We'll see.
Yeah.
Not a whole lot going on, though. I mean, right now, again, we got a catalyst on the front horizon. It is interesting, just to do that interesting look and recap over markets, things that stand out today. Gold being down 2.5% is kind of interesting.
That whole thing with gold last week on Friday.
Yeah, I didn't notice that. What happened?
So all of a sudden, word leaked on Friday that gold wasn't going to be subjected to the tariff. And gold just fell out of bed. And then this morning, or this afternoon, they issued a statement saying...
Yeah, it looks like it was up big on Friday.
It was up huge. And then all of a sudden, it was right before Dr. Jim went on air. It just tanked. And that's when the word leaked it wouldn't be subject to tariffs. And then they issued a statement today confirming that. So it was crazy. I mean, it was just crazy.
Well, CPI's out there on the horizon, folks. Be safe. As always, thanks for watching the show. We'll see you soon. Trade them small, trade them often. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody. Happy New Week to you. Tim Knight here. We're going to look at some charts together. It's turned from a slightly green day to a slightly red day, which is good. My favorite. We came into futures yesterday, and we're past earnings season. We're past the trade wars. No economic data really till tomorrow morning. So the news was the latest shakedown by the White House, 15% tariff against AMD and NVIDIA specifically for any sales to China. And the market went, didn't care, and everything was up. And the NQ was quite strong, and it really started rocketing about 2 hours into the trading day, and then that has taken a turn south. I'm not quite sure why, and I don't really care. They're all just charts to me, but RTY, NQ, ESY, I'm all red. And for my own positions, of which there are 30, almost everything down today. One or two bad boys, but nothing too nasty. The only really ugly one was GPRE, got stopped out of there right quick. My smallest position, took a loss on that. And then ELF, lesser degree, but no big deal. Pretty kind of mildly-ish aggressively positioned right now. And as I said, the NQ, which is kind of my focal point, is weakening away. That is my one and only options position. The cubes, October 17, 2025, 565, I believe, puts. And as we shot higher today, I used to work for a very famous trader, and he had what he called the moron method, which is when he had strong conviction about a particular trade, he would put more on. He wasn't much of a wordsmith, but I remember the phrase. And that's what I did today. I increased my put options by a modest amount in the midst of all that strength, and that so far so good on that. Big dreams for how that can go between now and before expiration, obviously. I got my charts preloaded, and so let's talk about them. Let's thumb through them together. We begin, as always, with our friend the spider, and it is down a little bit. This is the 7th day in a row of toggling colors here. Red, green, red, green, red, green, red. We're a little bit below lifetime highs, and the market just does not know what to do with itself. Every day it just gets jerked from one place to another. So tomorrow should be green, but I hope not, following this pattern. The diamonds are a little more down than everything else. They're down about 0.5% versus the 0.2 everywhere else. And this line here simply denotes Thursday's peak. It's not particularly important. It's simply illustrating the approximate area where 3 times now things have kind of pooped out. So we had that first poop was last December, and then poop number 2, appropriate enough, was January, and then recently in July and into now. So that zone seems to be about where it exhausts itself and turns lower. But as I said, there was a shakedown for these two companies specifically. And weirdly, AMD was quite strong. It was raging higher today, but it's given that up. It's barely up at all now, just a few hundredths of a percent. I did not get stopped out of this position, so we're still in AMD. NVIDIA is actually down a skosh. as we say. Lifetime high today on an intraday basis, but it's off just a little tiny bit and very, very highly valued. The entire market is at the mercy of NVIDIA, and NVIDIA is entirely at the mercy of the AI craze. And so as far as SMH goes, the semiconductor sector ETF, lifetime high today on an intraday basis, and up a little bit right now. But yeah, very, very odd reaction considering, yet more basically taxes against these companies based on how they behave. I've made mention that scary as being short anything to do with quantum is. I took the plunge with Brigetti. That's up today, but it's my smallest position, and it's got a pretty liberal stop there, that dashed red line that you see. So still in that in spite of the lift. A couple of others of interest, and I'm not going to do anything else besides Brigetti, but just things I like to watch is quantum computing, QUBT. These are obviously exceptionally richly valued because, there's no PE because there's no E. I don't even think there's an R at this point, but they're interesting charts. And then D-Wave QBTS, like so. And as I've said before, if this sector does blast higher, QBTS looks the best positioned. What else? Although we're largely out of the earnings season, there's dribbles and drabbles here and there. One of them is a company called Monday.com. Don't know what they do, but again, it really doesn't matter. It's a wild chart because this one's down about 30% today alone. It's basically where it was during IPO time, which was over 4 years ago. So over the course of its entire lifetime as a public entity, it's gone up and down a lot, and net barely moved. So it was kind of an interesting base down here, which produced some good results for a while, but that's clearly just petered out. So big old sloppy drop on that. I mentioned before 30 different bearish positions, 29 of which are just plain old short sales. One is long the October 565 cubes. Here's a few, just to kind of bang through a few of them here and there. Caterpillar, CAT. This is the fourth red bar so far, which is cool. Slipping below that cute little top. Dollar Tree, DLTR. And the dash red line, as usual, denotes the stop loss. Let me just, that's so far away. We'll just boink it out of there. Abercrombie and Fitch, this is down about 2 1/3%, turning away from its own resistance line. Then we've got FMC, which you've seen a number of times before. Another slip on this, about 1 2/3%. JBHT, that is JB Hunt Transport Services. A lot of these you've seen. Our old friends keep coming back here. So we're slipping down on that about also 1 1/3%. MongoDB, MDB, very sloppy long-term chart. Monster top here, smaller, but pushing down. Next big test is something like, why in the world is that a red one? Support around about there. Something like that. Let's be a little more generous. Let's say that would be an important break because that was the lowest it got, like so. So be watching that area for support, ... break. Halliburton, HAL, has energy related down over 2%. And more broadly, earlier today shorted XLE, one of the energy ETFs. XOP is still a prettier pattern, but I did XLE instead. But that's slipping lower as well. So all in all, pretty good day. I'm not a crypto guy, but I like looking at the charts, and I've jumped the gun a bit. Let's look at gold for a second, then we'll talk about crypto. Ruined my narrative here. GLD, gold, pretty bad day for gold. The front month is down almost $90, which aligns nicely with what I was talking about last week, saying that it's, I don't even have to look anymore, it's April 22nd, that was the peak, and we've been just undulating beneath that zone for months now. I like gold. A year from now, I'm confident it'll be much higher, but as now, it really has to digest these gains. So not the least bit surprised that it's down. The only position I had come into the day was short GDX. I mentioned that on Friday. And I went ahead and covered that early today because like I said, long-term faith in precious metals. So I don't want to go against my own religion there. So took profits on that, no position anymore. And this gap has been more than filled. So we'll just say goodbye to that. So miners did a pretty admirable job fighting the tide because they're down, but not by much. Now, as far as crypto goes, Bitcoin prompted, I suppose, by the allowance of private equity and crypto assets into 401ks of all things, it's got a big boost lately. The futures and the cash markets approaching lifetime highs. The peak from 714 still stands, just barely. It was just over 123,000. We got pretty close to that, within less than 1%. We are flipping away from that strength right now. So it's not exactly a breakout. It's more of a thrust higher that's just petering out for the moment, but it is still up nonetheless. And another element here is Ethereum has been exceptionally strong. You can see here just big push higher, getting quite close to lifetime highs. It wasn't that long ago that Ethereum was just a disaster. It was a small fraction. It was down like 70%, 80% from its lifetime high. It's just about undone all of that. And it's also eye-opening to look at the ratio chart of Ethereum to Bitcoin. Sometimes these ratio charts have their own patterns to them. This one does. For example, we see here back in the day that it had hammered out a bullish-looking pattern, and that followed through nicely with this burst higher. Yeah, it sort of like started to die off, and then for a long time here, years really, Ethereum became weaker and weaker and weaker versus Bitcoin, and just really started to plunge away, so that by just a few months ago in April, Ethereum looked like junk. And so it's had this big rally. But what I would say is keep an eye out, because if we assume that even this derived concoction here has value and insight, then as it gets close to this zone here, Ethereum's superhero cape is going to get pretty tattered, and it might re-weaken again. So it's an interesting burst, like so, just whoosh, like that. But I did thumb through, I've got 90 different crypto charts I look at, and I found 4 that I thought, I mean, if crypto is going to have a great future in the next year, I looked at 4 that to me look particularly nicely formed. There's this Tron, TRX, and there's Dogecoin, DOGE. I'm not in any of this stuff. I just like to look at charts. So Binance, BNB, which I believe I read that Trump's latest possible pardon is for the founder of Binance. CZ, I think, is his moniker. And then Algorand, ALGO. So interesting looking long-term bullish charts in the crypto space. But the big event that'll be an hour before tomorrow's opening is the CPI data. And I just glanced, the past 5 months in a row, the reported CPI was higher than the expectation. So the old forecaster's not doing such a great job. So it'll be interesting to see, does inflation come in hot tomorrow or not? And as I said, the last time there was an important government report, the jobs report, Trump's like, fired them. Give me some people with numbers I like. So be interesting to see if that happens tomorrow. I don't know where the CPI emanates from. It's not the BLS, I don't think, but all the same, be interesting to see how he reacts to that if the numbers do come in hot. But that will inform TLT, I think, which is massively unchanged right now. It's just sitting there waiting for that data. But that should be the mover and the shaker tomorrow. As it is now, TLT just lingering and still kind of banging inside this pattern that's been forming for years. So anyway, as I leave you, we're still down across the board by a little bit. And I think we'll get some a little more shake and bake tomorrow morning with the CPI. So thanks for joining me, and I'll see you then in the aftermath, whichever way it blows. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice? Nice?
The best part...
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field, most likely before the game.
You're going on the field, most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Enough, it is the last call. Even the S&Ps are down 11. They broke 6,400 for a second here. Very anticlimactic. Climbed back over by about 5 handles. They're down 10 handles on the day. Very tight range here, about 35 handles top to bottom. But really, most of it spent just meandering around. Even the S&Ps have traded 838,000 cars. Not a lot of volume today. NASDAQ down 55, Russell down 3, and the Dow down 170 or so. Volatility creeping up by about 15 cents. Bond staying steady at 15.05, mid-range for them too, maybe lower mid-range. Bitcoin hanging in there, Sosnoff, 119.7 up $2,800. Pretty much sitting where it's been most of the day that we've been on the show. Last night it climbed to almost 123,000. Ethereum doing the same on a percentage basis, actually more, making new highs, up $234. You can see here it traded up to 43.91 on the futures. They're 43.21 right now. Oil just doing really nothing, up 23 cents after selling off the last 7, 8, 10 trading days. And gold down significantly, $87, 2.5% move, but it's been sitting there all day long too. Sadnov, silver doing the same, down about 2%, down 81 cents. Sadnov, that's all I really got for you today. You got CRCL, OK, LO, and once mighty AMC if you really care about that for earnings. What do you think here? I really thought we were going to have a little bit more movement to the downside personally.
I thought
nice rich close yesterday on Friday,
I thought the extremely overvalued close on Friday could have been the intermediate term top. Intermediate, I say, because there's no way to say that's a top.
Yeah.
But I thought it could be an intermediate top. They hung in there all day, and that one rally they had where they had the S&Ps up about 14 or 15 handles at one point, which is, 25 handles higher than we are right now, or 30 handles higher than we are right now, was pretty impressive. They had the NASDAQ about 100, at least 100 handles higher, maybe 125 handles higher than where it is now. And the sellers finally showed up today. Finally, they came out of the woodwork, but not big sellers, but just
I don't know if the sellers showed up with 850,000 E-mini S&Ps trading, or just the buyers weren't as aggressive as they used to be. Thomas, at least a small little breather.
I'll give you either one, but
nobody knows. I mean.
At least, let me change this. A couple of the buyers stepped away.
Okay, that's fair. There you go. Now you're doing it. Now you're saying it right.
Some of the stocks Coinbase at one point was up 20, but I know that 21, but I know the Bitcoin sold off a little. It's only up 10 and change now. Reddit's been strong all day. There's the stocks that are on the super strong side. Netflix, Intel, these are stocks that are just up all day today. MU and UNH, all these stocks strong all day. RBLX too, even though it's sold off a bunch now.
Yeah, you even got IBM. IBM's up $6. CRM is up $7.
No, Tesla. IBM was down big all day. What are you talking about?
I'm sorry, downside. I apologize. Put on the downside. Tesla, IBM, sorry, down $6 on the other side for the Dow.
Yeah, actually, IBM has been the ugly child. I mean, after that stock missed its earnings, I thought it would be okay around 250 or 245. It's 235. I'm a little long IBM here, not loving it. That's been about the weakest of the blue chips that I can think of, would be IBM. I don't think there's anything else kind of in its league. Some of the Chinese stocks can't get out of their own way, but that's about the weakest of all the stocks. But I mean, it's funny. There's PLTR goes down $4 today, and people are like, "Well, why is it down?" You're kidding, right? You're kidding me.
Well, it hasn't been down since April, is what they're.
Well, I understand that, but you're kidding, right? Why is it down? Apple's down $2. Why is it down? It was up 30 last week. What do you want? I think that I don't think I've ever felt like a down move here would almost like nobody's expecting it. Do you know what I mean? I just don't think anybody's expecting it.
At all-time highs, I mean, I don't know. I think almost every day somebody's expecting it. It's not, it just hasn't.
Okay. All right. I mean, I
know the two of us have been sitting here, Well,
it doesn't matter how long you've been sitting here and whatever you've been saying, because it ain't happening. So it doesn't matter because you ain't get paid. And I am short deltas, and I'm for sure not gotten paid. So if anything, it's cost me some pretty decent cash. Last week was expensive. This week.
Well, this week just started, South and you got a positive P&L. So I mean, you're already doing.
I didn't say this week cost me any money yet. But next week, I mean, the rest of this week, let's see. I'm definitely playing a lot more downside than this. I'd like to see him get back down to that, I don't know, 6,300, 6,250. And I don't even consider that a down move, but like 100 points lower in the S&Ps, maybe.
Yeah, they've only got about what I say, about a 70-ish handle expected move. So to get you almost to your 63 number.
Yeah. I did get a little long bonds today. I bought some, I sold a bunch of puts right here in the bonds. Haven't traded the notes at all, but kind of like the bonds here for my thinking is
IV rank of 5 in the bonds. That's typically not something we sell premium.
No, I'm not selling both sides. I'm only just getting long.
I was getting there. You're selling puts because you're a little bit scared about buying the future, right? I mean, usually.
No, I just like the extra juice. I like the high probability trade. Plus, I like
my story better. You're scared. I got it.
Not scared.
I'll tell my narrative. You just sit there, look pretty.
Okay. All right. Well, I'm not scared, for the record. But may buy some notes tomorrow morning, but we'll see what happens. Mm-hmm. My thinking is bonds higher, stocks lower. That's what my thinking is.
Oh, it was the same thinking you had last week and was significantly wrong.
Yes, it was. It probably will be significantly wrong this time.
Bat said bonds
so far
market higher last week, and Bat was completely correct. Now, again, it's the first time all year.
You also have a very skewed and biased memory of your own whatever you say, but that's okay. Because your timeline only goes back a few hours. I understand. It's okay. But we'll see. Let's see. That's tomorrow. I'm just hoping that tomorrow we get a little more. Today's two-sided action wasn't horrible, but there was no follow through, nothing like that. But it's okay.
No velocity of the move, no meandering down 20 handles is a lot different than selling off 20 handles in 15 minutes and coming back, that kind of thing where there's some trade in between. This is 1,000 cuts kind of thing, as opposed to
could be worse. Could be even worse than that. Yes. I'm not disagreeing with you at all. Some of the commodities that you talked about, bonds not moving all day, they've basically been staying in a 2-tick range all day. Well, so has gold's been down essentially $85 all day. Crude oil's been basically unchanged all day long. Corn, wheat, soybeans have been up 22 since 5 o'clock this morning. They have not moved the entire day, and natural gas has been under $3 all day long. So I think that none of these commodities have really moved. Only I said last night when I was talking to Chris on first call, I was like, you can talk all you want about like gold and silver and every single commodity that's out there. I don't care which one you even find. Nothing matters right now. It's all an equity marketplace. This is all about, a handful of the top 20 equities that have been able to, carry this market, sustain the rally, and basically hold this whole entire market together. And until there's a change of heart, which there might not be for a long time, or it might be tomorrow, who nobody knows.
Sure.
We're going to be trapped in this vicious little cycle where you're going to have to decide, do I really want to buy PLTR at $185? Right. Do I want to buy NVIDIA at $182? You're going to have this. It's going to be quite the challenge. So we'll see.
OKLO Sadna for earnings, IV rank of 27, once a high flyer, down the last 3 days. Markets are decent. Again, I looked at September. Markets are about 15 to 25 cents wide. You got 12 million shares trading. August options with 4 days to go are about 20 cents wide also. Any interest? OKLO.
Not really.
How about SE? My Taiwanese sources want to remind you that SE has earnings tomorrow morning.
Nope.
Well, let me get my words out. CRCL, you care?
It would be the most interesting of all the plays. The problem in CRCL is I don't even know if they traded him. Hold on a second. What am I saying? CRCL.
What are you trying to worry about?
I haven't looked at these markets in a while. Did they tighten up?
They're a little wide. They're actually probably the widest of the three that I mentioned to you.
Yeah.
Who am am I to correct you? I am not here to correct you. I am here to nod.
Yeah, they're about 50
And
cents
not
wide.
remember what I say.
And disregard that IV rank in there because it doesn't mean anything because it's brand new stock.
Yeah, hard to borrow stock. It would be my least favorite stock to trade for earnings today.
I mean, if you're going to do anything in here, just sell the living crap out of the money calls.
There is call skew. What Tom is talking about is the stock's trading around 162.5. That would be the at the money. Let's just make it easy and go $20 away from the money. The puts are trading 201. Go $20 higher, meaning 182 and change. And those calls are trading $3.40. So equal distance away, the calls are trading full. I don't know, 50, almost 50% higher than the puts.
I will tell you this much though, in this stock, good luck trying to get filled anywhere close to mid price.
Yeah, markets can tend to be a little bit wide.
Yeah, tend to be a little wide. That is a very extreme. I'm trying to sell some out of the money calls right now where the markets are already tight to start with. You can't sell anything. So you're going to need a giant uptick to sell an out of the money call in there. And what's the stock up? $4? Yeah.
Yes.
Yeah. Nah. I mean, I think the best play,
expected move is $17 over the next 4 days.
I think the best play in there is to sell out of the money calls. And I don't think you're going to get filled unless you hit bids. And I'm not going to hit bids with 4 days to go. I've gotten in trouble before with that without trying to get myself in trouble. So I just don't understand how Circle can make any money at all. I mean, I don't even know. I mean, what's the best they're going to do? They're going to lose 100 million instead of losing 200 million. Like, I don't know. How high can the stock trade if they just lose 100 million?
Yeah.
You know what I'm saying? Like, there's no way this company makes money. There's no way there's no way they're within years of making money. I don't even know what their model is other than to, how much money can you make when your whole model is just based on how many basis points you can get out of a stable coin.
Right.
But so I got to figure, if you can get some calls off in there, it's got to be good. But I tried. I even
look at that, you got filled.
Some crappy calls. I just wanted to get something so I could watch the stock tomorrow morning.
Good, and you got somebody to blame if it doesn't go well.
You.
That's what I said. You got somebody to blame if it doesn't go well.
I mean, I didn't have any other. It's nothing. Just selling some junky out of the money calls. Nothing. So don't even try that. Don't try that at home, kids. It's not worth it. Trust me.
But it's going to make for fun TV tomorrow when Sadnov is chasing these at around $4 and then selling puts and then saying, Dad, I can't believe you mentioned this to me.
I can't believe you got me involved in this piece of crap stock Circle, which I think, I don't know, maybe we traded it once or twice. Maybe we're up money in it year to date. I don't even remember, honestly. I'm not sure. I'll have to check. I can't. If we're up money in it, I'll really sell some calls, but I don't think we are. Circle, CRCL. What the hell? We're up small. Like, all right, surprisingly, but whatever. I'm not going to do anything. All right, what else you got?
That's it. SEOKLO,
No.
CRCL. I mean, there are a couple of other fringe players if you really want.
CRCL out of the money calls would be my favorite thing. I wouldn't sell out of the money puts in there because I could easily see that stock back at $35. I'm just not sure what their business model is. Looking around the rest of my screen today to see if there was anything else.
I'm surprised. I know the Ivy rank is only 7, but I'm surprised Tesla up 11, back near the higher end of its range that it's been in since May. That you haven't started to do a little something in Tesla. Plus, for your love for the.
No, I don't care. I don't care about Tesla.
Man, you're a I can't poke you. No way. I mean, if I
couldn't care less.
Elon,
what's funny is Costco.
But you're invincible.
Costco at $9.90. Who would have thought about 3 days ago? It felt like it was $9.30. That it was going to get back to $9.90. $9.90 in there.
Costco did me real good. It made me fight on the way down, And then when on the way up, I figured, you know what, at 970 after watching the stock go down to 930, I'm like, you know what, I can get out of this, take a small little loss, and consider myself a hero. Look at the staying power that has. Man, was I wrong.
Oh, you are so.
I am such a bad trader.
Oh God,
I really am. I really.
I mean, I've been telling you that for years. So, all right, let's see what else we got going on here this afternoon. Yep, I don't know. I mean, I thought we closed it.
I mean, S&P's making lows, Sadnov. I mean,
well, we also closed. I mean, just as a repeat, we've said it 10 times today. On Friday afternoon, we closed at a ridiculous level, and the S&P.
No, hold on a second. We closed where we closed. We didn't close at a ridiculous level. The market, the equity market, closes at 3:00 Central Standard Time, and the futures kept rallying into 3:15 close. So they're
actually down. It says we're down 17, but from where we were closed on Friday, we're actually down 30.
30, right.
So a little bit different. But again, it's rare to get those rich premium closes, and usually they usually mean something. And this time it looked like it worked again, but it wasn't easy.
Yeah, but this was a death march lower. I mean, like you really had to have some sort of conviction.
You had to wait all day. You had to suffer.
Yes.
You got to suffer if you want to sing the blues. Blues down 20. Let's
suffering more than just serving you all day. Like you had to suffer, serve you, and suffer. It was a very hard day.
Yeah, but the short deltas are kicking in a little tiny bit right now. Come on, if you get them down 30 or 40 from here, be good. Tomorrow could be a pretty good size down day, Pat. There you go. I put it out there.
Tomorrow, okay. Then now, tomorrow we've got a little bit of economic news too, don't we?
CPI in the morning.
There we go. I was hoping you would say it.
CPI, PPI, EPI, LPI, LPU, whatever you want. Make up some acronyms. I don't care. That's why I bought some bonds. So I'm long bond, short stocks. We'll see what happens tomorrow morning. But you got to put your money where your mouth is.
Yeah. How's this expiration week usually?
In the last 27 years, 14 down, 13 up. But
downs have been more significant than the ups or something?
Yes, that does not tell the whole story. Net on paper, 14 down, 13 up in the last 27 years, going back to 1998. But for August expiration. But the size of the down moves, there have been some significant down moves throughout the years.
Mm-hmm.
Now, again, that might have been a little bit skewed in 2008 and some different, if you remember the worst down move that we had in 2024, don't you remember the August 6th, 2024? August 5th, 2024?
No, I don't know why.
August 5th, 2024. We opened down on the Friday, August 2nd, we were down like 150, and then on Monday we opened down 250.
Come, I don't remember that in August. I'm sorry. August
2024, we were down like 150 on Friday, to 150 to 200.
I believe you. And
then we opened down 250 on Monday. And then by the end of the day, we were only down about 120. And the next day we opened up and we kept going straight up from there. And that was like a true, cluster, what.
Situation bottom, yeah. Sure.
Well, yeah, because we only had a 1 day down move, but that was August. You tend to get a lot of these, potentially scary moves in August. So we'll see what happens.
We got volatility upticking here, a little bit up 25 cents, over $17 for the first time today, Sadnov.
Oh no.
No is right. Oh no is right.
Yeah. All right. So let's see, what else do we got here?
Friday we got a show, Sadnov. Everybody coming?
Everybody who's anybody that's not coming, it's nothing we can do, sir. Anyway, we got our boys.
Time, August 15th. Come see us. tastylive.com/events.
We got our boys waiting in the wings, so we're gonna let them. We're gonna bring them on. We got Dylan, and in parts unknown, we got Ilya on the West Coast, and I think we have Mr. Vecchio on the East Coast, but I'm not 100% sure. Let's see what we got.
Gentlemen.
Hello, sir.
Mr. Vecchio is not quite back yet. The X-raying of his ribs continues.
Oh, that's right. He's injured.
What his daughter punch him or something like that? What happened?
You know, I don't know the circumstances that have led to this particular injury, but we were commiserating on a Futures Power Hour earlier about how we're obviously old and falling apart because his rib is messed up, my back is messed up. It's terrible out here.
Soft, Dylan. These guys are soft. Tell them about traveling all around, doing things. I see you.
Well, Dylan is like, he's a country boy. He's country strong.
I'm mountain tough. I'm like a hillbilly.
Yeah. You're a modern day hillbilly.
I'm a legitimate hillbilly. Okay, I'm an upstate New York hillbilly. You can't keep me down. Not only that, I remember August 5th like nothing, bad. You don't remember August 5th, bro?
Now that he reminded me,
we're down, and then we went up. You don't remember?
Yeah, August 5th was really real. Come on,
it was a huge day. It was August 5th. We went down. You see, you don't remember? We were down, and then it went up. It was a whole thing.
Like most days, we were down.
No, it was very specific.
Yeah,
it went down. You see, and then it went up. I can't remember the day. You don't remember the day it went down, and then it went back up.
Yeah, it was August 5th, the 6th, the 12th, September.
Tell you what, no amount of back pain could keep me down and away from the Outside Lands Festival in San Francisco this weekend. It was marvelous.
Oh my God.
This guy
off the rails. Show's off the rails already. Yeah.
When once he starts saying the word Portola, you got to stand back.
I don't know
that one's still coming up.
I don't know what a Portola.
Portola is where the liberal elite of the Northern California genre gather to.
Oh no! That was this past weekend at Outside Lands
to feel superior to the rest of the country.
The mayor even came out
and sniff eucalyptus. I think is what they call it.
I did not get invited to that, Dylan. Where's my invite?
You're way too East Coast for them. They would never. You talk too fast. You eat the wrong foods. You probably drink real milk.
Right. You don't even like Brussels sprouts.
Yeah. And you for sure as hell don't use oat milk. You can't get, and anybody that's not an oat milk drinker doesn't even get an invitation.
That is true. I don't drink oat milk, but I do. I mean, I'll choke down a Brussels sprout. It wouldn't be my first choice.
In fairness, the barbecue and chicken sandwiches ran deep this weekend.
All right. Well, what I'm perplexed by is hearing Sosnoff talk about seasonality like he's some sort of public.
I wasn't. He asked me a question. I gave him an answer.
You were like, "Oh, August, you got to be careful in August."
My God, I was answering a question. I was being.
You're like, in August, it gets crazy. Seasonality. This guy.
Thank you for representing Chris there, Dylan. He appreciates it.
Like somebody's got to represent my man in the X-ray room.
That's right.
So anyway, PPI, CPI, let's go. Inflation, what are we doing, Ilya? I know we're probably going to spend an hour on this topic, but.
Oh, absolutely. I think you've seen for the past, really since the beginning of this month, and you've seen it in earnings. You've seen it in the response to economic data. The markets have been more responsive to bad news than good news. They shrugged off explosive earnings from Meta and Microsoft. They didn't like those. They shrugged off a bunch of good economic developments on the EU-US tariff deal. That's the two biggest consumer markets in existence, or at least as far as we know. We'll see what's out there in outer space. But this is it. This should have been great news. Last week, they had a pair of service sector numbers within 15 minutes of each other, one good, one bad, same exact type of number, ignored the good one, moved on the bad one. I'm not even going to talk about the jobs report, which was awful, obviously, but weird also. So if this is a number that's going to be warm, and if it's going to tell the markets maybe it's not a sure thing for September, I don't think they like it.
So if they don't like it, I buy them. Buy the dip, my friends. Buy it.
Dylan, that doesn't work. Where have you been for the last 15 years?
Yeah. Buying the dip has been a disaster.
Buying the dip? What?
Where have you been for the last 15 minutes, did you say, Tom?
15 years. 15 years.
Definitely don't want to buy the dip in August.
This gold sell-off today is interesting in that context also. I mean, we have a stronger dollar, weaker gold, bonds are up a little bit. It's almost as if the market is kind of getting ready for what this could be.
Well, we did a piece today that suggested that a gold sell-off, a dollar sell-off, and a bond sell-off or an S&P sell-off have literally zero correlation to one another in this particular market.
What about if they happen in August?
Well, that would be seasonality.
It's a whole other thing then.
That would be seasonality.
Then the correlation goes to
Yeah,
1.
everything.
Reverses.
Look at Radigan. Then
he's
the correlation goes to 1. Man, he can trade. He's trainable. I didn't think he was. He's
It only
trainable.
took 15 years.
We got him.
He's totally freaking trainable.
Who
Look at
says you can't train a lake, Billy? You can.
Hillbilly.
All right, you guys, let's take a quick 90-second break and come back with more Tasty Live after this with the Overtime crew. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Back. This is overtime. Chris will hopefully pop in here as the show proceeds, but we are here with Dylan Radigan in Milan. I'm Ilias Puback in San Francisco. That's Thomas Westwater in Chicago. These markets are getting ready to wrap up the futures trading session, kind of flat. Not a whole lot going on here in the stocks space, but there is perhaps something to talk about across some of these other markets. But before we do, gentlemen, we had a chance, Chris and I, to talk about this earlier on Futures Power Hour today. But Dylan, I'd be remiss if I didn't volley this in your direction. We get some news over the weekend that apparently you can export chips to China if you are NVIDIA or if you are AMD, if you pay the government a 20% VIG. Thoughts?
I mean, so we find ourselves at an interesting intersection in global history and American politics.
That we do.
We all kind of reflexively go back to the belief that policy in America on some level, even no matter how much evidence we are presented with to the contrary, I believe most of us kind of revert back to an opinion that policy making is done on some level with a perspective or an investment or a prioritization of national interest or some perception of national interest in policy making, whether it's defense policy, whether it's industrial policy. And so when somebody says something like, well, we don't want to have this technology going to China, we sort of reflexively interpret that as well. Maybe that's not a terrible idea because they're our biggest competitor, and why should we be giving our biggest competitor access to the best technology? And you can kind of make peace with it. And then the sort of mafia piece comes into it, and you're like, hang on a second, this has nothing to do with industrial policy. This has nothing to do with national security. Basically, the entire U.S. defense and industrial infrastructure is being managed like a mafia shakedown with absolutely no prioritization of actual national interest, no prioritization of protecting, critical intellectual property or critical cutting edge capabilities technologically or militarily. It's simply posturing to extract fees, which is such a diminishment of the importance of the United States in the world and the importance of American technology in the world. There is a credible case to be made for being selective as to who gets access to the best American technology in a conflict-ridden and globally competitive marketplace. The credibility of that posturing collapses when basically anyone can have it as long as they pay a fee.
Well, this is the really interesting part of it, right?
Sad, honestly. It's sort of, I'm sorry, I'll wrap it up, but it makes me a little bit. It makes me, it's sort of so sad you kind of have to laugh, but you just I just feel bad for the engineers and the executives and the voters who fall into the false belief that policies are being made for the benefit of national interest when policies apparently are being made really just as a way to extract fees, which is sad.
Well, and this is really what makes this interesting, right? Because a lot of the justification and a lot of the legal framing for the executive order-based tariffs that we've had so far has been on national security grounds. And perhaps when you look at China, you might even say that that kind of rationale is justified.
Yeah, you certainly can make a credible case. And if we're going to have a debate, the tariff, the restrict China's access and tariff China side of the debate stage would have a very formidable offering.
That's right. I mean, obviously, justifying tariffs on European Union aluminum and steel, is tougher to sell on national security grounds. You had to go to the bottom of the national security well to try to justify them for Canada on some sort of fentanyl adjacent conversation. But with China and strange balloons showing up in U.S. airspace and the buildup of military on man-made islands in the South China Sea, all of those things, you could say, well, obviously there's a national security consideration of some kind here. And this now might serve to undercut, at least from initially a rhetorical perspective. We'll see if there is then some sort of legal action, and from a legal perspective, the logic of the tariffs, which is interesting in the sense that, of course, the deadline on those tariffs is tomorrow with China, and maybe the can gets kicked on. Thomas, do you think that this new arrangement whereby AMD and NVIDIA get to kick up to the dawn, literally, and then export these chips, do you think the markets care about this?
I don't think the markets really care about it. I think they care more about just getting access to China overall. I mean, there's this 15% levy or export fee, whatever you want to call it. China's going to get those chips no matter what. I think this imposes more of a burden on American companies, NVIDIA and AMD, for the H20 and the MI308. So it's kind of almost, I mean, not that we haven't seen it in the past few months, but like a kiss the ring moment seems to be. I mean, you say you don't want chips going there, and then they can go there for a fee. You know, I don't know what the national security concern around that it has been if you're just going to write it off for a small fee. But I'm long NVIDIA right now, so that's one of the few equities I'm going to stay long in this market until we get past the inflation data. I just think it's going to continue to go up no matter what.
I mean, in fairness, and to your point, Thomas, you get this initial spike down on this news, then you come all the way back and you kind of settle. It's not that different if you look at AMD. And you consider, okay, well, from the market's perspective, here's your gap down, and then here's your recovery, and then backfill. So it spooks the markets initially, and then they come right back. Dylan, do you think that, sort of as Thomas is saying here, that this basically doesn't matter, and that the AI, as you've called it, supernova, just subsumes all?
I mean, I think that obviously that is my entire operating premise is that this AI supernova, that whether it's the PPI, CPI, or whether it's the tariff rigmarole, all of it sort of falls apart in the face of the supernova. And that's kind of just where I come. That's the reason I'm sort of nakedly long and sort of ignoring all of the information that would otherwise get me into a huge negative point of view. There's so many things to not believe in right now. There's so many sort of issues. I would say there's not to not believe in. There's so many reasons to be concerned about the price levels, where the market's at, all those things. And so the only reason that I hold on to my position is based on the my perception of the momentum of the supernova.
Well, this is really where things get interesting. We get a little sort of bit of a baby down day today, but in looking at the supernova and sort of where we find ourselves, let's just consider we're basically sitting at the July 31st high. Mm-hmm. So we haven't gone very far in the past 2 weeks. We obviously had this very sort of alarming fade out of the Microsoft and Meta earnings. Obviously, that gave us a spike higher. This was the Fed the day before. We can see markets didn't really make much of the Fed. They were idling before, they were idling after. But then we get those huge earnings from Microsoft and Meta, and it's not like those stocks tell you something was wrong with those earnings or they were tarnished somehow. Not at all. Obviously, both of those stocks roared higher on those numbers, but the index couldn't hold it. It gapped higher, so it closed here after the Fed. It gapped aggressively higher on those earnings, then couldn't make it stick. Then we get the jobs report, which was obviously awful. And since then, we've kind of begrudgingly come back. And we're basically where we started. Now with this CPI number in front of us. The expectation is that we're going to get a 5-month high on inflation. And so what we have here then is a situation where we have to ask ourselves again, does that part of it matter? Because obviously the jobs report mattered. There it is. Earnings mattered, but then they didn't. Last week, this one little downswing before we came all the way back was a situation where we got annoying service sector data. So the market does seem to have a data issue here. And actually, it looks like Chris is back, so I think we can just bring him in and have this discussion. Production team, can we get Chris in here as we talk about CPI and just get a take around the table? There he is. Sir.
Hello.
Welcome back.
Hello, Chris.
Thank you.
We're just past the VIG to sell chips conversation and into CPI. Do jump in. Do the markets care?
About CPI or the VIG?
About CPI. I think we've collectively concluded that the AI supernova subsumes all, and while the VIG is not terribly tasty on the plate, the markets will eat it.
Markets will eat it. 85% of the pie is better than zero. And China's getting their hands on those chips anyway, right? Singapore was importing enough GPUs in a single quarter from NVIDIA that would require the entire year's electrical supply. So obviously a pass-through. And Dylan, directionally, the government's prioritizing market access as opposed to restructuring global trade or decoupling from China. I think it's great, though, for one reason. Do you want the AI infrastructure globally built on American technology or not? And that's all there's to it.
But doesn't it diminish the credibility of the American government when it claims national security reasons when it comes to things like access to military or industrial technology?
Bet. Absolutely.
Yeah.
And does
that's the part that's the part that's weird to me, as we were just saying. If you justify this whole thing on national security grounds, and China is the one place where you could really make that argument, as opposed to Canada or the EU or some such thing, is there a lawsuit? Does the American Enterprise Institute bring a lawsuit? against these tariffs then?
Probably. I mean, they're being adjudicated in the court right now around IEEPA, which there is within the statutory text, there is no mention of tariffs. So deploying tariffs under IEEPA doesn't make sense. Not really.
Seems like the business community then has a lawsuit they may want to activate because they might have standing. They might go, wait a minute, how can this be national security if there's a VIG?
And the whole tell for me is the fact that Commerce Secretary Lutnick's kids who are now running Cantor Fitzgerald are selling products. Basically, hey, we know that you had that tariff bill. We'll take it off your hands for 20 cents on the dollar. We think it's going to be worth more than that. So, I mean, the Commerce Secretary's kids are
taking markets against that is unbelievable. That's a fact.
Yeah.
I think, Chris, this goes to what you said earlier on Futures Power Hour, basically characterizing this as Gilded Age again.
Yeah, I just sent the link in the chat if you want to pull it up on your screen. But this has been going around. This is only one of the sources. I just clicked the top one. But this has been in the news. It was in Wired. Wired is probably the better source to share on screen, Elia. So actually, let's do that. But Wired here reported that, yeah, his former investment bank is taking bets against the tariffs sticking around legally. So that to me is just, it's entertaining, insightful. One would have to think that a father and son talk. I certainly talk to my dad.
One would think that. And that is Wired, which is, it's not an outlet that I question the validity of, and it's behind the paywall. But the headline really says it here.
So the tariffs to me, I mean, I think this is the most important development. We can say Trump is chickening out. I don't want to describe it as that. I think these are bad policies. What he's doing is not reordering global trade, Dylan. He's just trying to make sure that all of his billionaire buddies have higher rates of return on their capital. So why not keep the stock market pumping? I mean, it's today's obviously not a good day for stocks. We're off a little bit, but directionally, why would we take any of these tariff headlines seriously at all?
You would not. I think that's why I think the combination of the lack of, especially when you sort of completely compromise any idea that the tariffs have anything to do with national interest, and that instead the entire thing is a shakedown.
Yeah.
Between the AI supernova and the total lack of any really credible reason for the tariffs outside of shakedown art, I think it's all the more reason to stay long stocks.
Well, and this is where it gets interesting because the wonderful thing about U.S. political and economic history, to borrow from something that Winston Churchill may or may not have said, it's certainly attributed to him, that the U.S. will do the right thing every time, having first exhausted every possible alternative. And you do get into a situation oftentimes where the legal part, the litigation component, is slower to get the right thing to happen, but sure as anything you might think, it does eventually catch up. And so this is where sort of the actions of the business community and their lobbyists, like the American Enterprise Institute, the U.S. Chamber of Commerce, and so on and so forth, this is where they kind of get their moment in the sun. Because if you because obviously they don't like tariffs, and if you compromise your own national security logic on those tariffs by opening up space for legislation to be challenged and for courts to say, actually, you can't interpret it that way. You can't do it that way. Look, you're showing us that you don't mean it that way because you're creating these carve-outs. Then maybe just by dint of legal procedure, as it often happens in American history, you end up with the constitutional outcome not because it's the right thing, but because eventually lawyerdom gets you there.
Well, the lawyers were going to take a look at Article 1, Section 9, Clause 5 of the Constitution, probably, when it comes to this NVIDIA AMD news, because we expressly, it's forbidden in the Constitution to apply export taxes. There's a carve out for what's known as user fees. Like, let's say I'm a business in America and I'm selling it to China, but I have to use US government aircraft to transport those goods. The government could charge me a user fee. So if I'm NVIDIA and AMD and the Trump administration offers me this deal, I go, absolutely.
Oh, yeah.
Because now the access is there and they could probably get the part struck down about the 15% tax. So, I mean, I think this directionally, they're just looking for headlines, making deals, and nothing fundamentally changes, at least for the market.
Reason to stay long, though, right? I mean, I just feel like all this is a reason to stay long stocks.
Well, that's what I'm getting at. I personally looked at the AMD and NVIDIA headline, and I felt a little crazy thinking it was bullish. But sure enough, until markets all turned lower today, SMH was the top performer. Right?
Yeah.
It's odd set of circumstances.
It certainly is. I guess where I depart is I don't think it's bullish. I just don't think it's bearish. I don't think it really matters. I think eventually it'll show up in the courts, this or that. I suppose it is bullish in the sense that it isn't something that creates new roadblocks. If anything, it creates some semblance of a rules of the road whereby things can get sold, and then those sales help these companies' earnings. And that's a thing. But I'm just not sure that it incrementally means anything for the broader sort of sentiment picture. I have the 8-hour chart of the NASDAQ here, and maybe this is where we can get back to CPI. We're coming off what is essentially a kind of seesaw from the August or July 31st, August 1st highs. So we had a little bit of a seesaw. We've come back. We're basically at the starting line. So nothing has changed essentially for 2 weeks.
But I mean,
we go into this thing soggy. So we can see here that there was a little intraday range, which today we took out. I wouldn't say that we've taken out the architecture of the upswing or anything like this, but we go into this CPI number soggy. Dylan?
No, I mean,
thoughts?
I was just going to say, I'm going to flip it over to sort of advocate your side, your side of the table. But I would just say that the obvious thing here would be, we know tariffs are inflationary. We know the labor market is like. Set aside the supernova and the lack of credibility on American national, industrial, and security policy. We get a hot CPI and PPI. The rate cuts go further and further away, and the market should tank. I mean, in a rational world, this market should be set up to get its teeth kicked in.
Yes.
Between its price levels, the AI mania, all of my supernova talk, along with everybody else, the fact that tariffs are inflationary. I just don't know if it's actually going to happen. I mean, I guess do you have any insight as to how hot this number is going to be, Ilya?
In my mind, I mean, obviously nobody knows what the number is.
June was hot. June was hot.
In my mind, what's critical here is that the markets obviously don't like economic news that either spook on growth or take you away from cutting rates, because the markets are already spooked about growth, which is why they want for the cutting of rates to commence.
And so now they got the labor market even giving them lousy numbers, which is
so they got the labor market giving them lousy numbers. That's clearly something that the markets don't like, and we'll just go straight to a daily chart to keep things simple. Here is that jobs report. Here's the Fed. Here's the markets fading those Meta and Microsoft earnings, so we can get the gap up and the fade. That's the jobs data. This is the market's selective reading of PMI numbers last week. We were saying before that the market's got a service sector PMI number from S&P Global and a service sector PMI number from ISM within 15 minutes of each other. They ignored the one from S&P Global that was strong. They fell on the one that was from ISM that was weak. So the markets want these cuts, and they don't like spooks to growth. They're spooked enough. If you look at the bond market, you can see that inflation expectations haven't really gone very far at all since they collapsed from February into the beginning of April. And so while stocks have rebounded because obviously sentiment has re-anchored, as it were, we don't have that story in bond markets, and especially in inflation expectations. So if the numbers are warmer, and they've tended to surprise a little bit warmer, both CPI and PCE on the last go-around, the PCE more so surprising because that one rarely deviates from forecasts, we have maybe the architecture of a spook. And I don't think you really have to go very far. I think, Chris, to your point, if the monthly numbers, never mind the year-on-year, the year-on-year are expected to be the highest since February, 2.8 headline, 3% core. If the month-on-month came out as expected, 0.2% headline, 0.3% core, at least on core, and that's the important one, the 3-month annualized rate would go in the wrong direction now for a second consecutive month. Those are the types of dynamics the Fed doesn't want to see. And that's if we come in line.
0.3% month over month is a 3.65% annualized rate. So you can't 0.3 several months in a row, and you start to really build up inflation pressures.
That's right.
And we should be going into the time of the year when it's a little bit more seasonally helpful, given the data series and how it's trended over recent years. Basically, you would expect inflation to bottom out in October and then flatline, and then you get a bump in January, February with all the re-anchoring, and then things just kind of chill. Yep. But the fact that you're seeing 0.3% readings is not great. And it's one of those things that would give the Fed enough of a reason to think about a September cut, Dylan. And I think that's the risk. The market seems okay with the economic data so long as the cavalry is coming. But if Gandalf isn't coming over the hill with the Riders of Rohan and Jerome Powell on September 17th, maybe the cost of all this stuff, money's going to be more expensive for them to the future.
Isn't that exactly what tomorrow's data is about? Is the fact that September 7th could be kicked out based on the heat of these numbers?
I mean, this one, and then Ilya, we have one more before the next Fed meeting. So
that's right.
This isn't the big spook. The big one, if we had a really hot September print, that would, I think, cause a lot more problems.
That's a problem.
Mm-hmm. Yeah, that would be the bigger problem.
And I've put an oscillator on here just to kind of give a sense for dynamics. That this is RSI. It's a simpler version than what Chris would normally have on his chart, but I like my technical analysis back of the napkin crayon style. And so when you look at this, the thing that jumps out at me is that you're setting very smoothly higher highs here, and you're very clearly diverging where you're not setting those higher highs here. And that's the kind of thing that tells you momentum might be fading. Now, maybe that was already setting up for this, and we're done now, and we've reset. It could be. But this is the thing that gets you to start to worry, in my mind, is you can't come over this high. You're still holding it. You haven't been able to do it in 2 weeks, and going into it, the strength of the move seems to be getting questioned by just how much momentum is behind it. Is this a confirmed top? Of course it's not. No. But it's the kind of thing you start to see when tops begin to take root.
It's compelling, but the AI supernova cares not about an RSI indicator, Dylan.
Oh,
Radigan.
certainly not.
That is
certainly not. In fact, before you get us confused, we can table immediately any conversation that stocks will do XYZ thing because an indicator. Blah blah.
Well, I mean,
That's just not how this works.
I would say I can tell you exactly what stocks are going to do, no matter what anything is, which is they're going to go higher as a result of the ongoing supernova.
Well, so the question then is, do they go higher tomorrow? So should one just stop all this nonsense, use some futures contracts to get long into the number overnight, and then
I would say hope for a hot number, hope for a bad day tomorrow.
I see.
That would be my like if I'm just going to go fantastical, like your best case scenario is a hot inflation number jacks the market down even a percent and a half, a real beak beating, and then you get right in there and you're back on, you're in the supernova at a discount. I mean, that's sort of what I'm hoping for.
Is one day all that the sell side can manage here?
Absolutely. It may be half a day.
Chris?
The market is, in my view, treating everything as innocent until proven guilty. Like until we have all these concerns about the big bad wolf coming. The three of us have certainly shared our own perspective on them since April.
Sure.
But until it comes, why bother? I mean, and specifically, if you're an investor, you have a very different perspective than a trader.
Yes.
So as an investor, right? Yeah, maybe the PEs are too high in the Mag 7, so you'd like to diversify, but also given the action in the market the past few days, you're seeing the Mag 7 outperform everything else. So I'm sure there's enough people sitting around saying, why am I overthinking this right now? Let's just dump all the bad stocks and buy more of the big ones. I mean, it's tough up here. I always find that the hardest part for me is always sticking around when I think a trend is going to end, when I know that I shouldn't have some preordained date in mind, and like leaning too hard on seasonality for the month of August hasn't been helpful.
I mean, thinking in general is a catastrophe.
It's been a nightmare.
And the less thinking that happens, the better off everybody is.
And there's like that 2-second window when you wake up in the morning before you think, and then you start remembering like, oh my God, I'm still me.
And then you start thinking and the whole thing falls apart.
And the whole day is just ruined.
By a bunch of thinking. Every terrible thing that ever happened, I mean, this is a long-standing fact and well-known phrase. Every bad thing that's ever happened always begins with the phrase, I thought.
And I would argue that those same people also drink a lot of water. So people who do bad things drink water. We're exploring all the causations and correlations around here today.
Is that because I'm drinking water on air?
We're going to figure this thing out, everybody.
Is that personal?
Here I am.
Yeah.
I had quite the adventurous day today. We drove back from West Hampton at like 6:00 in the morning to beat all the traffic, get the whole day out there yesterday.
Okay.
I'm not feeling too hot. My wife's saying
what time did you wake up? 5:30? 5
o'clock. 5 o'clock. Got a little exercise in, got on the road. But you know what? Something here in the sign wasn't working. And they confirm, x-rays confirm sprain rib. So it's been a delightful day.
How do you sprain a rib?
You know, I did pinch a nerve in my neck reading a book earlier this year.
Okay.
So I'm just going to chalk it up to
reading.
Maybe you guys should just take me to like a farm. Dylan, next time you go up to Lake Placid, please take me upstate and shoot me behind a barn.
You got a reading injury?
We're not going into that.
If ever there was the appropriate way to sustain one. I sustained a back injury last week putting on a sock. So I think yours is better.
Come on. We can do better.
I'm going to do better. Apparently, dehydration, blah, blah, blah. I'm going to go get an IV tomorrow. I have a place nearby. It's like $150 a pop.
All right. All
Just
right.
a little
Well,
top me off.
Can I get you into some Tesla and some Apple?
Actually, I want to talk about Intel, if that's okay, Ilya, because we had the report this morning. Let's talk about the next trade, Dylan.
Need to do.
Well, Intel was up 3.66% today, and it was higher than that earlier, right? It actually just fell short of 22.
We can see the wick right here.
Right? So it was up over 6%.
Mm-hmm.
What was the news that broke that catalyzed this? Intel CEO, who Trump's been taking shots at, is going to be going to the White House this week.
I saw that. There's a meeting.
So I think the question ahead of us is, who are going to be the next company's CEOs to go to the Oval? Because those are the stocks we should be buying right now.
So we want the White House guest list. We want the White House calendar.
Yes, and this is actually a great question for the chat.
Or for
who is Trump going to have their next, or for Latinx kids, yeah. But for the chat right now, who's going to be the next CEO to come to the White House to kiss the ring? Is it going to be another tech company? Is it going to be a big Boeing, maybe? Right? But what will that company be? Because all the Apple, NVIDIA, AMD, Intel, if not for buy the rumor, sell the news, right? This is a company that's probably going to go to the White House. We buy it beforehand. We know the day of the meeting, just in case, get rid of half the position. If it keeps going up, wonderful. If not, as traders, aren't we supposed to recognize these patterns? As ludicrous as they may be. I mean, this is straight Gilded Age stuff, and that's fine, right? Whatever. Not my cup of tea. But if that's the game that's being played, Dylan, we need to start thinking about what companies are going to go to the Oval next.
So, I mean, wasn't Tim Cook just in there giving him a golden plated
well, that one's there
or something?
We've seen that one now.
So that's not it. So it's not going to be Apple. Intel's coming in. I mean, how about a bank CEO?
Why would a bank CEO need to go in? Just asking that question. What are banks running into right now that Trump can solve?
Leverage.
I think. Well, aren't they already doing that? Like the Trump administration, it wants to avoid Basel III and all these exogenous burdensome.
We're about to nominate a Fed governor and maybe a Fed chair. There was some scuttlebutt over the weekend suggesting, strap in now, everybody, that Jim Bullard is in the conversation.
He would actually be very, very good.
What about Nike?
The Nike. Jim Bullard.
Like a Nike waiver for China might be really good for Nike. If the Nike CEO could get in there and get a China waiver.
What about ExxonMobil and Chevron? They've complained loudly that
some drilling rights.
Well, not just drilling rights. You keep talking drill, baby, drill. But if you're going to increase the cost of aluminum and steel and copper and this and that, the other thing, it's now more expensive for these companies
to stand up a rig.
To stand up a rig, to build the pipelines, which means their break-even cost per barrel of oil has to be higher than it currently is. Which then, if you're having them drill more, you're bringing down price, which maybe pushes them below the break-even rates, which are already pretty close by. The Dallas Fed Energy Survey suggests that, depending upon where you're looking at the Bakken or the Permian, you're 51 to 56 right now. So a big expansion of U.S. oil production at this moment in time, given the economics and global growth backdrop, probably doesn't help. Probably doesn't help their earnings. So maybe not them, right? But they certainly could use the help. I mean, Lockheed Martin, General Dynamics, Raytheon, right? I mean, why wouldn't Ford or General Motors? If you're a company with a market cap of more than $50 billion, why not?
I mean, where I think it's probably too late to play is crypto, because it seems like we already got the news. One of the other interesting bits here over the weekend, besides the 20% VIG, was the news that we are getting a directive from the White House to set the stage for the inclusion of alternative assets, including crypto, into 401k allocations. Now, this is not a done deal. It sounds like they've been instructed to study these things. But of course, once the study comes back in the affirmative, as I suspect it would, then we start to open up retirement accounts to all manner of interesting things. We seem to have gotten something like a bounce out of it on Bitcoin here, a little bit of a gap at the weekly open. It doesn't stick seemingly because of the stronger US dollar, but the positivity is there. Is there anything else here?
I mean, isn't the rational actor short going into the CPI tomorrow? Aren't the pot odds of a hot CPI and a sell-off, despite all my supernova jibber jabber, which
100%.
I believe in.
I mean, that's how I'm thinking about it.
But it's like, but considering where the price levels are, considering the sogginess that my friend Mr. Spivak recently referenced, considering the odds are it's probably a hotter CPI than not, and considering that the whole thing's sort of keyed up on the September cut, I just feel like that, there's a 60-40 chance of making up the number, but I feel like there's a 60-40 chance that you're going to get a decline coming off this CPI out of the gate.
Ilya, doesn't the change in how companies have been treated in response to their earnings inform us that the pot odds are to be short if you're going to be directional?
I think so. And in my mind, it's as simple as just basically saying, all right, look, let's just take a very, very, very simple way of looking at this. Here's the range. There's the range top. And let's sort of guesstimate a range bottom. And you know what? Let's not even do a sloped line. Let's make it really simple. There. This is it. Now, even if you're inside this range, let's say the price just stays in here, doesn't go anywhere. You're a lot closer to here than you are to here. So if you're short here, well, it might go against you, but then you're wrong fast. You go up here and that's it. You're wrong. Bad. Get out.
But I mean,
there's a lot less room here than there is here, even if nothing happens to take you out of.
Let's fire up the trade screen. Let's get down and dirty. What are we doing?
I mean, in my mind,
is it ES? Is it NQ?
In my mind, it's a straightforward sort of thing. So I'm doing this through the ETFs because they're smaller, and that makes the trade cheaper. But if you look at the IVs, they're very comparable. So ES, you have IV of 14. SPY, you're not that far off. Mm-hmm. Basically, the same story. Mm-hmm. So what do you do here? Well, I mean, if you look at the screen here and you take the guidance that you want lots and lots of duration to not get something wrong here that goes weird on you, okay, let's even look to the other side of the Fed meeting, all the way out here. You could set up a very straightforward long put vertical at the money.
Wow.
At the money.
Wow.
And there's tons of liquidity here. And if you look at the risk reward, you're looking at a max loss to max gain here that's offering you tremendous risk reward.
Mm-hmm. Mm-hmm.
Just the spreads alone. Mm-hmm. So because vol is that cheap.
Mm-hmm.
And you don't have to be a genius here to go, you know what? I can risk a little, and if I'm wrong, I'm wrong.
Mm-hmm. Mm-hmm.
But if I'm right, I am right by a lot more.
Mm-hmm. Mm-hmm.
Just that simple. And your risk defined here.
I mean, Ilya, I'm thinking about even shorter term. Tomorrow, if we were looking at the 1 DTE, you could buy the 63.75 put and sell the 63.40 because the expected move into tomorrow is just short of 40 points. And if this market goes down you're going to do quite fine. You need 25 points from here. Could we see 0.5% off on a warmer CPI number? But that begs the question, Dylan, why would there be a warmer CPI number? Aren't the books being cooked?
Ah, yes.
Once you start cooking the books, then I can't have that. Listen, then I can no longer partake in the conversation. Once I've got cooked books, how can I even have a discussion at that point?
I mean, the top headline on CNBC right now is Wall Street traders are worried about the credibility of U.S. government data.
Well, of course they'd say that, and rightfully so. We've had
that's just parroting the presidential hoo-ha.
I mean, as we've talked about, right? The BLS has told us that historically, something on the realm of 10 to 15% of a given month's data is what is called imputed. That is to say, they can't get direct observations on inputs into CPI. So they can't say, we don't know the price of cargo pants in Milwaukee, but we do know the price of chinos. We'll sub in the price of chinos because we can't get a price on cargo pants.
Are chinos even in style anymore?
Oh, absolutely.
Okay.
Sure. Now workwear, now and forever. But in any case, when we just look at all the rappers wearing Carhartt, that's all I'm saying. But anyway, when you look at the numbers now, so COVID, you got up to maybe 20%, something like this, 18, because obviously everything's closed. Everybody's off. Tough to go into stores and observe the prices of things and record that. BLS has been at 30% for the past 2 months, which is off the charts. Why? Well, a certain mercurial billionaire and his chainsaw might have something to do with all of that, but they don't have the staffing. They can't do the observations. So the numbers are going to be what they are. And maybe they're not going to be academically as rigorous as you might expect. But does that matter? We said last week on this very show that what the markets want is a common yardstick, and they will have that. So do the markets really care, Chris?
But if it's a common yardstick that half the market participants think is unreliable, I mean, I go back and forth on this. I do think that having a central point that we all pay attention to, like a Nielsen ratings, right? Whether or not those are accurate, we have enough industry built around that as an understanding of viewing habits. So yes, I am with the whole, as long as we're all looking at the same number, fine. But if I'm a hedge fund right now, if I'm a bank, why would I not have an alternative data set to look at as well?
You probably would.
Right? I would think that what's going to happen here is that if the data are ever fuddled with, it's going to be through seasonal adjustments where there's a little bit more discretion. In terms of the actual data collection, it is what it is. And so I think as a backstop, market participants who at least pay attention to macro data will probably look to the unseasonal numbers, the non-seasonally adjusted numbers, and figure out a way to make that adjustment themselves, given how adjustments have been made in the past, if they find them to be deviating under this new BLS regime. And in that case, I have a hard time saying, let's say, Dylan, if the Trump administration puts its thumbs on the CPI data, the bond market's not going to believe that crap for a hot minute. It will see through it because there will be enough market participants saying, how is inflation 2%? Like, I know my own grocery bill. Prices up were another 5% last month. This chair I wanted to buy, another $500 because of the tariffs. And so people will behave differently even if the data says one thing. And we've seen that in other countries, have we not? Turkey keeps trying to tell us something about their economic data, and the market keeps crushing the Turkish lira. So,
in fairness,
let's not be bringing the Turkish lira into this.
I have to. Contractually obligated.
I prefer not to. That's one of my favorite nations. Just please leave them out of it. Sorry, Ilya's trying to say something.
I mean, in fairness, Turkey has been a great example of exactly the kind of thing that we're talking about here. So let's give Chris his due.
All right. Well,
We do have a president over there that for the longest has been saying that higher interest rates cause inflation. That's,
which is
that's
not
something.
to say they don't have a fine kebab, but we won't get into that.
The finest. One of the finest.
I think it is.
One of the finest. And many other delicious things
And a
too.
pistachio
I might
and
add.
honey dessert, if I might say.
And
what, like a baklava?
There's a variety.
There's a variety.
Baklava.
I like a good baklava.
Who doesn't?
Who doesn't?
With a nice side of Turkish coffee. Fantastic.
And by the
Fantastic.
way, cheaper than ever due to your lira situation, which is just working to your benefit.
Dylan, you think that when I eat baklava, I import it from Turkey or I make it myself?
Listen, maybe you should spend some more time in Turkey with your friend over here. You might have a different point of view on the value of the cheap lira.
A lovely rose-flavored Turkish delight and a baklava and a coffee. Sign me up.
Well, Dylan, you've now been dispatched to receive those things for us. So next time we see you in person, we expect Turkish delights.
It'd be my pleasure.
Excellent.
I got a big sneaker deal cooking in Istanbul. I'll gonna be there regularly, so don't you worry about it.
Excellent.
Mm-hmm. I like the way that sounds. But
to among us doesn't have a big sneaker deal cooking in Istanbul, right?
But why not?
Who among us?
Seems like a perfectly reasonable thing for
an
Dylan
obvious
to do.
thing. Everybody's got one.
Yeah, you got it.
Come on.
Seems like a perfectly reasonable thing to do. We digress. When we look at the veracity of this data, it's interesting who gets punished, because the Turkey example is an appropriate one, as is the example of China, which is so transparent about the fact that they shade the numbers that they don't even bother to quell that conversation in the popular media. They might dislike references to Xi Jinping as Winnie the Pooh, but on the data, they don't even fight the accusation. Markets don't punish China for that kind of thing. So is this just a matter of scale, where Turkey's economy just doesn't have the weight? Sort of like Greece can't afford to run a bad sovereign ship, but the U.S. can.
I think that's exactly. I think that is precisely and 100% accurate. I believe that large nation states of great influence and power can do pretty much, basically can do anything they want, which I believe is not something that President Trump, has internalized and is utilizing to his great personal benefit.
So you become a great power theorist.
You don't have to trade Turkish assets, but you can't not be in the gravitational pull of China or the U.S. for that matter.
Mm-hmm.
Are you now becoming? Do you think the world is shifting back towards great powers, where we basically, I don't want to say like a 1984 George Orwell kind of thing, where you have like Oceania and East Asia and blah blah blah. Well, there's only one more, but do you think we're heading into that world where like the U.S. has its Western Hemisphere and Russia is going to portend with Europe and Africa, and China gets to play in East Asia?
I do think that the logic in the U.S. is becoming Monroe Doctrine-ish, where we're basically saying this is
screwing Canada and Mexico.
Yeah,
and so we're gonna beat up our neighbors in our hemisphere. You guys can beat up your neighbors in your hemisphere.
Yeah, this is ours. You can come and do business, but God help you if you try to actually lay down some roots here, which with China makes for an interesting thing, because of course they've attempted to lay down roots in South America. We've seen this situation with the Panama Canal show in spades that we now are sort of in this Monroe Doctrine headspace where we're saying you can do whatever you want over there, but this is our thing. Don't come into our thing.
Well, Taiwan, it was nice knowing you then.
I mean, I actually think there's only two powers, which is I don't think Russia is a power. It's a
I agree.
They're not.
They're
So
not.
nuclear. If it didn't
They think they are, but
if they didn't have nuclear weapons, you wouldn't even talk about them.
Right.
Europe could be a power, but it's not, because it's not a if there was a federation of European states that was organized, it would be formidable, but it's not, so it's irrelevant. You just have China and America, and everything else is a scam or a pretense.
That is one way to end overtime today. Every other country is a scam.
Yeah. And with that, that happy note, overtime is out of time. We did, after all, get the whole gang together. That was good. Thank you, Thomas, for pinch hitting. For myself in San Francisco, Dylan Radigan in Milan, Mr. Vecchio there in New York. Don't go anywhere. We continue to talk macro here. I'll be right back with a deep dive on CPI, and this lot will be back tomorrow in just
And be
24
careful
hours
reading.
time.
Don't no more reading injuries. Be
No
careful
thinking.
out there.
No thinking
Yeah,
either.
thinking, reading, bad. Supernova, good.
Good. Yeah.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's a macro risk right now that people aren't talking about enough?
Complacency is one. There's a lot of bullishness around. The street is very complacent. There's very little cash on the sidelines. And I think there's just, in general, the regulatory environment is too good, so people become overconfident.
I still think the geopolitical thing is very, very interesting. Frankly, I've had a tough time kind of parsing out the headlines in the news lately. I guess I would say like this ongoing discussion of just different conflicts that are going on and how it's pushing and pulling different asset classes. That's a super diplomatic answer. I'm not unaware of that. I think it's really important to kind of be mindful of your positions when there is so much talk and uncertainty going on and making sure that you're always controlling your size.
I mean, the dollar's depreciated over 10% against the euro and some other major currencies. I don't see how that doesn't start to play into some companies' earnings and their fiscal reports.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We get a slow start to the week, but key event risk looms ahead. Is it going to be a problem for stock markets? That's what we're going to dissect here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And not surprisingly, sure enough for those of you watching here, we are going to take a spotlight and shine it directly on U.S. CPI data, which is precisely the first bit of macro event risk here in front of us, and arguably the biggest for this week. Now, we're going to get some other notable points here as we go, but it is this report that is likely to set the stage for financial markets, and we're going to dissect what it may do and why. But first, let's take a look at how the markets performed last week, see if we can get a sense for the path of least resistance there. And of course, what we immediately see is a little bit of a rebound for stocks, 2.4% for the S&P, a more potent 3.6% for the NASDAQ. Yields nudge up a little bit. Of course, the previous week we see red all across the board, and that's in the wake of those very disappointing U.S. jobs figures. Last week, we got a little bit of a wobble on the S&P around disappointing U.S. ISM data. Interestingly enough, of course, that data coming to us alongside a parallel S&P global set, basically tracking the exact same type of data, also service sector PMIs, and the market pointedly ignored those. But we can see that those sorts of things didn't really have staying power. And so we end up with a little bit of a rebound in yields, a little bit of a rebound in stocks, as we basically shrug off those figures and get back to what is essentially the starting line for the month on stock markets. In fact, we'll jump a little bit ahead here just to get a sense for what's going on and have a look at the S&P 500 here. This is the baseline September contract here, the ES contract for the S&P 500, and we can see here's where we started this month, and here's where we are now. We're essentially in the very same range where we started to idle here, just ahead of that high at 64.58.50 on the September contract. And we can see here as we get ready to make this turn lower into this support at about 62.41, this band that's been holding us up since the beginning of July, what is it that we find? Here's the last Fed meeting that ultimately doesn't do anything. Here's the fade on those Meta and Microsoft earnings. We got the gap higher. That's where we got the record high. But we don't manage to make hay of it. In fact, we end the day lower once those numbers are subsumed. We also get this divergence with RSI, or you can pick your oscillator, but when you get higher highs on the price that don't get matched with higher highs on the oscillator, that just from an arithmetic perspective tells you momentum is fading. No rocket science there. RSI is just the ratio of closes up to closes down. And so if you're setting higher highs, but you're losing capacity to close up relative to down, this is third grade math now, momentum is ebbing. And maybe that's because we've settled into a sideways sort of a situation rather than a nakedly upward sloping one. That much is unclear, but we can see there's the jobs report. That's what gives us this hit back into the range. And then this little red bar there, that's those numbers on the service sector last week. Since then, we can see we've clawed back up and we're back into this decision point. Now, looking at some of these other assets last week, crude oil swinging lower, but not really going anywhere from the midpoint of its multi-month range. Gold a little bit higher, but again, at the top of its multi-month range, and in today's session recoiling in the opposite direction. A little bit more life in currencies not named the US dollar after last week's very impressive dollar rally, despite the headwinds from that jobs data. We get a 1.1% rise in the euro. The yen is flat. Bitcoin, though, does manage a 3% gain. Now to the data, because the question from here, of course, seems to hinge on it. And the expectation is that headline inflation, the headline consumer price index, will rise to 2.8% year on year. That would be the highest since February. Likewise, for the core number, that's expected to rebound back to 3%. Again, the highest since February, so a 5-month high on both fronts. And of course, what matters most to markets from this perspective is what this will mean for Fed policy expectations, which we can see here give us 50 basis points in rate cuts for this year, 67 for next year. Now, that's at least 3 cuts and about a 68% chance, or at least 2 cuts and at least a 68% chance of a third for next year, and almost exactly 2 cuts, that extra 1 basis point we can chalk up to a rounding error for this year. So, how does that compare with the Fed's own outlook? Well, it's exactly in line with what we have on the menu for the Fed for this year. The median rate now, 4.4%. That's the midpoint between the 4.5 and 4.25 that are the bounds of the Fed's target range. And we're looking for a move from 4.4 to 3.9. That's 50 basis points. So the Fed is in line with what the markets have on the menu here, and that much seems to be relatively well anchored. In fact, if we look here, we can see basically since the beginning of the year, this is where we've been. The floor has been 50 basis points. We've flirted with as little as 25 basis points very briefly recently, but we're generally anchored right here. And when the Fed set this forecast back at the start of the year, which was right around here, we can see that we veered a little bit here and there, but we've generally remained in this area. The real movement and the real disparity, which seems to tell you where the market's head is and what it wants to see, is in the outlook for 2026. Because we can see that here we've increasingly opened up a wedge. And while the Fed only has 25 basis points from 3.9 to 3.6 for next year, that's a single cut only, the markets have this, as we just said, at least 2 with a high probability of 3. So clearly the markets want to see more rate cuts and think that 50 basis points now, only 50 basis points, amounts to dithering. And that the markets are going to want more, that the economy is going to need more, and that the Fed is ultimately going to give them more when it comes to next year. Now, if we look at where this type of thing starts to clash with the Fed's thinking, it isn't difficult to find. So here's the June breakdown, and we can see this looks refreshingly normal. The headline going up, the core going up, and most of it still in the service sector, where that's a tad bit warmer. But most inflation is still in the spot where the Fed would want to see it. Of course, the Fed has been reluctant to cut rates because it is worried that what these new tariffs will do, that the Trump administration has been rolling out since the beginning of the year, is create an inflationary shock, whereby you get essentially a consumption tax applied to imports. Now those imports have a higher sticker price. Consumers don't buy them. That slows down overall consumption, which then slows down the economy, and you get the unfavorable mix of weak growth with higher prices. And indeed, if you look at what is actually in these Fed forecasts from June, you get that sense. We see growth projections here revised lower, whereas inflation expectations are revised higher. So this is why the Fed ostensibly isn't cutting rates. At least that's the logic that Chair Powell and company have unfurled for us in recent months. And so it is here that June's numbers start to look a bit worrying. Take away this food and energy because, first of all, these contributions don't really meaningfully change for food, and for energy they change, but mostly just because a negative number becomes a smaller negative number. And in any case, the Fed doesn't really have much agency over these things. They're set in global markets. The Fed is more so focused on core. But this starts to paint a picture. And it seems small because, of course, most inflation is still buried on the services side. But when you look at the month-on-month changes in the contribution, this is where you start to get perhaps a bit of a concern. Almost all of the increase in core CPI looks like it comes from the goods side, whereas the services side is very soggy. So this 0.1 of a percentage point contribution to overall core CPI, this increase, it comes from the part of the structure here where tariff-based inflation would be. And perhaps it is early days yet. We'll see, of course. Last month we saw that PPI numbers were painting us a picture where we had a situation that was hardly supportive because there was evidence there that the tariff-based inflation is in fact here, but what we don't see is full pass-through because wholesalers at the front end of the curve are essentially eating that inflation, absorbing it into margins, and insulating markets downwind from that impact. So insulating consumers, insulating final stage wholesalers. But it is starting to appear, and the cracks are seemingly starting to show. So what this starts to suggest is that indeed the Fed's concerns have some credence here. And maybe if we get a hot number this go around, those concerns start to push away a September rate cut once again. Consider here the Fed's preferred way of looking at the dynamics in the story. This is 3-month and 6-month annualized CPI, both core and headline, which starts to show you what the problem is. So on the bottom here are the monthly changes in both headline and core, and we can see that with these changes running at about 0.25%, we're starting to see that these higher frequency indications are trending in the wrong direction. So you can see from May to June, the 3-month annualized goes up. Ditto for core. You can see that the 6-month rates have seemingly stopped falling, or almost, after this deceleration that we've seen since the beginning of the year. So it seems like if we were to get even slightly warmer numbers, in the case of core, we're looking for a 0.3% change this time, 0.2% for headline. Even if we were to get numbers roughly in line with forecasts, still, these dynamics would be going the wrong way for a second consecutive month. And that's not the kind of thing that the Fed is likely to take with a grain of salt. That's the kind of thing that may start to tell the markets, well, the Fed is seeing exactly the kind of inflation it doesn't want to see. It isn't going to jump the gun. Now, as it stands, the likelihood of a rate cut in the September meeting is still commanding, 86.4% against expectations of no change at 13.6%. And we're almost fully discounted for a second cut either in October or December. Markets aren't quite sure which one it is. It's about a 50-50 shot on either. But they do expect that at one of those meetings, there will be another cut. Interestingly, in the wake of that data on U.S. jobs, this sell-off right here, the case for a September cut fell off the board and really has only rebuilt once we've recovered from these losses. But it was very clear that what the markets didn't want to see was that rate cut go away. And so when we start to look at this in context, we say, okay, well, if the jobs data put the rate cut back, but ahead of it, it wasn't there, or at least the markets got to a less than even chance that it would arrive. That's after this hawkish Fed announcement. What might happen here were the numbers a little bit warmer versus a little bit cooler than expected? Well, we can see that on the cooler side of things, stocks do not want a growth scare. Perhaps not even the increase in rate cut odds then is necessarily supportive if the numbers are bad enough. But that seems like an edge case. The likelier scenario is we get something closer to forecasts or something on the warm side, at least if the recent surprises on inflation data elsewhere hold. Certainly the ISM numbers that we saw last week still pointed to very potent inflationary forces, in particular in the service sector, which is, of course, the largest component of the economy. The price growth component there gave us the highest inflation reading that we'd seen in quite a long time. As a matter of fact, the highest since October 2022. Now, we did get a little bit of a slowdown in service sector price growth, but we're still very, very elevated there relative to history. And so there does seem to be quite a bit of inflation that's still in the hopper. And if the markets get the sense that that there's enough of it here for the Fed to be concerned, well, then they probably won't love it. And so this is where things may well get interesting. It could be that while we're back at these highs, the top of this range ends up holding. It's the flip side for the US dollar, which has been attempting to carve out something of a bottom since the beginning of July. It's had some pullbacks along the way, of course, but what we find is a series of higher highs and higher lows on the dollar index. This is a basket of major currencies against the US dollar, and because this basket was created before there was a euro, many of its legacy currencies are now the euro, and so in practical terms, this is basically just the euro exchange rate upside down. Nevertheless, it is showing signs that after this extended dollar decline since the very beginning of the year and into the mid-year point, that perhaps something is changing. And if in fact we get a CPI number that's a little bit warmer and these rate cut odds move even incrementally downward for September. So let's say we get from 86 maybe closer to 60. Still better than even odds of a cut, but just less convincingly so. Then one might expect a pullback on stocks. One might also expect an extension higher on the dollar, both as its yield advantage is reinforced against the other major currencies, but perhaps even more potently on risk aversion grounds. One of the biggest stories for the dollar and really the essence of this decline since the beginning of the year has been this idea that if you have the world's commercial currency facing a potent deglobalization push, well, then there's less trade and therefore less use for the currency. But if that part of the story is getting increasingly shelved as you get some clarity on these tariffs, a handful of trade deals, maybe a kicking of the can on the conversation between the US and China when that deadline comes up, incidentally tomorrow, then perhaps those headwinds for the dollar have been spent. And we are now going to get back to a dollar that, because of its unrivaled liquidity, benefits at times of risk aversion, yields or no yields. And so perhaps we are looking at a turn in stocks. That's a difficult thing to bet on, if only because stocks don't like going down. But however this pans out, what you may have, absent a very robust risk-on response, perhaps, because rate cuts are coming, but they are not an emergency and they're not necessary to avert some sort of real disaster. Short of that, what you do have is perhaps a tradable bottom in the US dollar that's increasingly making itself known. And that is Macro Money for today. As ever, we are here right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Would you rather be guaranteed to beat the market by 10% this coming year, or be guaranteed to match it for each of the next 5?
Both of them are icky. Like, I guess I would take the extra 10%. I mean, the choice is one or the other. I get 1 year of 10% more.
Yes, 10% above the market that year.
I mean, I guess you get the market can go down. So if you get five years and you're stuck with whatever the market is, I don't want that. I'll take the 1 year of a 10% little boost, and then the rest of it I got to figure out myself.
I would want to match the market for the next 5 years, because I think this is the floor of the moonshot we're on right now. No, really, honestly, when volatility is low, it tends to cluster for long periods of time at low levels, and that typically means a slow grind higher. So I think we could see some crazy stuff with some of these tech stocks leading the way.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't chat GPT." And so I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the 4 little things as a
4 things.
One big...
The 4 little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the open night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Be nice?
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early, because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof. You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over the days. You've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate you holding on the line to say that to us. So thank you.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Dan Cecilia. Dan, I hear you're feeling good, my friend.
I am feeling good. I'm feeling really good. Second time on the network today, as our viewers have pointed out. Emmett in the chat. Shout out Emmett. 2 times. You'll be seeing a lot more of me, apparently. I just renewed my contract, so they're going to put me on, and we're going to be doing 3 hours of crypto content each day. So
very nice.
Newsflash. Markets, well, ETH's up.
Yeah.
Markets are up.
Good weekend.
Great weekend.
Trade desk is buzzing.
Yeah.
Markets are popping here. The bags are pumping. You were on Liz and Jenny earlier today. I'll have to go back and review the footage. I heard you did a nice job.
I hope so. I was told I sounded nervous in the chat, but then I was like, that's probably just how I sound. So maybe
generally nervous.
Yeah, generally nervous. I was trying to cover I figured I'd cover the crypto treasury companies on that show because I figured that was like, they're options traders or whatever. And, there's more options there. It's easier to understand. And then they wanted me to talk about like perps markets and
go everywhere
staking. And I was like, all right, well, I guess I'll have to be more prepared for crypto specific things for the next time I come on.
Dan goes everywhere, and if you want to find him, well, where can they find you on X? What's your handle over there?
My handle on X is @truthdanc. I just dropped it in the chat there, and I'll link it.
Yeah, give him a follow, ladies and gentlemen.
If you guys want to talk to me, that would be where I would answer.
Direct line. That's better than having your phone number.
Way better.
Yeah.
Way better. There's I'm on there about 4 hours a day. That's kind of my job. Is I just sit on Twitter. Don't tell anyone that though.
Secret safe with me, my friend.
All right. So where are we going here? What are we looking at?
Dan, I think we got to talk Ethereum. We got to talk markets here. But before we do, of course, we got to shout out everybody in the chat. If you're not in the chat, well, I don't know what you're doing. You can stream this live on tastylive.com. You can stream this live on YouTube as well. And that's where you can go over there and pop out that chat, type some crazy shit into the chat if you want to, or a question, or once in a while, if you have a compliment even, a comment, some criticism, we'll take it all. But join us here in the chat on YouTube if you'd like. Let's talk markets though, Dan. We've got a pretty bullish setup here. We've had a pretty bullish setup. I think you go back a week or two, the beginning of the month at least, you had the non-farm payrolls, you had some risk-off headlines related to tariffs, a little bit of fear, uncertainty, and doubt, I suppose, in the market. And people start kind of talking about the idea that you might have some sort of recession on the horizon, things are slowing down. And we're really seeing the exact opposite of that here today. Now, we have pulled back off of the highs, but Bitcoin kind of flirting with, I suppose, is the technical term, with an all-time high. ETH as well. ETH trading a lot stronger, in my opinion, than Bitcoin. 43 and change earlier here today. Where do you want to start, though? You want to look at kind of maybe what's driving ETH, and then we'll go around the horn and look at the rest of the market?
Yeah, I think we're finally seeing ETH wake up. A lot of momentum there. a lot of rotation. So I think we should dig into that and kind of just take a look and see what's going on.
Excellent. Well, first things first then, let's jump over to our slides. We're going to do a little bit of a deep dive on Ethereum. I guess just to start with, the one thing I do want to point out is just the bullish price momentum we've got here. A bit of an increase in implied volatility as well, a little bit for Bitcoin, more so for ETH. 4240 at the time that we put this together. ETH's up 70% in the last 3 months and 21% of the week, which is outperforming the majority of what we look at. Chainlink's up 31% on the week. And yeah, it's been about it for some of the larger movers. I mean, you got Comp there at 15%. You got Polygon at 18%. But across the board, a nice bounce here to start the week versus what we saw last week, where you had a little bit of some profit taking, a little bit of a pullback. But let's talk about ETH, because it wasn't that long ago, and even just a couple of weeks ago, you could have bought this thing at like, I want to say 33. Is that right? 35. I mean, we dumped for a second. Let me
bring up
back to my slides here.
Yeah, bring up the chart too. I mean, it was just in
30. I got a 34 and change here. As you can see on the screen, that's just a week ago or so. And now you're at 43, so you're up almost $1,000 from where you were. The narrative in this for a little while was that ETH was dead. It's just crazy to look back and see what people were tweeting, talking about, and the narrative in crypto, like in most markets, it shifts quite frequently and quite violently, I suppose, in the opposite direction at times, just based on what price is doing. But here we are, the sleeping giant awakens. I wrote a piece a while ago about ETH as if it were a sleeping giant at that point in time where this had been somewhat left for dead, and we're on the other end of that spectrum right now. Let's talk through some of this. What are you seeing in the market that is behind this monster move back up near all-time highs?
Yeah, I mean, it's a good question. I think the main thing that I'm seeing is the emergence of these crypto treasury companies. We obviously have very bullish ETH ETF flows. I think we talked about this on a couple other couple previous shows, where the ETH ETF came out around the same time as IBIT, and nobody was buying it. It took, throughout 2024, everyone was buying the IBIT ETF. The ETH ETF was kind of left for dead. There was no flows, and then eventually 2025 hit, and we've seen kind of record flows over the last month in July. So I think that's a pretty big indication of demand for ETH. Yeah.
Just jump to the slides really quickly here, and let's take a look at that, because you are really now starting to see institutions pick this up and run with it.
Yeah.
Here is an example of exactly what you're talking about. Here's ETH-A. This is assets under management for the BlackRock Ethereum ETF. And there's others that are out there that you can trade. This has options on it as well, as others do. But we'll use this as an example of just what's happened here. I mean, it's gone vertical in the last month.
Yeah. Yeah, so July was really that turning point there. You can see, end of May it started trending up, but July is really where it went vertical. So the demand for ETH is huge there. So also we got Tom Lee's Bitminer company, right? We're seeing stuff in the media. People are waking up to ETH as an asset. And then, we'll have to take a look at on-chain flows, and I think you have some stuff there, but activity's up on the chain. People are using it. You can see their crypto asset treasury companies trading volume ETH and BTC. That blue chart there is ETH. So
okay, so you're now starting to see it really pop up. So this is just to clarify what we're looking at here. These are the treasury companies and
right.
their trading volume. So it's not the companies themselves trading ETH, but you're looking at these crypto treasury companies. You had Bitcoin treasury companies that were spun up first. I think probably MSTR strategy is the first in that space. Now you're seeing this with ETH, and you're seeing this with some other tokens as well. But now these are the trading volumes in those companies that are ETH treasury companies.
Right. So I think that's an indication that there's a bid for ETH, right? At least from people are accessing it through these traditional finance vehicles. Yeah, I mean, I think it was all a bullish setup for the rotation into ETH.
So for anybody that's not familiar with the treasury companies, they're raising capital to hold ETH, but correct me if I'm wrong, Dan, I think a few of them are also looking to participate on chain in ways in which they can generate yield. So you almost think about this company as, I don't want to say it's a fund, but it's an investment vehicle that also participates in crypto in order to generate a return. It's not just holding the underlying asset, but in some cases it might be staking the asset. In other cases, maybe it's participating in DeFi, and I might be stretching a little bit here, but when you have crypto on the balance sheet, you could, in theory, use the crypto to generate returns. Now, there's risk associated with that, but is that correct in assuming that they're doing something with the crypto?
Yeah, I think I haven't dug into. I got to do some more research into the ETFs and just see kind of this question on the Liz and Jenny show. They were like, "Well, why wouldn't you just buy the ETF as opposed
versus
to spot?
A treasury company,
or just?"
So
spot?
I'm talking specifically about the treasury.
Oh, about the treasury company.
I have raised $1 billion to buy ETH. I've bought ETH. Do I just hold it, or do I do something with it? I'm guessing they're doing something with it.
Yeah, I mean, same point. I think there's probably staking it. They're probably doing things in DeFi and collecting, probably collecting that profit. And then I think there's a trade there where they're issuing shares to buy ETH, and it's trading at a premium. So I mean, I don't know. I guess it's a good question. I'm not totally sure what the play is there, but I do think it's giving people more access to the asset ETH.
Well, it's certainly driving the price higher. I want to look at a couple of these ETH treasury companies and just kind of compare this to spot, if you will, and maybe walk through what that MNAV is for anybody that's not familiar with how to maybe look at these or analyze these companies to answer that question. Okay, why not just invest in spot? Why not just invest in the ETF? Why invest in, whether it's ETH or if it's Bitcoin, why invest in strategy even?
Yeah, I think the answer to that is it's just easier to get access to it for traditional financial investors. That's the thing I can think of. And then if you look at these companies, SBET, Bitminer, that MNAV, which is multiple of NAV, is showing you whether or not it's undervalued or overvalued based on the amount of crypto holdings, token holdings it has on its balance sheet. So that's an indication of like, okay, are you buying this and paying a premium for it based on, how much ETH it owns compared to spot? So I just think like that's an important note, because that's what people follow is like, are these way overvalued? Are they getting, are they buying up more than what they hold in their, what assets they hold on the balance sheet? Yeah, I mean, I guess, do you have any idea? Like, I don't know what, I guess I don't really know why you would hold these as opposed to.
Well, I think to your point, I mean, it's frictionless, it's accessible. You can make that argument around the ETH ETFs as well. But I think, you're going to see that multiple of net asset value, a little bit of leverage or that premium there as a function of most likely these companies participating in the space, using the ETH to generate additional yield, right? Also using it to some extent on the balance sheet, a little bit of financial engineering. In order to just acquire more and more ETH. And so, maybe that explains some of it. Probably could trade at a discount at some point too. But right now in a bull market like we're in, maybe not surprised to see that you have a little bit of a premium in some of these things depending on what they're doing. That said, we have a couple questions from the chat that maybe we can hit really quickly as we're talking about Ethereum. I have a question generally around staking, it looks like. I mean, the question being, what is staking? I don't know if you want to take that one. You want me to take it. But, how do you think about staking if you were just to simplify it? Because it's very technical. It's technically complex. But I kind of think of it as just lending money to the Ethereum ecosystem and getting an associated yield in the same way that you might lend money to the U.S. government ecosystem, to use that word, and you are paid a yield for lending money in the underlying currency, which is dollars. In this case, the underlying currency is ETH. Now, there's a function that's performed by the network that is what drives that yield, but that's kind of high level how I think about it. How do you think about staking?
Yeah, I mean, I think that's the easiest way to describe it without getting too deep into the weeds on like the complexity of the network and kind of what you're actually doing. It's like earning yield on savings deposits, right? Like you have ETH, you can stake it, they call it, you can deposit it into the network, and the network pays you a reward interest rate, a reward rate for locking up that ETH. So you're earning more ETH on top of your ETH. It's like compounding interest, right? And really what you're doing, just to get kind of a little bit deeper into it, is you're securing the network. You're helping the network validate transactions, and there's an economic kind of function there, right? Why would you stake it if you weren't being paid anything? That's kind of the idea. But the easiest way to think of it is it's like depositing into a savings account. You're earning interest for participating in the network.
Yeah, you generate a yield, and I guess to just take it one step further, you allocate your Ethereum to validators on the network. Validators validate transactions. That's the securing the network concept that Dan's referring to. And for validating transactions, those validators receive rewards. It's how it works. It's similar but different to Bitcoin miners and mining and adding blocks to the chain. Validating transactions, there's a reward for doing so. That reward is paid in ETH. If you've allocated your ETH to these larger pools that then go on to either allocate it to validators or participate in that process, you're going to share in the rewards that are generated, and that's where the yield comes from. Now, if the price of Ethereum also goes up in dollar terms, then when we measure this yield in dollar terms, the percentage annualized return is going to be higher.
Yeah, exactly. I mean, James, you're earning interest, but you still bear the downside risk. Yeah, I mean,
you have the currency risk. ETH.
Yeah. It's you're earning an ETH. There's a currency risk, right? The dollar could go down, just like I think it's like a mix between this stock yield or whatever stock lending and I guess earning in a savings account. I guess that's the best way to think about it.
Yeah, those are kind of analogs, I suppose, but at the same time, it's entirely different.
Yeah.
But that might be the way to think about it. If Ethereum, the network, is a government, you're lending money to it, to this economy in a sense, and you're being paid in the underlying currency, which is ETH.
Yes. So that's one way of looking at it. DeFi, that's where I think of like lending money, borrowing money.
Yeah.
DeFi is basically the same thing you would do with banking, where you go borrow money, you trade on margin, you can make markets. It's all an open source kind of financial network that is powered by ETH. So you can borrow more ETH to go long on some other token. You can lend your ETH out to earn a yield. You can make markets. We've been doing liquidity pools, which we could show you at some point, but there's a whole nother financial system that's built on top of ETH. That's what DeFi refers to.
Yeah, that's the way that I think of it, is really an alternative financial system, right? It stands for decentralized finance. And it's many of the same or similar financial services that we're used to in the traditional sense, but without the traditional intermediaries or the companies, the centralized entities that sit in between and facilitate the transactions. Instead, the transactions and the services are facilitated by smart contracts or by code, and everything is settled on a blockchain. With this technology, you do not need to rely on third parties to facilitate these traditional financial services. I don't know how else to kind of put it, but it's decentralized in that sense. So hopefully that helps out. If anybody has any more questions, please pop them in the chat. But looking at some of the ETH treasury companies, obviously the ability for these entities to raise capital, then go out and buy ETH, has been very supportive of ETH prices here. You at times get short liquidations. You get this kind of FOMO bid that materializes, and you get a little bit of momentum behind the price action, which is certainly what we're seeing here today. Sticking with DeFi, though, Dan, I do want to bounce to this slide here and just show this is total value locked. So when we talk about not so much staking, but talk about locking capital, depositing capital in decentralized finance protocols. Uniswap is a big one, Aave, Compound, many others. This is representative of how much capital is in these different protocols on ETH in aggregate. And you can see that we're not quite at those all-time highs that we reached back in 2021, but we're getting there. I do believe that we'll surpass it at some point. But 92 billion in capital is participating on Ethereum alone, which is the biggest when we think about what's happening in DeFi. And then you have other Ethereum L2s, Base, Arbitrum, a few $1 billion of TVL there. You have TVL or total value locked. You have capital that's locked on Solana and other chains. So in total, your TVL and DeFi across all blockchain networks is much more than 92 billion, but I believe that ETH is the single largest chain that's securing this capital for these services.
Right.
Right. Providing real value. There's real revenue in that sense. You swap a token on Uniswap, you're going to pay a gas fee to the network. You're going to pay a small fee to the protocol, but you're not paying that fee to a single company like let's say a tastytrade when you trade an option.
Yeah, it's peer to it's almost like peer to peer. You're paying it to other participants in that network.
Yes.
So yeah, I mean, I think that trend is pretty exciting too. I think we'll greatly surpass the 2022 high for total value locked capital on chain on Ethereum, and we're really only. We're really only like 6 years into this. Like 2019 is really when DeFi became something common, I guess. Was all kind of being built before then. So I think that trend is pretty positive.
Yeah, absolutely. This is what you want to see. You want to see an increase in participation. You want to see an increase in TVL here. It's not going to go straight up, but the trend is up and to the right. You want to see growth in stablecoin market cap on these chains. That's another sign of pretty robust participation in DeFi, which is also going to be reflected here in the TVL, as we can see. You want to see an increase in transactions, volume, volatility. I think all of these boxes you can check for the most part. And there's for now, a pretty supportive bid in ETH. Institutions have taken notice. I think liquidity on the margin, as we've talked about many times in the show, has been ample and is driving asset prices higher. We can look at really quickly the correlations. Pretty strong positive correlation between Bitcoin and the NASDAQ recently. These don't jump off the page though, but generally speaking, equities are at all-time high. The broader kind of macro backdrop is supportive. You've got crypto at all-time highs, and I think you have a little bit of time left in this cycle, right? There's nothing on the horizon that is signaling we're going to see a slowdown one way or the other. Likely in an environment where you have a little bit of a move higher in growth and inflation in the short term, which is really what you want to see is supportive of assets. I mean, we come out of earnings, pretty decent earnings in terms of EPS growth. So from where I sit, I mean, it looks like an environment in which I still want to buy dips. We've got to be prepared for probably more volatility at some point. When we do look at Bitcoin IV ranks, they're still very low. ETH has picked up a little bit, which is, again, another box I want to check around the volume and the price action. Is volatility expanding into this move when we know there tends to be somewhat of a positive correlation at times between the underlying implied volatility of ETH or Bitcoin and its price action, which is quite opposite from what we see in equities. And this is what you're seeing. Still a little bit of premium in there when we look at IV for ETH. And you now have an upside to your 1 week, one standard deviation move of almost 46.50. Downside of 38.28.
That's looking good.
It is looking good. It's feeling good. It's looking good. Is there a price at which you would take a little bit off the table? I know you've been in some of these trades for a while. You have a number in mind?
Yeah, I mean, I'm probably looking to take a small percentage of my Ethereum holdings off the table, above 5K, probably between 5 and 6K, just because, it won't go up in a straight line. I'm not gonna completely sideline myself and go out of cash, but I think I think when these tokens hit all-time highs, you want to take a little bit off.
Yeah.
That's been my rule. I've kind of learned that. It's just a simple kind of rule to follow. Hey, it hits an all-time high, just take a little off. That's kind of where my mind goes. So I think that would be, above 5K for me for ETH. So I think we just have more room to run here. I think we're just kind of getting started with this rotation to ETH, rotation to altcoins. And yeah, I mean, everything seems to be looking good. Obviously, there's always going to be like down days and chop, and this market isn't that big, so things tend to unravel quickly and then bounce back. So it makes it a fun trading asset. But yeah, I'm looking forward to seeing it above 5K.
Yeah, I think we get there as well. But to your point, you're going to get some chop. You're going to see wider ranges here as certainly the spot price moves higher or is at a higher level or value, and you have more volatility that comes into the market, right? So now we're looking at expected moves of $400 versus $250 if we go back a couple of months or so. And within a one standard deviation in terms of that implied vol on a 1 week basis, you do have a $3,800 downside move that you could see, right? It's not guaranteed. These are just simply, one standard deviation moves, and they're going to change as the spot price and volatility changes. But it does imply 3,800 to call it 4,600, 4,700. So you could see some stops run on longs that kind of got pulled into the market on a $4,000 break there. So if you get back to 3,800, personally, that's where I would look to to buy a little bit more. But I think also, there's nothing wrong with taking a little bit off the table. If you've been in this, especially since we've been talking about it at 1,500, at 2,000, talking about that broader range in here of realized price action being 2,000 to 4,000, well, you're towards the top of that range. I do think that you get the break. A couple other things that I'm focused on really quickly, Dan, before we wrap up. When we look at relative performance, this is absolutely what you want to see. And a couple more of those boxes to check to just try to get an understanding of where are we at this stage. And here's what we're starting to see. That Bitcoin market cap dominance is starting to pick up a little bit of downside momentum. Certainly here on the ETH move, we're going to keep an eye on Solana versus Bitcoin too. Don't sleep on Solana. It feels like it's been dead, kind of stuck at that 170-ish level. But I think this is one that could also catch a bid very quickly. At some point. It's probably not a matter of if, but when. ETH BTC, this is trading pretty well. I've got to assume you see some consolidation at some point, but this is what you want to see in terms of ETH BTC price momentum, Bitcoin market cap dominance breaking down a little bit, Solana catching a bid versus Bitcoin, and then if I have to kind of weigh out how do I want to think about Solana or ETH and an allocation there. Well, Solana's trading pretty poorly right now against ETH. So I think you stick with what's working there with ETH. I think you will see those big Bitcoin catch-up days too here. But that trend that we've been in for really 3 years of just very poor ETH BTC performance, ETH relative underperformance, significant underperformance versus Bitcoin, you're seeing the other side of that now. And I think you've got some room to run, right? We're at spot 0.358. Can you get to 0.04, 0.05, 500ths of a BTC? You're going to be well above that all-time high.
Yeah.
Prior all-time high, new all-time highs.
Yes,
is where you'll be. So
that's where I'll be looking. That's where I'm looking for. Is just new all-time highs.
Yeah, it's exciting. Again, per usual in crypto, seeing a lot of activity on chain, as you mentioned earlier in the show. Big inflows into some of the ETFs. We want to see that continue. So we'll keep an eye on all of this. But yeah, it still is and has been for some time a market in which you want to buy the dip. When that changes, we'll let you know. But the trend is your friend, I suppose, as lame as it is to say. Stick with what's working here.
Yeah, for sure.
Cool. Well, that's going to do it for our show, Dan. As always, thanks for coming on. Thanks for doing double duty on the network. Spreading the good crypto word.
Oh yeah.
Today on the show, we will be back on Wednesday. But until then, I'm Ryan.
I'm Dan.
Peace.
A very good morning to you. Welcome to Trade Live with IG. Back to the OG.
Back to the OG, old school
ONG.
retro, the OG, the AIG. You came up with a new one last week.
AI Angeline.
Good morning, everyone. Funky Gibbon. Good morning to you. Fat Fingers here again. Jugga. Guten Morgen. Maturin. How is that move going? Maturin's looking for a new place.
Oh, really?
Yeah.
I'll take the old one. Right, what's coming up on today's show? Let's go right into it.
Right, we got overnight action with myself, old school, and Rich McDonald, of course, and the opening bell too. And then we're going to drive you through all the key movers in fast markets.
And then I have Will Nutting coming in. You remember, Will's been in before. He, of course, runs Nut Stuff, so a portfolio and newsletter. So going to be catching up with Will Nutting there, talking about a lot of things, but Crocs is on the menu.
Crocs?
Crocs.
As in, haven't they been banned in the UK in schools or something for causing too many accidents?
I didn't know that.
Well, we've got John Mayer on Commodity Corner with myself at 9:10, and we'll be talking all things Glencoe. And thank you very much, Trader friends, for sending your questions in.